of Infosys, but clearly today is not the day that market will take it with a pinch of salt, right?
See, Nisha, growth is a challenge, and I don't see any evidence that real growth, and I'm talking about revenue growth, which is making a comeback. Now, you may have a large order book, but if that order book is not translating into any kind of a real deal, that just makes me wonder that, okay, clients are committing, but if they are not really telling you to start executing, then you do have a situation. And, this large order book, large deal wins, I think that is almost like a 2-year story. And 2 years is a long time for some of these deals really to start translating into. So you know my views on IT. I think that whether it is AI or whether it is the seasonality effect, I think for IT, I think we do have a tough trek, so to speak. And similarly, so that's the absolute picture. That growth, I think, is still a distance away, where you can say that, okay, here's a sector where I can see at least 8 to 10% kind of invisibility. Second, you look at the relative comparison, TCS versus Infosys on all parameters. I think TCS is like a cut above, whether it is margin, whether it is confidence, whether it is translation, and whether it is the commitment towards and a clear indication that FY25 will be better from FY24. I think that spark in the Infosys numbers was missing. And third, if you look at the market per se, Anisha, I mean, there is no compulsion for anybody to buy IT, because there are a lot of companies and a lot of large cap companies where you are getting a promise of at least 10% growth, and where valuations are not really that stretched. I mean, we have a long list of companies where growth is 8 to 10% or even 10 to 12%, and P multiples are not really out of whack. So why should one buy IT? Just because you want to be contra? Why should you buy IT? Just because these are great businesses? But these businesses are slowing down, and I don't see any evidence that there is light at the end of the tunnel. So buybacks and great cash on the book, that's all great. But if business is not growing, whether it is for IT services or whether it is for the IT sector in general, you got to ask yourself that, is it really worth betting on the sector in the near term? That's my limited point.
That continues to remain the big question that we will be addressing as well later on the show. But yes, brokerages like UBS as well have said that the FY25 guidance is disappointing. Tell you what, we'll slip into a very quick break right here on the show. The Gift Nifty implied open is suggesting a downtick of 340 odd points. It's a nervous globe. We'll come right back with more market talk.
in association with Volta Smart Air AC, शोर कम काम ज़्यादा.
In association with State Bank of India, the banker to every Indian.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
शीर्षासन कहते हैं इसे।
पापा स्ट्रेस कम कर रहे हैं, घर नहीं बिक रहा ना।
बाहर से नहीं मिल रहा।
घर बेचना है तो मैजिक ब्रिक्स पे आइए। यहाँ पे हजारों सेलर्स रोज मिलते हैं लाखों बायर्स से,
ताकि प्रॉपर्टी जल्दी बिके और बेटर प्राइस मिले।
अब आप सीधे हो जाइए।
सर 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 आप इतने कलरफुल हो, बट हाउ कैन कलरफुल बी पावरफुल?
फॉलो मी। धूल हो या मिट्टी, इससे नहीं जीत पाएगी। ड्यूलक्स वेदरशील्ड पावरफ्लेक्स।
इसका हर रंग लड़े धूप, धूल और बारिश से।
इट्स कलरफुल, इट्स पावरफुल।
ताव में चलेंगे अपने ताव में। गली हो बगल की या मीलों दूर के गांव में, बेधड़क बेझिझक चलेंगे अपने ताव में।
बड़ा दोस्त हो राहों में तो चलो अपने ताव में।
Welcome back. Still tuned into the market. Let's connect with Sanjiv Bhasin as well, who's joining us on the show. And Sanjiv, just going by the kind of news flow that we're getting with respect to these explosions, reports of explosions in Iran, while no concrete confirmations have come about to the extent of this, how do you, read into this news flow, into how investors should really be approaching the markets?
Yeah, good morning. So, Awan, generally, we have had an excellent bull market run, and there was a much needed correction. This has actually added fuel to the fire. And I think, historically, or since my experience, whenever the first bullets are fired, generally markets bottom out. So I think it may have been more rhetoric and more of market experiencing some correction paranoia. But I would say that we should be marking the bottom of this by maybe Monday or Tuesday. Whatever has to happen will happen over the weekend. And if there was no follow through, it was all more of rhetoric. Then I think better sense will prevail rather than this getting out of hand, and it will mark the end of this much needed correction, which will weed out the men from the boys. Generally, such opportunities come in once in many months. And those are the time where you should actually be deploying some cash to good use.
Okay, so tell us how you would be looking to deploy that.
So like I said, select stocks are giving you very good entry points, which have been outperformers, largely the PSUs, defense stocks, some of the, ONGCs of the world, ONGC, Vedanta, India Bull Real Estate. These continue to be my top picks. Today, I would look to buy IDFC First Bank. I think that is looking very, very good at the mid-cap banks. With essence here now that mid-cap banks' earnings will be far ahead of the estimates. You could look at Hindustan Lever, which again I think is very good proxy to rising rural incomes and expenses over there. And last but not least, I think some of the large cap banks, Axis, ICICI, are giving you a very good entry point. And if the fear today could be near to the bottoming out of the near-term correction, then you would find yourself in a sweet spot once this, geopolitical risk subsides by hopefully next week.
That geopolitical risk subsides or not for now, Mr. Bhasin. But what's your view on Infosys? And I was just doing that comparative between Infosys and TCS, and we should pull up those graphics as well. How TCS has actually managed to outperform with a 1.1% constant currency growth this quarter versus a 2.2% decline coming in from Infosys. Margin situation is also very stark. While TCS reported a 100 basis point improvement, Infosys reported a decline of 40 basis point. And of course, the difference in stock price is also quite visible with a very weak guidance coming in from Infosys now. What should one do with the IT pack and specifically Infosys? Should one throw the towel and just move on to TCS and better names?
Yeah, good morning, Anisha. I think the market had a premonition that Infosys numbers are going to be like that. I mean, from 1650, the stock was closer to 1400. And I thought that, even I was surprised at the steady downturn. Now, comparative to a TCS, we've always had this comparison where Infosys has given those, one-offs in some certain quarters. But like I said, I think the growth parameter on all accounts is missing. I would rather be more optimistic on, of course, TCS, but Wipro, which has been a star outperformer, given that they have changed their, business model, they've done some inorganic buyouts, which has aided the bottom line on the top line both. And I think Wipro could be the star for large caps over here. I also like LTIM on the in the mid-cap space after the recent correction. I think LTIM numbers, which are due on 24th, will be far excess of what the street is making out. A change in the management or the top rung is not good enough reason for the stock to correct more than 20%. I think LTIM and Wipro would be two of my preferred pick, along with HCL Tech and TCS.
Enough. UBS's view, at least when it comes to Infi, is that there is limited downside from here on because the market was already positioned for a disappointment, but one will have to just wait and watch. What about Bajaj Auto, given the kind of performance that it delivered? Do you think that this merits some sort of a leg up?
Well, Aman, Bajaj Auto has been the star. And, if you recall, about 2 years back, there was a buyback at 3,500 when the street was making out too much of pessimism. But I think Rajiv Bajaj has been the star, and I think he has delivered on all fronts. And he has been vocal about it. The launch of the EV scooter, the conversion of, the scooter into the EV side, and the export market is going lock, stock and barrel. If you own it, just stay with it and look for any declines to buy, because I think they are just at the beginning of a cycle. Plus, the margins have been very, very strong. I mean, they are almost double of what Hero or others report, And even though, like I said, a large part of the positives are in the price, but I don't think this is going to correct much. And I think this will continue to be the top leader in the two-wheeler auto pack. As a disclosure, this and Hero are two of our top picks, and Maruti on the four-wheeler side, along with M&M. So I think autos are still in for some more upside. And we think that if you are in a good basket, then Bajaj has to be one part of that.
So Hero, Bajaj Auto, M&M, Maruti, these are the top recommendations coming in from the four-wheeler basket and the two-wheeler basket. But Kunal, what's the view on the banking giants? Yesterday it was a very weak show across the board. ICICI, Axis, they were all coming under pressure. Today, of course, Axis Bank is also going to be in focus because we understand that it's going to fundraise via multiple securities as of April 24th. But other than that, what does the chart check suggest on these large private banking names?
They're still showing signs of weakness and underperformance. In fact, in the last 4 or 5 days of this selling for the markets and the indices, the banking and the financial ones are the ones which have shown very incremental amount of underperformance. So you have, for example, you had ICICI Bank, which is on the verge of a breakout about that 1120 plus mark, and all of a sudden the last 3 days of sell-off, the stock is now confirming a breakdown below its previous support of 1070. Same is the case with HDFC Bank, where the stock was at point where the stock was in line of breaking past above its 200-day moving average above the 1550 levels, and now the stock is struggling to even break past above the 1500 mark, trading below those levels. So that itself indicates that large cap private sector banking names, even the more better ones, relatively better ones, which had shown signs of some recovery in the last 1 month or so, even these stocks have been struggling to break past about their resistances with a lot of ease. And I think that's one of the bigger concerns. And that's why in this kind of a scenario, when you see the larger cap private sector banking stocks which have shown recovery underperforming, even the weaker ones would probably show signs of underperformance further. So I think I would probably expect the likes of Axis Bank, Hindustan Bank, etc. I think they would probably also continue to drag. So I think we are now into a phase where the banking and the financial names could continue to drag unless you see these large cap formidable names trying to get into a breakout mode.
Okay, and Sanjeev, next week you've got RIL coming out with the quarterly numbers. What are you bracing yourself for?
So, Avan, sum of parts, I think all their businesses are doing excellent. The OTC business is a cash productive. I think their ARPUs are going to come very strong as far as Jio goes. Retail business is firing on all guns. So is the energy business. And I think refining margins may turn out to be at the highest, So all in all, I think Reliance will come out with maybe arguably the best numbers ever. But a large part of that is already in the price closer to 3,000. Now, Reliance has been the biggest bellwether which has taken the place of HDFC Bank and which has spearheaded you. I would look more closely on the over the weekend on HDFC numbers, HDFC Bank numbers. And if they can deliver, then I think the worst for the market may be done with. Because if they are going to be two pillars, then it has to be, Reliance and HDFC. Which can pull us out of this correction. So I would be more keen on the HDFC numbers over the weekend. They will be the key because HDFC Bank has been a huge underperformer, and it has also played out on the Bank Nifty. I would be more keen on that, but I think Reliance will be as steady as ever.
Reliance will be as steady as ever. Thanks, Mr. Bhasin, for joining us this morning. And looks like the GIFT Nifty cut has actually narrowed a bit. And I say that because at one point of time, it was suggesting that we might open with a cut of over 380 points. Right now, it's narrowed to 266. Not a pretty picture by any yardstick, but nonetheless, at least some bit of recovery. Sandeep Sabharwal also joins us on the show. Sandeep, what would you recommend investors do today? The headlines are not looking good, but India has at least historically managed to insulate itself to a large extent.
Yes, I think it's a evolving situation in the Middle East, and it's not. I don't think people should correlate this with the usual incidents or the warlike situations which happen, where one side is so much more powerful than the other that the retaliation effectively doesn't happen, and it plays out that way. So I think we are still not very clear on what's exactly happening. And although many will try to call a bottom today that you buy on a 300-point dip, etc., I think the markets have, even after a 300-point dip, markets will be off just 5-6% from the top. So it's not that we would have had a huge correction which presents the market as a value buy. I would still like to be cautious, wait and watch.
Sandeep, let's just erase the morning headline. And if I take the clock back to Thursday or even Tuesday or Wednesday, markets were falling independently of the geopolitical situation. They are falling because interest rate trajectory has changed. They are falling because Fed now seems to be talking about inflation coming back. So do you think irrespective of when and how the geopolitical settles down, the fabric of the market is still looking weak?
The fabric is weak because the assumptions which went into the current market valuations are getting challenged now, like you rightly said. Now, it was my view also that these rate cuts are not going to come as fast as what people were expecting. So I think people were just going by Fed speak. So central banks have a tendency to change their views very fast. And almost every meeting you go back and see the commentary of central banks, they change. We have to evaluate the macros ourselves, and the macros don't indicate a weakening of the inflationary trajectory anytime soon. It might happen eventually, but not right now. You look at how global commodities have rallied. You looked at various other factors, employment picture, asset prices, etc. So it'll take some time. Valuations will adjust. But that does not mean the bull phase will get over unless until the situation in the Middle East goes totally out of hand. And to that extent, we would like to buy on a reasonable dip, but we have to let the reasonable dip play out.
What is the definition of a reasonable dip, purely in terms of percentage or purely in terms of a Nifty level?
I think first level where I would like to start buying more aggressively will be more near 21,000 of the Nifty. And if by chance it falls further to around more near between 20,000 to 20,500, then I would like to be fully deployed at that stage.
You know, you and me have always argued and debated which way IT is going to move. Every time I come back from TCS numbers, there is a hope I come back with that, okay, worst is behind. Every time I see Infosys numbers, that hope dashes away. It's quite confusing, at least looking at what we've heard from TCS and what we've got from Infosys.
Nikunj, what I'll say is that I have studied AI a lot, like to the best of my capabilities, I've been studying about it. And I think that's the biggest factor which is leading to the delays in most of the projects, even if when these companies are winning the projects, because the entire AI evolution is so rapid, so fast that companies or institutions themselves don't know what they should be investing in. So they don't want to invest in something which becomes totally useless a year later, and they spend billions on that. And I think that's leading to that, along with the general uncertainty, is leading to the delays which most analysts are unable to fathom. And that could continue for some time. So the order wins of the IT companies are very intriguing, that you win so much, but then there's no execution. So that's why I always say don't focus so much on the order wins of these companies. Focus more on macros, what they're actually doing on hiring. And their hiring has been continuously coming down, head counts have been coming down, etc. So that shows that they're not very confident about the near term. So I don't think the bottom is done per se. Stock prices will bottom before the fundamental bottom happens, and we have to see when that happens. I don't see it happening. I don't see it happening today.
While most of the sectors were under pressure, pretty much all barring media and trade yesterday, PSEs were the worst hit. Naresh, you track these companies quite closely. What's the outlook on the likes of Coal India, ONGC, IRCTC, etc., which fell flat on their face yesterday?
So overall, the structure still remains positive for a lot of these names. So if you look at an ONGC, it actually made a new 52-week high just a day before this. There were large volumes. So the last bottom for the stock is around 255, 260, which is where you want to look at an entry point. Same way, IRCTC came very close to a fresh breakout and tested those levels which were made last in January around this 1050 mark. Did not see a further follow-up. It has a base around 850, 900. So a lot of these PSUs, around a 10 to 15% correction from the top could look interesting. As of now, they've corrected 3% from the top. Coal India, the base is around 400 odd levels, which has been for the last 3 months. And the last breakout point, yesterday the stock closed at 430.35. So I would wait out for a further correction for a buying opportunity, but the structure still remains positive for a lot of these names. So out here, wait for a dip.
That's the word coming in, but for what it's worth, at least metal names have managed to outperform themselves given the strength that we have seen in the global commodity prices. Copper, of course, has been doing very well. I think 22-month high is sitting at right now, and the other commodities too, seeing quite a bit of spike. Kunal, what's your view on a few of these commodity names? Any metal names that you would recommend a buy on in today's dip?
Not really. I think, because the market gets into a risk-off mode, it's very much possible that these high beta sectors would also get into a corrective phase. Now, I think, that's where mark-to-market adjustment also tends to happen, because, when you have certain set of, portfolios going to a risk-off mode, the sectors which have been doing exceptionally well, they're the ones where traders try to trim profits and then go into a bit of a profit booking spree if there is any kind of a minor bounce at play into these sectors. So I would believe that that's going to be a case for these metal stocks, and that could probably act as a resistance or a hurdle for these names. Unless these stocks correct very sharply or come back into their key short-term support zones, which I think is some distance away for these metal names. So I think one should not be in a hurry to just buy these stocks at a minor dip. Unless it's a sizable dip, I think one should not venture out.
Meantime, Sandeep, what's the expectation from HDFC Bank?
So HDFC Bank, it will be interesting to see what happens when credit growth gets suppressed so much and deposit growth increases so rapidly. Now, have they done anything on the operational cost front which can actually reduce the impact of this phenomena is something we'll need to see. I think analyst expectations are still very high in terms of what they think HDFC Bank can deliver. I think the NIM compression could be sharper than what most analysts are expecting. So I think that's an adjustment which is still going on. I think I would think that there's one more year for the entire adjustment in the HDFC balance sheet to play out.
Let's see what actually HDFC Bank delivers. But for now, of course, the market is expecting that it's going to be a steady set. At least the operational data that we had got for Q4 looked quite strong for the company. But real estate as a pack, Sandeep, has been doing quite well as well. What's your view there? Whether it is commercial real estate, residential, any top bets within that space?
Not really. In fact, I would say that people should be cautious on this sector right now because whatever is happening on the launches of projects, the kind of pre-sales these companies have been reporting, the euphoria that's built in, price hikes, all these are indications of some sort of the start of a bubble build-up or a bubble already built up. So, and if interest rates are not going to decline and liquidity is going to remain tight, I think at some stage we'll see this ebb off. And most of the stock valuations don't really factor this in. So I would think that people should be cautious, especially of this sector at this stage.
All right. Some of the other stocks as well that are on the brokerage radar include a TVS Motor. You've got Citi that maintains a sell on the stock, hiking the target price to about 1450 from 1400. They believe that the Q4 earnings could be a bit weak and valuations provide little margin of error. So we'll be watching out for that stock as well in today's trade. And HDFC Life is on Macquarie's radar. They've got a neutral stance on the stock, and they believe that the protection margins for the industry are lower than the global peers. Just wanted to get in your take then, Sandeep, as to what the outlook is on an HDFC Life in the auto space, TVS Motor.
So TVS valuations are high for sure. The company's been doing well, and to that extent, I would agree that purely on valuations, TVS is not a buy at this stage. Life insurance companies have been disappointing over the years. It was expected to be a sector which will grow rapidly. The value creation will be rapid, but I think HDFC Life results disappointed on each and every parameter, and to that extent, that again limits upside in the stock.
Okay, so it's been a sector which has actually managed to underperform and disappoint a bit, and today's a day which is going to be a lot more disappointing that bulls would have wanted for. But for what it is worth, the implied open is now down about 262 points versus that 380 point cut that it was initially suggesting. So a bit of a semblance of is what we have seen. But let's see where we go from here on, because for now the global markets continue to be in a bit of a turmoil. If you look at the Asian markets right now, a bit of a recovery, but Japan is still down almost 3%. Kospi is down 2.6%, and the US pre-market suggests that the Dow is down to 350 points versus the 500 point which we had seen earlier. But let's talk about gold as well, Kunal. You're very bullish on this commodity. It's already hit that 2400 mark. Where do we go from here on? Is there further a rally which one can anticipate on gold, especially in wake of all of these headlines?
So I don't expect a major rally like what we've seen over the last 2-3 months for gold prices. I think 75,000 on the rupee terms and around 2450 to 2500 odd, I think should be a strong resistance point for now this asset class. Now it also now depends on how the global trends shape up. If there is a severe kind of a risk of which say all of a sudden happens because of the geopolitical factors or what's happening across the US in terms of the interest rates, inflation scenario, etc., then we may probably expect one more rise or maybe a rally in terms of gold prices. But then my expectation is that the major part of the rally for gold prices, at least over the last few months, I think that is now shaped up. There could be maybe a final or terminal wave which could probably creep into this asset class. But then building up fresh positions over here, I would probably not believe that's going to be a good strategy. Wait out for a point when there is a say 2,000-3,000 point or dip in terms of rupee prices for gold. I think that could be a better point to try and buy or average out for someone who's looking to buy or average this asset class.
Important updates at the bottom of the screen, and I think that partly explains the kind of recovery that we are seeing. Iran officials have said that there was no missile attack on Iran. It was only perhaps the explosion which was heard was a result of the activation of Iran's air defense system. So there was no, retaliatory attack that happened, because earlier reports had indicated that Israeli missiles have hit parts of Iran, but that seems to be not true, because they're saying it was only the activation of their own defense system. There has been no missile hit that has happened as of now in Iran. So that's at least some respite coming in. We'll see. It's a developing story. We are getting the live, updates as we go. But for now, there is a bit of a, positive news there. But separately, in terms of the other details for the markets, the pre-open rates will trickle in right now, and the gift Nifty is probably going to suggest that we are going to open with a cut of around 250 to 300 points. The big question is, of course, where do we go from there? Because the heavyweights, which is the banking index, that has been underperforming by a huge margin. The other set which was doing well was the public sector entities, but that too has come under a bit of pressure. Naresh, let me quickly take it to you. If we do see that dip of almost 200, 300 points, where do you think will be that support level from where the buying will emerge?
So 21,700 is the last swing low. That remains an important price point. So closer to 21,700 is where I would be watching out if we can see a reversal. But overall, after a gap down on a news, we would wait it out, not venture as of now, because we are not already a lot down from the previous highs. Unlike where in Russia, Ukraine, we are already down 5-7% when the announcement came.
Okay, that's the view coming in. Meantime, newsmakers like ITC, etc. will be in the spotlight, GMR Infra as well, with respect to the monthly traffic data. Just curious to get in your take, Sandeep, as to what the outlook is when it comes to the entire FMCG sector with the rural slowdown, results season. Where is it that you're finding comfort within FMCG?
FMCG could be one of the more interesting sectors as a contrarian bet, because stocks have underperformed for years. There is expectation of a very strong monsoon from all weather forecasters all over the world. And we have had very low volume growth for several quarters now. So I think a revival is imminent in the FMCG segment. And to that extent, some stocks could be considered as the correction plays out. So I think Dabur looks interesting. Even HUL is at a multi-year low or near a multi-year low. I think at same levels where it was 6-7 years back. Some of the other companies which have been doing well in the stock markets, Godrej Consumer, Tata Consumer, they can be considered on dips, but right now their valuations look a bit stretched relative to the entire FMCG segment.
Sandeep, on that note, we let you go. So a good, counter bet could be perhaps FMCG and select names at that. Let's see whether that rural recovery does play out or not. But let's take the mid-cap bets for what it is worth. Kunal, do you spot any mid-cap names that might outperform today?
Well, there could be a few of them. One of them actually did yesterday, which is PVR Inox. That stock relatively was, shielded in terms of the market volatility yesterday after the 300, 350 point odd correction intraday on the Nifty. So I think in that aspect, I would probably expect that if the markets stabilize, say after the first half an hour, first 1 hour of adjustment, then this could probably be a stock which can maybe come back towards a breakout point. So would suggest a buy on PVR Inox, targets of 1480, stop us at 1400.
Okay, so positive on PVR Inox. Let's see whether it manages to hold in the green today or not. What about you, Naresh?
That would be a buy on Crompton Consumer. The stock has been showing relative strength for the last few sessions, and the whole sector has done really well. This is a stock which has started reversing from the bottom. So stop loss at 280, target price of 320.
Consumer, watching out for that one. But let's bring you the news fatafat with all the national and international updates. First up, voting has begun for phase 1 of the Lok Sabha elections. 102 constituencies across 21 states and union territories make this the largest phase of the 7-phase election. Arunachal and Tirupura are voting for the assemblies as well. The big focus is on Tamil Nadu as all 39 Lok Sabha seats are going to the polls today. Top leaders like Congress's P. Chidambaram, RSS chief Mohan Bhagwat, BJP's candidate Annamalai and many more were seen casting their vote early morning. Prime Minister Narendra Modi made an appeal to voters asking them to come out in huge numbers and exercise their vote duty as well as the right. And in the global earnings front, video streaming giant Netflix reported a stellar Q1 earnings and added 9 million plus subscribers in the quarter gone by. Although they gave a disappointing second quarter revenue guidance, which dragged the stock more than 3% lower in the after-hours trading. Notably, the company said that they will stop reporting quarterly membership numbers starting next year, along with the average revenue per member. Global tech giant Google has terminated 28 employees who had participated in a sit-down protest against company's $1.2 billion agreement with Israel. The dismissals followed a series of events in which employees marched to the office of Google's top cloud executive in California, while others held sit-ins in Google's New York City headquarters. NASA chief has flagged China's military presence in space and said that Beijing was using its civilian space programs to hide military objectives. Now, while informing about the threat, the NASA chief also cautioned Washington to stay vigilant. Nelson made these remarks while giving testimony before the House Appropriations Committee regarding NASA's budget for the year 2025. Well, a fake Bond movie trailer starring the former Witcher star has been racking up millions of views on YouTube despite being a total fake. The Bond 26 trailer introduces Henry Cavill as the new Bond using a mix of footage from other movies and artificial intelligence. The trailer also ambitiously casts Margot Robbie as a Bond girl. So far, the wannabe trailer has generated more than 2.3 million views coming in. Okay, so that was all the cover from across the globe. But what's the cover on Dalal Street? That's something Sharad is joining us to tell us more about. Hi Sharad, good morning.
Well, yes, the cover on the street is that Torrent Power is getting significant inquiries coming in the LNG segment, and these are the tie-ups coming in, and this is coming on the back of announcement coming from the government on invoking the important sections of the gas-based power plants and also capping its earnings. Now, interestingly, there has been an increase in the inquiries for these LNG tie-ups, especially the company is expected to sign a couple of power purchase agreements as well. It's not known what would be the duration of these agreements, but importantly, the company would be using its 1.5 gigawatt of merchant gas-based capacity as well, and it's expected, because of the extended summer, it's expected that more power would be supplied from these plants, and this could be providing a selling opportunity for the company as well. Also, as per Channel 6, the recent capping which was announced by the gas-based stations by the government itself, that has actually reduced what's estimated to be almost a 30 to 40% dip when it comes to their operational profits being realized from these merchant gas-based power plants. So there's an interesting development coming for Torrent Power.
Okay, we'll watch out for Torrent Power. Let's pull up the Nifty pre-market rates because they're looking much better than what was feared. So we're still looking at a handle of almost 21,900. Yes, it's a 100-point cut, but it's just 0.5% cut on the Nifty right now, at least in the pre-open. It's not as bad that 300 or actually 380-point cut that the street was actually bracing itself for. And with respect to what's happening across the globe in terms of the Asian markets tumbling anywhere between 1.5% to 3.5%, this fares a lot better. Of course, these are pre-open rates as of now, and we'll wait by to see where it settles, but it's not looking as bad as we were fearing because, of course, the latest updates coming in on the conflict also have turned positive, that there was no missile attack. It was only the anti-defense system which caused a bit of an explosion, but no missile attack as of now is what reports are suggesting. We'll wait by to get more on this developing story, but let's take it across to Ashesha to talk to us about the big brokerage call this morning. Hi, Ashesha.
Well, yes, we put the spotlight on TVS Motor this morning, and that is because Citi has opened a 90-day negative catalyst watch on this counter. They are maintaining their sell stance on the stock. They've marginally hiked their target price to 1450 from their earlier target price of 1400, which is well below the current market price of about 1950 odd levels. They believe fourth quarter results could be on the weaker side. Intensifying competition in the electric two-wheeler segment is what makes them bearish on this counter, and they also expect a lower operating leverage to impact fourth quarter results, and they believe valuations provide little margin of error. So they've opened a 90-day negative catalyst watch on this counter with a revised target price of 1450. The stock in focus on the back of the Citi report.
We'll watch out for how the stock is going to react today, because today, of course, a lot of these stocks will, as it is, be under pressure, but that's the word coming in. Let's take it across and listen into editor's take and how you should deal with the market right now in context with all the headlines that we are getting.
I guess markets were due for a correction at a global level, and the problem is more global in nature, it is not local in nature. I don't think you've reached a point where you would say that, okay, this is the local problem and Indian markets are correcting because of this local problem. It's very global in nature, whether it is crude, interest rate curve, how yields are spiking up, or which way things essentially are moving on the geopolitical front. So if the tailwind, if the headwind is global, the solution really has to come from the global market, which is that, okay, you know, the geopolitics, it starts stabilizing. Markets show a very mature reaction, and within 3-4 days from a financial market standpoint, you know, things just stabilize. Crude does not spike. Other interest rate instruments, they don't spike. That also would be a good sign that also could be a good indication that, okay, things are stabilizing. See, the initial reaction to the Ukraine-Russia war was nothing short of scary, but markets have learned to live with it. I mean, it's not that the war between Russia and Ukraine has got sorted out, but from a market standpoint, it has really gone on the back burner. So wait for that time. I mean, I don't think anybody wants a war. You never say with geopolitics, but you know, the situation is such that nobody wants a war, and nobody can afford a war right now. So this news, eventually, if it does not have a large impact on the financial market in a week or 10 days or 15 days, it will just settle down. Where you need to be a bit watchful, or where you need to be just, keep your eyes open, is that in this fall, if you're getting some stocks which are unnecessarily getting battered down, maybe something in the small cap space, maybe something in the large cap space, where stocks are falling because of the sentiment and because of liquidity. That's the time you want to be a buyer. For example, if defense stocks, they fall a lot in this fall, you should buy them. For example, if some of the auto stocks, if they fall a lot, you should be buying them. What if some of the EMS stocks, they fall 10-15% from it, you should be buying them. So you need to have what really could be called as a smart, watchful strategy. Wait for your entry points in this market fall, which is not looking very scary to me as of now, but I guess some imbalances will get created, and that's the time you really want to be treasure hunting.
Okay, we are looking at the market open in 4 minutes, but before that, just wanted to mark what's happening in the money market as well, because the rupee has hit a fresh record low right now. 83.55 is the level which rupee has managed to hit. There is a bit of reaction on the 10-year as well. It's at the highest level that we have seen since January 8th, because the 10-year in India has actually managed to surge past the level of 7.195. So a bit of a weakness coming in for the rupee, as well as the 10-year rate, of course, reacting to the kind of geopolitical tension. So a bit of a spike coming in there. But in terms of the pre-open rates, just marking how the stock markets are likely to open. So Nifty is not looking as bad as we were worried earlier, as I pointed out, close to that 21,900 mark. But in terms of the individual movers, Infosys is expected to open lower. Again, it's not as bad as the street feared. It's just a cut of around 2.5% on Infosys, given the fact there was a big disappointment on earnings as well as guidance. Reliance also is expected to start with a bit of a cut. HDFC Bank, ahead of its earnings on Saturday, is also expected to be on the back foot. What might hold out today is clearly Bajaj Auto. That's expected to open in the green. And I'm also watching out for some of the other pre-open rates. It seems like DMart could be one of the stocks which opens with a gain of around 3%, Bharti Airtel with a gain of 1%, ONGC, Dr. Reddy's. These might be some pockets of outperformers, while Schneider, Spark, Adani Power, IOC, these might be the stocks which might open in the red. But for now, of course, all eyes on the frontline index itself, because that is where the market is going to watch out for as to what happens next. Naresh, this kind of volatility that we are seeing, the India VIX spiking, and the fact that, of course, the nation goes to poll today, is it just best to sit on the sidelines and do nothing on a day like this? But there is that risk then that there's the weekend and you don't know what kind of news flow comes through.
So the reason you need to wait is because we've not seen a very large correction per se. In the recovery also in the last few sessions, the Nifty small cap, the BSE small cap also made a strong recovery. So the small caps have not corrected much. The index is not down 5, 8, 10% from the top. So we are just seeing a 1.5% downtick today, or say even a 2% downtick, which is very normal even in a running market where there is no news. So in that case, one is better off waiting, because the news is out, but the reaction is still not large. Had there been a much larger correction already getting into this news, and then you see a gap down, you want to buy. So as of now, it's not that a greater risk reward to go in long. And once the clarity is there, one can actually keep looking at stock-specific ideas.
All right, and just a minute to go for the market open. Nikunj, going to hand it over to you.
You know, Awan, you get goosebumps every time when you come to the Bombay Stock Exchange. There is nostalgia, there is history, and there is this feeling of deja vu. But it's a rarity when you are actually standing with legends. Legends who have seen the twists and the turns and the peak and the turfs of Indian stock market. It is my pleasure and an honor to welcome Mr. K.K. Mistry and Mr. Kothari and the CEO and Managing Director of BSE for the BSE Day. Now, Mr. Hemendra Kothari's great-grandfather was the founding member of BSE Native Stock Exchange. So we'll have to take the clock all the way back to 150 saal. That is the association.
1875.
Yes.
Actually, officially. But
okay, sir. Let's ring the bell and then we'll take the conversation forward. I think it's almost the time right now. So we are just going to ring the bell, and this is a very special and a very momentous day for us. We want to take the conversation forward. We'll take the clock back. We'll take the clock forward. We'll talk about the present. But all that right after this, bell opening ceremony. The countdown actually started. There you go. 8, 7, 6, 5, 4, 3, 2, 1. So, I'm getting goosebumps, and for our team here, this is your first time on Bombay Stock Exchange, right?
Couple of times before, but yeah, properly on the stage here for the first time.
Yeah. So if a pedestal of legends has to be made, I'm sure, sir, you'll agree with me, Hemendra Kothari and Mr. K.K. Mistry, are two names will always be there.
Of course.
And if history of India has to be narrated, this room, which is the Badla room, or really the trading floor, it was the outcry system which used to be here, it really captures. So we will go down the memory lane, we'll talk about the present, and then we'll navigate into future. But that's right after this, quick hand back to the studio, and then we'll get ready for the panel discussions. But for the moment, markets are down today, so I'll give it back to Anisha and Avan to take it forward.
Yeah, the markets are down, but it's not as ugly as we were expecting, Nikunj, because it's a cut of less than 1%. So 0.7% shaved off the Nifty right now, but 21,800 has been held, and there's no major pressure, at least at the first ring. The advanced decline ratio is, of course, very, very skewed to the declines right now. There's 1,700 stocks declining to only 260 stocks advancing, but the Bank Nifty also is down almost 1%, and across the board, all the sectors are actually in red today. Starting with IT itself, where Infosys has taken a cut of 2%, Infosys, Wipro, TCS, all of these stocks are in red. You also have the realty space, which is seeing a bit of a profit booking. Starting with Phoenix, Sobha, Oberoi Realty, all of these stocks have started on the back foot, and ditto can be said for PSU banking names as well. Let's talk about the newsmakers then and see whether Bajaj Auto has managed to see a bit of a green or not, because the numbers were good, but the market sentiment has overpowered it, and that's the reason Bajaj Auto is actually seeing a cut of 2% despite the kind of EPS gains that the stock has seen from the sell-side analysts. HDFC Life, that reported numbers yesterday, was a bit of a weak set. The street is now talking about how the VNB margins are expected to stay under pressure. That stock too is expected to open with a bit of a cut of almost 3 to 4%. Let's see whether that has worked out or not. In terms of the other big movers, it's DMart, which is up a good 3 to 4%. ONGC is actually opened in the green, and Oil India as well. There is a bit of a move happening in crude, which has managed to hit the mark of $90 now. So there is that impact coming in on some of these oil dependents as well. Thermax, Cochin Shipyard, these were the other names which are actually managing to hold in the green. What's in the red right now is BPCL. You also have HPCL coming under pressure. Tata Communications is down 3%. Indigo has taken a sharp knock because with crude prices going up, all of these crude ancillaries, that's the oil marketing companies as well as aviation companies, tire companies, paint companies, they all come under pressure, and that's exactly how it's panning out right now. So a bit of a red on the screen, and now 21,800 is also getting threatened. So just around that mark of one, and of course, quite a bit of weakness when you're looking at the broader market and the advanced decline ratio.
Yeah, already down 1% plus for the mid and the small cap indices as we speak. So no surprises to see that breadth skewed in favor of the losing side. Canara Bank, Tata Communications, Spark, Metropolis, BPCL all succumbing to selling pressure as we speak. Let's find out then what the first trades are from our chartists. And Kunal, let's get in a take from you.
Yeah, again, a bit of a, at least a better start for the index, not that bad, at least what the SGX 50 was showing, GIFT 50 was showing. But in terms of the opening trade, metal stocks is something which I would believe one should probably try and look to book profits, at least part profits, if not full profits at current levels. Tata Steel is something which I would believe, could be a good point where closer to 160 mark, traders could look out for booking profits and then look to buy back once the stock corrects, maybe towards 150, 155 zone.
Okay, there you have it. That's a word coming in on Tata Steel, and across the board, be it the banking space or some of the heavyweights like Infi reacting to numbers, all of those stocks are under a bit of pressure, including heavyweights like L&T. So Naresh, what do you do in a market like this? Although the fall is not as bad as one anticipated, still a sea of red?
So looking at a short on Titan, closer to 35.30, 35.50 levels, the stock has broken down yesterday as such. So looking at a short sell on Titan.
There you have it. That's the view coming in terms of the first trades from our chartists. But celebrating BSE Day, and we've got some conversations lined up. Going to take it right back then to Nikunj.
So folks, we are very excited every time, at least personally for me and for ET Now, when we come to Bombay Stock Exchange, there is a history, there is nostalgia, there is lots to learn, there is lot to understand and a lot to implement. And the whole evolution of Indian stock market and Bombay Stock Exchange has been nothing short of magical. Humble beginnings under a banyan tree, now the fastest stock exchange in India. The stock of BSE under the current leadership has been a multi-bagger. Things are really moving in the right direction. But when it comes to BSE, I would take the clock back before I rewind it forward. And when Hemendra Bhai is there, we really want to take the clock really back with him. So what's your association as a family with Bombay Stock Exchange? हमने कहानियाँ सुनी है, आज कथाकार से कहानी सुनते हैं.
Well, my great-grandfather, I should give credit that he was started somewhere in 1866, and then he was one of the founder member and director and first vice president of the Bombay Stock Exchange. The stock exchange started somewhere in 75, and I see the certificate in 78, but anyway, the question is, there is a history for us. My grandfather, my great-grandfather, my grandfather, my father, and myself, we all were president of the stock exchange. So I think it's a place where I think of how our own family wealth and prosperity was there because of Bombay Stock Exchange. So those were the days when I joined in 1969. 69 year when I joined, there was a bank nationalization. There was forward trading got banned. And in spite of that, I was lucky to make every year more money than before. So that was a situation when also the emergency that decade came. There was a war, there was restrictions on various kind of trading. So anyway, the stock exchange has gone from what I used to see and today as multifold expansion on shareholders. I think that is the biggest plus point for the capital market formation. And that's in short, which I thought I'll just tell you. Stock exchange is, whether it is Bombay Stock Exchange or National Stock Exchange, it definitely gives a lot of interest to the world. I recollect in 1984, I started talking about getting foreign investors. And 2 years it took me to get first approval to create a country fund. With Unit Trust of India, we had kept as that DSP and Merrill Lynch joined hands to raise money, and 2 years to explain to government and not to bring them down, but to explain what is PE and why equity and not fixed income only. So I think those are the nostalgic days when we had to work hard to get foreign investor approval. 1991 was, of course, a year where Manmohan Singh liberalized from various restrictions on the size of the enterprise, even they have to take approval. So from there onwards, we have seen India moving forward fast on industrialization. And 92, 93, 92, I think, they allowed the foreign investors to come and invest directly through over here. And we have seen raising of GDR, ADR in USA. So the picture changed and the size of the organization in India also changed. I remember taking Mr. Kamath to raising money for ICICI. So, and various companies from TCS onwards to Birla companies and Reliance. So I'm glad that I'm today here in the stock exchange, which has made a difference to Indian investors in India and to some extent globally.
Mr. Kothari, you've seen the twist and the turns. You spoke about the emergency era, you talk about nationalization of the banks, then you had the South Asian crisis, TMT boom and bust, 2008 crisis. But throughout your time, Mr. Kothari, you've kept the faith in the Indian stock markets. At times of turbulence and uncertainty, can you tell our viewers that how have you kept yourself calm and why have you kept yourself calm and why have you not panicked?
Well, maybe I was over-conservative. That could be the reason. We never did any, though being a stockbroker, we never did any forward trading. And so we did not take a risk. We focused on only pure broking, and then later on in 75, started an investment banking company called DSP Financial Services. And I was a dreamer and started looking for foreign companies, how can they come to India. We raised for many companies. We are tied up in 84 with a German bank, 83 German bank, 84 Merrill Lynch, Swiss Bank Corporation today, which is UBS, French Exim Bank, BFCE those days, and IBJ, Japanese bank. So I had a different, would say, experience. And I was lucky to be there at the right time. And I was very lucky to get right people in the organization. So that was the reason for, to some extent, you can say, my success and our company's success. So I'm glad to have all these years of good fortune with me.
Mr. Misri, I'll have to run out of superlatives to describe the journey of HDFC Limited, now HDFC Bank. You'll have to literally count the zeros to understand the kind of wealth it has created. What, to your mind, really have been the three differentiated factors which has really created a world-class institute like HDFC Limited, now HDFC Bank, which has been a benchmark in itself?
So Nikunj, when I joined HDFC in 1981, October 1981, our share total paid up capital was 10 crores.
That's it.
10 crores. And our market capitalization was about 8.5 crores.
8.5 crores was the market
trading
cap.
below market, below par. That was 1981 October. At the time of the merger in 2022, 41 odd years later, our market capitalization was over 60 billion with a B dollars. That was the kind of wealth that Touchwood we created. And besides HDFC itself, we had a number of companies. We had the bank, we had the life insurance, general insurance, asset management, HDFC Credila, venture capital, real estate, all of that. So if you take the total market capitalization of all the listed companies in the group at the time of the merger, it was about 175 billion US dollars.
Wow.
That was the kind of wealth we created. If you ask me what was it that contributed to that, I would say number one, truly the highest standards of governance. We were willing to compromise on people not being very efficient, not being very great in their job, but even the slightest, even the tiniest question on governance would never ever be tolerated. So that I would say would be one principle. Second principle is we kept the head count very low, very small. We didn't have too many people. For an asset base as big as ours, we had just about 4,500 employees in HDFC Limited at the time of the merger. We invested a lot in technology and systems, and we kept an atmosphere in the company which was free of politics. If you ask me honestly, that was one, I consider that as one of the most important contributors to our growth, and everyone contributed. And the third I would say is that we had very, very clear goals that we set for ourselves. You know, I used to meet international investors from the 90s after, as Hemendra Bhai said, foreign investors, started coming into India in the mid-90s. And I used to continuously meet these investors. And in the 90s, late 90s, we had no competition. And then suddenly the banks started getting in, State Bank came in, ICICI came in, and some of these banks started sending, people over to customers' houses to help them fill up forms and stuff like that. We never had all that. So our investors used to come and say, okay, you are losing market share. Obviously, if you have 99% market share and someone comes in, you will lose some market share. So we continuously kept telling our investors that we have 4 very, very clear objectives that we set for ourselves. And these objectives did not revolve only on growth. Growth, yes, but growth in a profitable manner, not growth for the sake of growth. So there was clarity of thought in what we wanted to do. And we kept saying that in a financial services business, market share is the most irrelevant thing. Because when you are in the business of lending, you can get all the market share you want. You sacrifice your asset quality, you sacrifice your lending norms, you sacrifice your margins, you can get all the growth you want. But that is not going to contribute to long-term profitability. So our objective was number 1, growth, but profitable growth. Number 2, increase our return on equity by 100 basis points every single year, which we did from 1994 till 2009. If you see, every single year return on equity went up by 100 basis points. Third was every single year to lower the cost income ratio. Our target at that time was to bring it down to single digit, and finally we brought it down at the lowest it had come down to about 8.1% or so. And the fourth was to take no asset liability mismatch, run a very simple business, don't take any unnecessary risks. Growth opportunities were always there. India was growing and India continued to grow. And I truly believe that even today the growth opportunity for financial services in India is absolutely phenomenal.
I just want to take that number again for the benefit of our viewers. What was the initial share capital of HDFC Limited?
Paid up capital was 10 crores. I mean, at the time I joined,
okay,
in 1981. Paid up capital, and HDFC was 2 years old at that time. 10 crores and the market capitalization on the day I joined was 8 crore 50 lakhs, 8 crore 50 lakhs roughly.
So it was below par.
It was below par. Profits were less than a crore.
And when the merger happened, the combined entity, all the group companies put together,
170 billion US dollars. 170 billion.
You know, I'll run out of that typical counting style even to understand the multiplication it has had. Now, Mr. Ramamurthy, there is BSE of the past, there is BSE of the present, and then BSE of the future. What should we start with?
Whatever your viewers would love to hear.
The past and the future is what viewers would like to understand. And the present for BSE under your leadership has been nothing short of incredible. I mean, BSE itself has become a multi-bagger stock now. From the COVID low of about sub 300 rupees, it is now nearing 3,000 rupees. A lot of attribution is going to your leadership, that you've changed the things. You've really got the motions into play for BSE. What is that one incremental change which you've done at BSE that the energy levels are back? Excitement is back. Shareholders are happy.
Okay, so you might have seen the Mahabharat serial, which always used to start with My Samay Ho. So if somebody were to make a serial, My BSE Ho, I think it will cover all these great things that have happened. And you will see lot of lessons to be learnt, lot of principles to be done, lot of do's and lot of don'ts. When I joined BSE probably around 15 months back, clearly there was a lot of legacy as you started with, a lot of nostalgia, a lot of history. But I came here to make the future, to whatever extent I can, in the limited time that I have. Two principles which takes you through ages have been nicely narrated by the two great doyens with whom I have today the pleasure and the greatness of sharing the same dais, which I am very honored and humbled about. One, both of them talked about corporate governance, and two, they talked about risk-taking within the limits, not over-risk-taking. The third thing which I thought is very important for me to change things was listen to the voice of customers. People like me come and go. People like this history have been there for a long time. There are a lot of participants in the market who have been there for a very, very long time. You just go and listen to them and understand what they want you to do for the betterment of market. And it works. Voice of customer works. That's the only thing which I think I am trying to do, because of which today BSE is starting to grow in a good way.
Mr. Mistry alluded to a very important corporate number, market share. And BSE was always compared with the other exchange when it comes to market share. They were losing their relevance, if I may use the word, but they're getting their market share back, they're getting their profit back. Which is that wheel you were able to turn that everything is moving in the right direction, both in terms of profit, market share, and also the future business?
So if you look at it, exchange is a high fixed cost game. So the fixed cost to some extent was already put in place in terms of various things like technology, people, all were in place. So there have to be users to this. When users come in and they start using this high fixed cost model, then it starts giving you revenue. For people to come, there should be something as a USP for you to offer, because of which they can come. So for that you have to listen to them to find out what they want. The way the Indian markets have grown over a period of time, derivatives have started playing a very important role in attracting volume, not in derivatives alone, in all the other segments around it. So one of the very reasons for BSE losing market share was its absence totally in derivatives. When it is not in derivatives, many participants don't come here to do derivatives. Post interoperability, if they are going to some exchange for doing something, they would like to continue with the same exchange for everything there. instead of putting another set of expenditure and infrastructure at their end to connect to both the exchanges and get any benefit. So if you are able to attack the derivatives piece and bring something which makes sense for the market, when the market participants come, they put their infrastructure, and once they have put, they would like to milk it as much as they could, then they will start using my other segments. So that's how the Sensex contract and BankX contract were born, and with that more and more people started coming in, and when more and more people started coming in, they have started looking at cash market as well. So the volumes are growing there. It's not that we have reached, there is a long way to go. Today the institutional presence in equities market, which is not dependent on derivatives, is still absent. When you look at domestic institutions, they generally give you a typical type of reply when you go, which needs to be attacked separately. When you go to foreign participants, they say, I don't mind trading, but I want a single contract note. I can't for a same order receive from two different exchanges two contract notes because I require a single VWAP. We are working with everybody concerned, every stakeholder in this. If such resolutions happen, then even more you will be able to see traction in cash market. Mutual fund we are doing well, we will continue to do well because we are putting a lot of energy there. Derivatives we are growing, we have to do more to grow in the right way there.
So if I can become that Samay right now, we are in 2024, but hypothetically if we are celebrating the BSE day 2030, और अगर मैं समय हूँ तो मैं क्या बोलूँगा?
देखिए कल को किसी ने देखा नहीं है, आप कल की बात भी नहीं कर रहे. You are talking 2030, which is 5 साल down the lane. We can only dream, and it is very essential to dream. As Kothari Sahab rightly said, only dreamers achieve something. So let us dream something. We would certainly expect the market, the economy, the prosperity, all at a very different level. That is one thing which every one of us will even today be able to foresee, because the way the country has been growing in the recent past, with the amount of political stability, with the amount of regulatory keenness in ensuring the growth of market, and the amount of effort which MIIs are ready to put along with the regulators to make that happen, they have been stupendous. What I would like to see therefore 5 years down the lane is just not equity and equity asset classes alone. I would like to see a major development in terms of corporate bonds, government bonds, derivatives products associated with them. These are all today looking to be a longer term situation, despite the fact we have been trying for a long time. There has to be a proper interest rate curve across all price points, with actively traded securities across all price points. The corporate bonds also should be active along all the entire curve, so that it is very easy for me to quantify and assess the corporate risk from that. There are multitudes of products today which are traded across the globe. We probably do not have many of them. All those products coming in place, making more and more people to get the benefit of it, that market capitalization going up today. The assets under management of all the things put together, all the people, holders put together, I am told it's around 15% of GDP. That's not a great number compared to the global standards.
It is still less than 10%.
Absolutely. So it has to grow a lot. So there are multitudes of areas where we will see prosperity growing, and that's where I would like to see in 2030 the country.
Kothari Sahab, 2024 to 2030. You've seen there was a time when steel companies were the market leaders, cement became a market leader, IT became a market leader, financials became a market leader, AI is becoming a market leader. Where do you think the puck would move? आप मेरे से ज़्यादा जानते हैं that markets always focuses on क्या होने वाला है rather than क्या हुआ है. अब क्या होने वाला है market में?
First of all, let me just tell you, the time when I was there, the number of shareholders was less than 1 crore across India. The issues were coming 10-15 crores. Gujarat, Narmada Valley, I'm talking 20 crores or something around there, was considered huge. How will they sell? and today we are talking about thousands of crores.
Vodafone 20,000 crore.
20,000 crores. See, look at that. So the question which is there is things are changing very fast. And I think we are growing into kind of growth path with more investors getting educated and more proper compliance also, which is driving the market into proper way, as he has mentioned. And more people become ethical and compliance-based business. I think what we will see change. We are at the threshold of a growth. I've never been so bullish about next 10 years than ever before.
ये दोबारा बोलिए sir.
I have never been so bullish over the next 10 years than today, because we have seen already there are new industrialists, new business people, new venture capitalists. They tomorrow in next 5 to 10 years, you'd see they becoming bigger with AI coming in, with technology driving India. I think I see a lot of bright future for the country, and government realizing that has kept the policies like that, and I hope in future also the policies are friendly for the business. That's all I can say.
Mr. Mistry, last but one question to you. There is a concern in the market that best of HDFC Bank and HDFC Limited is behind us. एक cycle है, and that young phase of growth for HDFC Bank is behind us. Now they are hitting what could be called as the old age and the maturity curve.
No, I completely disagree. Totally, completely, absolutely disagree. As Hemendra said, the growth opportunity that we are going to see in India in the coming 10 years is going to be absolutely phenomenal. Phenomenal. So no matter what your size is, you will be able to grow and grow and grow rapidly on that base. Look, I think the last 6 months have been a period of very tight liquidity. Now, in that period of tight liquidity, HDFC Bank's deposits have not grown as much in rupee terms as perhaps the market expected. But the fact of the matter is that market share in deposits, now I'm coming back to this question of market share. Market share in deposits has actually gone up. Yeah. So despite that very large base that they carry, they are still increasing their market share of deposits. So liquidity will come back into the system. I have no doubt about it. In my personal opinion, and I tend to be a slightly different view compared to what the market is. People expect interest rate cuts or liquidity infusion in the system to come in the very latter part of the year. In my personal opinion, purely my personal opinion, I think that if RBI feels confident that the monsoons this year will be fine, there will be no escalation in food prices, and number two, more importantly, there is no geopolitical event like we are seeing in the Middle East now, which can theoretically cause a big spike in oil prices. Then RBI will start infusing more liquidity into the system, probably June, July, August onwards. So you will start seeing more liquidity coming in. The growth in deposits will also come in, and as growth in deposits comes in, the growth in lending will also happen. As you said, there are phases in life. So this is a phase we are going through. The phase that you are going through is a phase where money is not moving necessarily to bank deposits, but a lot of that money is going to equity, and people have made a lot of money, and good luck to them. India, as Hemendra said, has a very under-penetrated market in terms of equity investors. If you are in a small town and you had 10,000 rupees with you, what would you do? You would go to the nearest, I'm talking of pre-COVID, you would go to the nearest bank and deposit your money over there. Today, everyone has access to smartphones, even in the smallest of towns. Everyone knows what everybody else is doing. Everyone knows what kind of opportunities are there in the market. So money which would have normally gone to bank deposits is now going to stock market. But as I said, these are phases. India is a growing population. We are such a hugely underpenetrated market. So hugely underpenetrated. You ask Hemendra about sectors. In my view, the sector that will grow the most will be the financial sector, because the economy cannot grow unless the financial sector grows. If you look at penetration level, any financial service product you see, penetration level in India is amongst the lowest in the world. If you look at mortgages today are 11% of GDP. In the Western world, mortgages are 50, 60, 70% of GDP. If you look at at markets like India, the developing markets, mortgages are around 20, 25% of GDP. We are so underpenetrated. Look at retail credit to GDP. We are about 18% of GDP. Most Western countries are 50, 60, 70, 100% of GDP. So look at the scope that you will see to grow not just for one decade, but I think for several decades. So finance will be the backbone of the growth in the economy, in my view. And obviously, HDFC Bank will be a very, very big participant in that.
Okay, financials is going to be the backbone of the big growth that we're likely to see over the course of next 10 years. That's the word coming in from market veterans and industry experts. So the long-term view is quite intact, but in the term of the really short-term and near-term, the markets have taken a bit of a tumble, but there's a very sharp recovery underway. Take a look at the Bank Nifty, and we should probably pull up the candlestick chart to tell you the kind of green bars that have emerged in the last few minutes as well. From a cut of almost 1% on the Bank Nifty, we're now just 0.3% lower, a cut of 140 points, and a large recovery in the last 5 to 7 minutes as far as Bank Nifty is concerned. Even from the frontline index, we have seen a bit of recovery. Look at those green bars emerging. Yes, we opened with a bit of a gap down on account of geopolitical tension, but from there has been a bit of a recovery. HDFC Bank that reports numbers, that's the one which is batting for the bulls today. You also have ICICI Bank, which is 0.25% higher. ITC is the other one which is higher by 1%, and that is definitely batting for the bulls. Also Bharti Airtel as well as ONGC, some of these stocks have managed to hold out quite steady. But what's been volatile is of course what's happening across the world in terms of crude prices as well. Vandana Hari joins us to talk to us about just that. Vandana, hi, good to be speaking with you. We woke up to these headlines of escalated tensions in Western Asia, caused a bit of a spike in crude prices, but it's come off a bit as well. Where do you see it headed now?
Good morning. Indeed, the markets woke up to a bit of a shock and I would say confusion as well. So we have seen news reports, quite a few coming from various organizations in the Middle East, some from the US as well, talking about explosions in Isfahan in Iran and in certain locations in Iraq and Syria as well. There's been no official word or confirmation as such that these were Israeli strikes. So, not surprisingly, the knee-jerk reaction of crude was to start spiraling up because, the question is that, is this the much feared and dreaded tipping point which leads to an all-out war between Israel and Iran and perhaps, wider conflagration in the Middle East. But again, I would say at this point, there's a great deal of, a lot of details are missing, official confirmations are missing, there's not much detail and quite a lot of uncertainty. So all that we can expect in the coming hours is a lot of, the new fear premium that has crept into crude will more or less remain intact, but expect even heightened volatility.
Heightened volatility is what we are bracing ourselves for. But Vandana, two-part question. What are the chances you believe that crude can inch higher to $100 per barrel if tensions do escalate a bit? And apart from these escalations as well, what's your own outlook in terms of what could be the average for the year per se of crude prices? Will it continue to be between 85 to 90? Do you see it on an average basis to be higher or lower?
So right now there's mixed signals really. If of course crude needs to react to, especially to any shocking developments that show an escalation of tensions, but there's mixed signals, I say, because there's two things happening in parallel. So definitely there's been heightened conflict between Iran and Israel. We know that over the past fortnight, and quite a bit of rhetoric being exchanged between the two countries, even though the US has been trying very, very hard to sort of dampen down the tensions. And at the same time, we see a major diplomatic push So we have US and its allies in Europe leaning even more heavily on Israel. A lot of all the Arab neighbors of Iran are leaning heavily on Tehran. Basically, all these powers want to diffuse and de-escalate the situation. So now really the question is, which one of these forces wins over? And separate to that is that, do we see perhaps a much worsening of the situation before it starts to calm down? So that's going to be the dilemma. But in the background, we have the Gaza war is continuing to fester, as is the Ukraine war. So I don't expect the risk premium in crude, close to $12 to $15 at this point in my reckoning. I don't expect that to sort of dissolve very quickly anytime soon. Which makes it harder to really answer your second question about what is the outlook for the rest of this year. I think it really hinges on US's ability to de-escalate the situation in the Middle East, and then, of course, then perhaps go to tackling what's happening with Ukraine and Russia. Even there, things seem to be slipping out of America's control, because Ukraine has been firing drones into Russian refineries and energy infrastructure, disregarding US entreaties not to do so. So big question mark over these two ongoing wars and the risk premium in crude.
Appreciate your insights. Thanks so much then, Vandana, for giving us a view on what the geopolitical concerns presently mean for crude oil prices. Let's move right on then and discuss the business outlook for HDFC Life. Vibha Padalkar is the MD and CEO now joining us. Thank you so much for taking time out. To begin with, we saw 130 basis points fall in the VNB margins. Can you give us more perspective? Is it falling due to a change in the product mix, or is it due to an increase in competition?
It was largely due to two. So our margins last year were 27.6%, and this year we ended at 26.3%, which is a difference of 130 basis points. So when I deconstruct this, 70 basis points was due to a one-time 1,000 crores of premium that we got in last March because of the budgetary announcements of 5 lakh and above cases becoming taxable from 1st of April. Of 2023. And hence there was in a way a fire sale and that 1,000 crores, which we called out at the beginning of this year itself. And so the 70 basis points because of the increased premium income that came through. Another 40 basis points impact is due to the product mix, of which the biggest one is on unit linked. Unit linked as a percentage of overall our new business premium almost doubled from about 19% to 35%. Now, this would have had a higher impact, but we managed to sell more of term and riders and so on, and hence reduce the impact of higher unit linked to keep it at about 40 basis points.
Sure, Vibha, that explains the movement that we saw this quarter, but just to get more clarity on the outlook of the VNB margins, because you did comment in your con call as well that you're flexible to trade off the margins to get the VNB growth. So how should one look at the VNB margins going forward in the coming quarters?
To clarify that we are not talking about a material fall in VNB margins. All I'm saying is that let us be range bound so that, 100 basis points fall here or 50 basis points or whatever that might be, because I'll give you an example. If equity markets continue to stay fairly robust and hence interest in unit links continue, then I don't want the conundrum that do I say no to a customer because it doesn't fit into my overall margin profile, or do I say yes and increase my touch points with the customer as well as onboarding of new customers so that I can down the line upsell a more margin accretive product to that customer. So that's the I want to have that flexibility, and hence I mentioned what I did. But at the same time, it's going to be reasonably range bound, all things being equal, of course, on the macro aspect, COVID and regulatory aspects and so on. Based on the current business scenario, it'll be range bound. But what we will be focusing on is on the top line growth as well as VNB growth.
Okay, ULIPs are now at 35% levels, which I believe is also impacting the solvency to some extent, right? Now, after diversifying the product mix, which product you think will be driving the growth in coming quarters, Vibha?
What we will have is again a balanced product mix. Unit linked will stay range bound around this, either between a fourth to a third of our business. We are already beginning to see a rebound in non-par. And in quarter 4, we saw that in around 32% was the non-par, from being about mid-20s just after the budgetary changes were announced. So that will continue to move upwards, and maybe a third of our business is where a third to about 35% of our business is a good place to end. We are seeing inching up of term APE from about 4% to 5% if I were to look at quarter 4. So that will continue to inch upwards in terms of contribution to business. And also par, that has gone slow for some time, thanks to unit link. That also I would expect to see a recapture of demand for par products. So that this combination is how I would see getting back to a more balanced product mix.
Right. So how are you penciling in the impact of the proposed regulation on the higher surrender value for non-linked business on VNB margins and on growth?
So just to recap, very recently our regulator has notified the surrender regulations, and those are not very different from what we are doing today. For example, giving a longer free look-in period. For example, having a higher SSV, the special surrender value. We are fairly in or thereabouts in terms of the ballpark of the expectations of our regulator. We were already giving higher than absolutely required level of SSV. So the gap in complying is not onerous at all or material at all. We'll see in terms of whether there are any other changes that happen. But as of now, we think that the regulator also understands how the product construct is very different to any other product construct or financial services product that might give more liquidity but gives no guarantee. And by trying to match something in terms of liquidity, we might more or less distort the architecture of these products and not be able to give a long-term guarantee. So hopefully, while we address any customer complaints, but at the same time, we don't tinker with the architecture of the product excessively. That's where we are today. But coming back to your question, the notified surrender regulations don't have a material impact on the company.
Okay, the surrender applications won't have a big impact on the company, but I do understand that you're looking at expanding your distribution network as well. Do you think this is something that can make you achieve the higher end of the anticipated industry growth, which stands at 13-15%? Do you think HDFC Life can outperform that?
Yeah, I'm reasonably comfortable saying that we should be on the upper end of where the market is. And we will, of course, try and beat market growth, but at least on the upper end should certainly be possible. You've seen strong counter share growth at HDFC Bank. We've touched the watermark of 63% from about 58%. Hopefully, we'll continue to inch upwards. Also, our agency channel that has grown reasonably well in the below 5 lakh has expectedly been hit in the above 5 lakh. So with a base reset and with 80,000+ agents that we have added and 75 odd branches that we have added, growth should come back in our tied agency channel. Growth has anyway been seen in our variable agency model, which we acquired from Exide Life. So that is something that we should continue to build on. Some of our wealth channels, I'm reasonably hopeful, should start coming back into the fold. As a result of which, I think we should be able to get to the upper end of industry growth.
All right. And despite the increase in the distribution channels and having a strong network of HDFC Bank, the growth rate is still anticipated around industry levels. Is it just pessimistic commentary from the management, or do you think that there are actual headwinds arising, such as competition?
No, it's purely because of the overhang of taxation. nothing else. Because if you were to look at below 5 lakh, we have grown in the range of 13-14%. So to expect that we suddenly have a great amount of visibility of mid-20s, while internally we would certainly gun for it, but we need to perhaps go through a couple of quarters to be able to see how robust the growth is for the below 5 lakh ticket sizes.
For making time and speaking with us. For the markets right now, there's a bit of a recovery, whether it's the Nifty or the Bank Nifty and even the broader markets. So that's the good news. But the other big news that we are tracking right now is, of course, the elections kick-starting in 102 constituencies today. Mr. Swaminathan Iyer, the consulting editor, ET Now, is joining us to talk to us a bit more about that. Hi, good morning, Mr. Iyer. Thanks so much for making time and speaking with us. It's a big event. The largest democracy goes to election today, but today, of course, it's going to be large parts of southern India and Tamil Nadu, etc. also, which goes into poll, which hasn't been the stronghold of BJP. Do you think the exit polls and the opinion polls coming from the first leg could tilt more towards other parties versus BJP and NDA?
I can't hear anything.
Swami, if you can hear me, Mr. Iyer, my question is regarding the polls, of course, that kickstart today. Given the fact it is a lot more skewed in terms of southern India as well going to polls, do you think the first opinion polls and the exit polls coming out might be skewed in favor of other parties rather than BJP? What's the initial sense that you're getting? Okay, I think we'll try and reconnect that line with Mr. Iyer just shortly. But in the meantime, let me run you through what's happening in the markets, because there's a very good recovery which is underway in the markets right now. Those, of course, are the visuals for you wherein polling has begun and a slew of, important stalwarts have already casted that vote. And, of course, the Prime Minister Narendra Modi has also made that appeal to all the people that they should go out there, exercise their right as well as duty to cast their vote in this battleground 2024. It's going to be a very important one. But let's see how it really pans out. Coming back to the markets right now, Force Motors is one stock you need to have on your radar. A 6.5% gain coming in there. Transformers, rectifiers. Another day it's been sitting with a gain of almost 5%, locked in upper circuit. Cochin Shipyard, Timken India, Indus Towers, the Jio and Financials. These are the big outliers right now, wherein we have seen good amount of traction. In fact, defense as a pack is fairly active. So whether it's Data Patterns or Garden Reach, we are seeing good amount of recovery there. And on the losing side, Schneider, Tata Communications, these are the stocks which are coming under pressure. But let's try and reconnect that line. And we do have R. Jagannathan, the editorial director from Swaraj, joining us on the show. Hi, Mr. Jagannathan. Good to be speaking with you. Good morning. It's an important day. And the big question I wanted to ask was, it's of course the first, leg of that elections. It's skewed a lot more towards the southern part of the country, which has seen those clamors of north versus south divide. Of course, BJP isn't the most strongest in that area. Do you think the first leg of opinion poll and exit polls coming out might be giving an edge to the other parties versus BJP?
Yes and no, because the BJP is not expected to do great in Tamil Nadu, which is where all the 39 constituents and Pondicherry are going to go to the polls. But so that will not skew the picture in the rest of the country. But what happens in, say, places like Western UP, where 8 seats go, and some parts of Rajasthan and Madhya Pradesh and, those kind of places, those, if the early exit polls, which of course cannot be announced, but which parties will do anyway, that early trend will impact later phases, or at least because that's what the parties will claim. But they will have a chance to rework their strategies based on what worked in the first phases. So this is the big thing in multi-phase polling. So, but the Tamil Nadu itself will not impact hugely the larger voting patterns.
Right, Swaminathan Iyer rejoining us. And Mr. Iyer, I'm going to, pose the same question to you that my colleague Anisha was talking about. Do you think that given that we're talking about this first leg of elections, which is, in the southern part, would that be skewed perhaps more towards the other party versus the BJP? And would that really come as any sort of a surprise?
Can't hear clearly.
Okay, unfortunately, I don't think Mr. Iyer is getting our audio, but Mr. Jagannathan, I just wanted to get in a sense from you as well, and just to talk a little bit about, what the overall landscape as well indicates in terms of the BJP manifesto, for instance, with their focus on economic growth and the lesser privileged. How have you read into some of the key pointers that were led across, and what do you think was missing?
I think the BJP actually took a very tough stance and did not go opt in for too many freebies, unlike the Congress, which is the challenger, of course, apart from the other regional parties. And I think they have taken a bold decision to rest on their performance or whatever they think is their performance over the last 10 years. So this is actually good for the economy if people actually vote on the basis of what happened rather than what is being promised in future. So there are very few freebies, but I cannot say that the lure of easy money being promised by the Congress will not lure some voters in some parts of the country. But overall, I expect that the BJP manifesto and their track record over 10 years and their slow increase in coverage for targeted women and other things, those will probably help them.
Mr. Jagannathan, what do you think is the main focus area of the citizens as well when they're going to vote today? A lot has been talked about how it's all about one person at the center, that's Prime Minister Modi, and not really to do with the candidates back home in your own constituency. Is it any different in the areas which is going to poll today, or it continues to be the same, that people are not voting for a party or a candidate? It's all about Prime Minister Modi right now.
Yeah, as far as the BJP is concerned, that is certainly the case. And BJP will hope that people will ignore the candidate, if assuming he didn't perform too well, and focus on the big thing, which is to get Mr. Modi re-elected with a majority. So, but the thing is, in certain, what I'm hearing, based on some of the people who have been on the ground, is that in some parts of, say, the Hindi belt, some regions of UP and Rajasthan, the candidate issues are actually surfacing. So the last time the BJP made a fairly clean sweep in many places, also in Karnataka. But this time it is not looking like any kind of substantial sweep, and there are some constituency level issues which they have to overcome, despite the fact there is a Modi factor, but may not be the kind of factor that worked in 2019 in some segments. I'm not talking overall. I'm saying there may be some very tough fights in some constituencies because of the quality of the candidates also. Because the Congress, if it puts up a good candidate in places like Rajasthan, and also a key campaigner in the BJP, Vasundhara Raje, is not campaigning. So those things might make a difference in some specific constituencies. So we have to look at those issues also.
Comes to the overall economic growth and the kind of progress that we've seen in the country, what are your observations in terms of on ground, how things have already shaped up? You did allude to the fact that a lot of people might be voting as well on the basis of the kind of progress and the historic moves that have been made versus what the future projections are.
Yeah, so many of those things will impact a lot of the middle class voters. As far as the people below the middle class, the lower middle class, and the newly emergent consuming class, what has been done on the social welfare front will matter as much as the theme painted of a developed country by 2047. So I think the middle class will be driven more by aspirational values. The lower middle class also by aspirational, but their aspirations will be of a more material kind. They'll be looking to see incomes, jobs. So, but as of now, they do see some hope, and that is a good thing for the BJP as far as this election is concerned.
Mr. Jagannathan, this election has also been done a lot to woo the women voters, right? And that is one thing I think BJP again managed to do better than the Congress, especially in the Hindi belt of your UP, etc., with the new laws coming in. Do you think that could be a big factor at play for BJP?
Yeah, see, the BJP has consistently over the last two elections and the assembly elections wooed women voters with specific micro level advantages, not necessarily cash. Like, for example, Nal Se Jal is a huge benefit for women, though it has no monetary value except in the terms of time saved for women who are far away from water sources. So that is definitely going to play with them, which is why the Congress is trying to break that hold that, say, the Modi charisma has on the woman voter by offering 1 lakh by by way of a free gift to many of them, though it has not spelled out who exactly will get it. It has made some very general promises and said that it will be rolled out in phases. So my guess is nothing like that will happen, because if they had to do it, they could have done it in their own states, but they haven't done it. So I think the issue is, I think people will weigh the possibility that these guys might not deliver on that cash, while Modi has started delivering benefits both in a little bit of cash and kind. Time also is equal to money, and women saving time on many things is going to be a huge advantage. They know it impacts them daily lives.
Mr. Jagannathan, I know I'll put you on a spot, but what's your own prediction that 400 par, is that a figure that perhaps NDA can actually achieve? And also, what are the major upsets that you're watching out for with respect to the kind of candidates list that have come out? Is there any specific constituency that you're closely watching out for? And your prediction on the 400 number?
Yeah, so I tend to be on the conservative side. I think the BJP would do well to reach last time's total of about 300 and odd. I think that is doable. A little more than that is also possible depending on specific factors, especially if the BJP does not lose too much ground in some of its strongholds, like say Rajasthan, Madhya Pradesh, Chhattisgarh, Uttar Pradesh. Also, it has to, my worries also, as far as the BJP's numbers are concerned, relate to states like Maharashtra, where the thing is very indeterminate. There are two fronts, neither of them pretty solid. We don't know which way the vote will finally turn. Then there is some slight pushback from the Congress side in Karnataka. Elsewhere, the BJP should hold its ground. Bihar is a little dicey, but I think the BJP should hold its ground. In the south, the BJP will gain. So if the potential losses in Maharashtra and in some parts of the Hindi belt are made up by the south, we are looking at 300 plus for the BJP and probably around 340 for the NDA. 400 par is a good rallying cry for the faithful to go and come out and vote. Because if they said, if you merely want a majority, half of them will not turn up to vote, especially in a very torrid light of summer this time. So I think 400 is like a stretch target to get the voters out. It is not necessarily a reachable target.
Wanted to get in your view as a political observer as well, how you read into the news of Mr. Kejriwal's arrest and how things really panned out on that front.
Yeah, it's not making an impact as of now, because I think most people in Delhi take, his antics with a touch of salt. But the thing is, it could have an impact if, let's say, for example, key leaders like Kejriwal and Sisodia get released briefly towards the Delhi elections, which is in the last week of May. So that time, if they play the victim card and all, there could be some sympathy vote for people who have been in jail and things like that. In Indian elections, those tend to happen at a constituency level. It might happen. So even then, the reading I see is that out of 7 Delhi seats, BJP should easily win 6. The 7th one may be in some doubt, and it could have some impact.
Appreciate your time. Thank you so much for really assessing for us all that's taking place, as we do have the first phase of polling that begins. On that note, it's time for a very quick break. We'll be touching base with the market lots more when we return.
Powered by BSC. Invest right to future bright.
Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust.
In association with State Bank of India, the banker to every Indian.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India.
for better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET Now.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Over the past decade, GCCs or Global Capability Centers have transformed from back-office entities to essential value-adding hubs driving critical global functions. ET Now Global Capability Centers Summit 2024's third edition, co-powered by Embassy REIT, honored the GCCs that have surmounted obstacles and progressed through foresight, determination, courage and insight. The summit served as a dynamic platform for cross-sector engagement, knowledge analysis and shared learning, fostering proactive collaboration to accelerate progress and achieve scalable outcomes. Watch the episode at these times only on ET Now.
छत टपक रही।
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है।
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए, प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं।
गुड, एटलीस्ट मेरा घर तो लाखों में होगा।
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips, making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged and long-lasting. Presenting Trust MF FlexiCap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Attention startups. Reach 25 crore people well within your budget. Advertise on 10 TV channels in one shot. No TVC required. Brand starter pack starting from just 1 lakh rupees. Brand Surge, the special marketing starter pack for startup brands. For more details, visit our website brandsurge.co.in or write to us at brandsurge@timesgroup.com. Times Network, now or nothing.
Back with first trades right here on ET Now, down 0.5% for the frontliners. The broader market's pretty much in tandem with what's going on within the frontline indices. Do remember that we did have reports of an explosion in Iran, which is why you did see quite a bit of nervousness across the rest of the globe. It's no wonder then that the expectations were that we would have a pretty shaky start. Some more updates, I think, coming in from Iran's senior commander. These are only reports indicating that noise has been heard in the Ifshan region overnight, and that was caused by the air defense targeting one suspicious object. No damage has been caused. All right, let's get a move on then, and lots more to track. And we've got the management of TARC joining in to talk about a strong operational update. Amar Sareen is with us. Thank you so much for taking time out. It's been pretty strong when it comes to your updates. Your pre-sales have been higher by 200%. What has really fueled these numbers, and is this just a one-off or will it sustain?
Thank you for having me on the show. Yes, we did have a very impressive last year. Where we clocked in sales of roughly 1,600 crores of pre-sales. And we are actually looking at around 5,000 crores of sales over the next 1 year, which is this financial year. This is primarily because of projects that have been launched last year and what we are looking to launch sometime this year. A few projects to be launched within the next couple of months and some later part of the year.
About those launches a bit more. Which areas are you targeting? What's the category of these launches? And what's your initial expectations of the gross development value that can occur from these names? And hence, what could be the revenue then next year?
So we've just launched a project which has a top line of 4,000 crores. This was launched in Delhi. So primarily with TARC, we are only in the luxury residential for that matter. In the space, we are only launching our projects in this vertical at the moment, primarily in Delhi and in Gurgaon. That's the only area we function in. The projects that we have launched already are in Delhi, and the ones that we are looking to launch are in Delhi as well as Gurgaon. The three projects that are in the execution phase right now, we have a total gross development value of 8,000 crores from these three projects. And the projects that we are going to be launching towards the later part of this year will have similar development value as well.
You said that you're largely into the NCR region itself. Is there any plan to expand? Because a lot of these players like Prestige, etc., have managed to make a bit of a dent in the MMR region. Any plans?
No, we're very comfortable here. We have enough land bank just to grow here. And we foresee at least for the next 5 to 7 years, we don't need to move out just from Delhi and Gurgaon, so to say. So very comfortable here, going to stay here.
All right. And what's the launch pipeline looking like? And more importantly, what's the plan to fund your launch pipeline? Are you going to undertake any fundraising?
So as a company, we're very well funded. We have enough funds to launch our next, obviously we are very well secured for these three projects. Even for the next launches that we have towards the end of this year, we're very well funded. Internal accruals, as well as whatever advances we get from these projects will be good enough. We are not looking for any more funding, so to say.
Yes.
Sorry.
Not looking at any fundraise, very well funded at the moment. But Amar, you talked about how the land bank you have is quite substantial right now, 500 acres. What does it set you for in terms of the visibility for how many years? Or are you still actively looking to acquire more land as well?
We feel just from our land bank, we are good enough to maintain the kind of sales number we have. We are good enough for the next 3 to 4 years. But having said that, at the same time, whatever opportunity comes to us and we think it's going to fall in our segment, which is luxury residential, and we feel that it can come into immediate use, we are also acquiring certain land parcels, again, in our region of Delhi and Gurgaon.
Fair enough. And you had also, I just wanted to understand, there was the company along with the subsidiaries had faced a tax order of about 25 crore rupees. You were in the process of filing that appeal against the orders. Any status you'd like to update our viewers with?
Yes, so this was, for the year 2019 and 20, a small demand. We have gone ahead and paid some of it, and the balance is going to be appealed, which we are in the process of filing our appeals momentarily.
So that's the latest as far as the tax status is concerned. But talk to us about the pricing and the competition in the NCR region, because Max Estates is also doing quite well. You have seen a lot of other players also enter the Delhi market in a big way, and the pricing was very, very strong. Just let's say what we heard from DLF, etc. a few quarters ago. Is that something which is sustaining, or there is a bit of ebbing off when it comes to the realizations right now?
So again, on the luxury residential side, we have seen phenomenal growth, both in terms of velocity as well as in terms of price increase. We generally foresee this, continuing. We have seen a project that we launched at 15,000 is now trading roughly at 28 to 30,000 rupees. Again, projects that we had launched at 20,000 are now trading at 27, 28,000 just in the span of three months. And it's not only the price increase that is there; what's very interesting to see is the velocity is there. More so in Delhi and Gurgaon, where newer developments are coming up, people are wanting to move into better products. People are looking to move into bigger houses. A mix of this, and I think a lot of demand where people have made money in other asset classes and are moving in money to real estate over the past year and a half. We see this continuing. It's very encouraging. We have a lot of respect for a company like DLF. They've done phenomenally well. And I think, everyone else in this region, so to say, will continue to have good demand at least for the next 2 to 3 years, which I can foresee.
All right, thanks for joining in and sharing with us those business updates. That's the management of TARC. Let's get a move on then and find out what our chartists are looking at on Chartbusters. Naresh and Kunal joining right back in. And Kunal, it's a media stock you're tracking today.
Well, yes, Savan, and PVR Inox is something which the stock has already gone through a very sharp sell-off or a consistent sell-off over the past many months. But then interestingly, what's changed for the stock this time around is some positivity which is emerging from the momentum oscillators. So this is the stochastic oscillator for the charts for PVR. We've seen historically that whenever the oscillator gets into a breakout mode, where there is a turn of from a bearish mode towards a slight bullish mode, we've seen the stock bottoming out and then starting a course of a steady, smart, multi-week, multi-month uptrend. This time around, the signals are very, very similar for the stock. The oscillator has given a breakout, signal, which means potentially the breakdown which has happened for PVR from 1900 odd levels towards 1300 odd mark. This could be a strong base formation zone for the stock on the short to medium term basis. And if the indicator manages to move up higher and then crosses those key, resistance points, then I believe PVR can also probably try and scale up higher. So this could be a good stock which could be kept on radar from a medium term perspective, given the turn of indicators for the stock.
Okay, so that's about PVR Inox. Naresh, what is your chartbuster idea this morning?
That's a chart for Titan, which has given a short-term breakdown below the 3600 mark. The recent swing lows broke yesterday. So a classical triangle breakout, a risk-reward trade wherein the stop loss at 3600 and could retest the previous support band of 3400 to 3200.
Okay, point taken. But Naresh, before I come to you for a stock idea, help me do a chart check on Force Motors, Naresh. That stock has suddenly seen a spike, 8% higher. Anything on the charts that looks interesting for Force Motors?
So technically, the stock has been in a strong uptrend for the last 3 months. Every dip has been bought into. Even the last 4 sessions, the stock corrected from 9,000 odd levels. And today it has seen a quick recovery. So the stock looks interesting, could slowly and steadily head up higher. And now a stop loss could be kept at, say, closer to 8200 levels.
All right, and Naresh, Kunal, let's track your top recommendations.
So I'll go with 2 buy calls. The first one's one, HUL, Hindustan Unilever, the stock forming a base or a bottom closer to this 2200 level. So buy with a target of 2300, stop loss at 2155. And Bharti Airtel, something which has done pretty well for itself yesterday. The stock is also showing a lot of resilience today. So would suggest a buy, expecting a further up move. 1310 is a target, stop loss at 1250.
Okay, so 2 large caps, Bharti Airtel as well as HUL. Naresh, what are your own stock picks right now?
So first is a defensive buy on ITC, which has been finding support around that 415, 420 levels. So stop loss at 415 and a target price of 440 for a bounce. Second is a sell on Polycab, which is close to a short-term topping out case. 5300 is a stop loss, target price of 5000.
Okay, so that's the top recommendations coming in from our technical experts. Time now to slip into a very short break with the news that the recovery is for now being held. We'll track more stocks when we come back.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
India is the world's fastest growing economy. You hold the future of India's growth in your hands.
AI will not become a master, it is actually a perfect slave to those who control it. So if we surrender completely to AI and not question, then we'll become slaves to those who control AI.
Our organizational culture is really founded on the principle of our purpose, which is to refresh the world and make a difference.
What energy!
गॉड इतना पानी आ गया है पापा।
पापा जी बारिश हो रही है? वाह, छत टपक रही है।
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है।
तो देर ज्यादा ही नहीं होगी।
हेलो, यू घर है, इसकी शादी नहीं कि बिना एडवाइस के डिसीजन ले लिया।
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए, प्रॉपर्टी की पूरी इंफॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं।
गुड, एटलीस्ट मेरा घर तो लाखों में एक होगा।
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
First floor going up. Stand clear of the closing.
Welcome back. It continues to remain sideways for the markets. We're down 0.5%, and for the broader end of the market, actually check in on the mid-cap index as well as the small caps, because that degree of underperformance does seem to be evident. Just going to mark some of the big losers: Tata Communications, Schneider Electric, Phoenix Mills, NBCC along with Spark. Those are some of the stocks feeling the heat. But lots of newsmakers. HDFC Bank all set to report its Q4 numbers. NII could jump on a year-on-year basis. Net interest margins could decline marginally. Let's bring in Gaurav then, who tracks the company and joins in with what the street is penciling in. Gaurav?
Well, yes, HDFC Bank is definitely going to be in focus, because if you look at the provisional numbers, the advances grew almost by 1.6% on a sequential basis, but deposits, which was actually a key issue in Q3 FY24's result, grew almost by 7.5% on a sequential basis. We also saw some improvement of 50 basis point in CASA as well, and from here on, based on these numbers, now analysts are expecting net interest income to increase almost by 2% on a quarter-on-quarter basis in Q4 FY24. What they believe is that we may see some dip in, let's say 5 bips of dip in the net interest margins for 4Q FY24, and they may remain in 3.35% of range. And at the same time, this dip will be because of the contraction in the LDR ratio, because they are expecting LDR ratio to go down almost to 105% levels versus what it was at 110% levels. From here on, we may also see some boost coming up in the non-interest income, because we saw that HDFC recently sold stake in Credila, and this may give boost of 9,000 crore rupees in this quarter, because of which we may see PAT growth of 23% on a sequential basis. And lastly, ROE is also expected to remain above 2%. From here on, what analysts are expecting is that any kind of commentary on the trajectory of earnings from management, because we know that management had earlier guided that they will be focusing more on EPS growth rather than loan growth. Apart from that, they will be also focusing on any trajectory coming up from the NIMs in terms of guidance or in terms of any kind of direction that the management will provide. And at the same time, deposit growth trajectory is also going to be important for the bank, because this will decide the growth rate for the bank coming ahead. So all in all, we will definitely keep an eye on how the commentary comes up for HDFC Bank.
Yeah, HDFC Bank will be important to track, the first of the banking majors to report the earnings. We already know that the Q4 update was strong, but NIM performance is something we'll have to wait by and see. But what the expectation is from Wipro is also important to track after the disappointment coming in from Infosys. Not much to expect from Wipro, to be honest. We are working with a constant currency decline of around 0.2%. Remember, the guidance that the company had given had a growth prospect of 0.5% to a decline of 1.5%. We are expecting it to be mid of that range. But now with the performance coming in from TCS and Infosys on the top line being weaker, one can't rule out a bit of a disappointment coming in from Wipro. In terms of the dollar revenue, we are working with a number of 2,650 million, while rupee revenue is expected to be 22,100. Margin is expected to remain largely flat, because last quarter there was a one-off cost, which is not expected this time around. And even though there is going to be a bit of a wage hike impact, that will get negated by the operational efficiency. So that should balance out the number. Profitability is looking healthy at 2,880 crore. More importantly, it is to track what happens with respect to the Q1 FY25 guidance. The street is expecting that perhaps the number could be growth of 1% to a decline of -1%. So that's something to track. And what is the new CEO strategy? Because there was that sudden change that happened at the leadership level. We will hear the commentary from the new CEO for the first time. So that will be important to track as well, watching out for Wipro. But the stock is a bit muted ahead of that. But separately, Axis Bank is in focus as well. We have seen a slip of almost 2 to 3% on that counter. Gaurav, talk to us about what exactly is the expectation there, because overnight we did get these reports talking about that there is going to be perhaps some fundraising at Axis Bank on April 24th.
Yes, on 24th of April, Axis Bank is going to hold its meeting to discuss its Q4 numbers. But at the same time, in this exchange release, they have also said that they will be evaluating the potential QIP during the meet. Now, what has happened is that this is actually a surprise for investors, because during the 3Q call, they had categorically denied that there won't be any need for the capital raise, at least for the 12 to 18 month. And now that the QIP is coming up, this could be a surprise for investors. Apart from that, there is another trigger that CEO's current term, the current CEO's term is going to end on December 2024, and the clarity on the extension is still awaiting from the management. Now, if you look at analysts' view, they believe that the QIP announcement that the Axis Bank has given is actually could be an enabling provision for capital raise, which is a normal case when it comes to a starting of new financial year. And there will, if you look at the previous data, there was no enabling provision for QIP in the last year's meeting, and that is why analysts are not a bit surprised because of this move. But if we look at the stock performance, it is down almost 2% in days trade, and if you look at the stock performance, it is down almost 8% in the last 5 days as well. So definitely keeping an eye on what happens in the Axis Bank's meeting.
Okay, that will be closely monitored. Ahead of that, the stock laying low. But there's also Reliance Industries that's in the spotlight on the back of numbers that will be declared on Monday. Q4 earnings, and the street is going in with the fact that it could be the highest ever EBITDA sequentially. Let's get in Somit, who tracks the company, who joins in with what to expect from Reliance Industries and Reliance Jio.
Well, in the fourth quarter, if you see, Reliance Industries is expected to report a strong set of numbers. Revenues are expected to be high by around 4%. EBITDA is expected to jump by nearly 4.5% on a sequential basis. Margins are expected to come in at close to 18.1%, while the net profit is expected to be higher by around 5 to 6% on a sequential basis. Now, the company is expected to report its highest ever quarterly EBITDA number on the back of growth that we'll be seeing in the oil to chemical segment and also because of the telecom segment. Now, segment-wise, if you see the oil to chemical segment EBITDA is expected to be higher 13% on a sequential basis, and this recovery is owing to higher refining margins, higher throughput, and better petrochemical spreads. Now, throughput is higher because in the previous quarter, that is the third quarter, there was a planned maintenance shutdown, and hence we are seeing such kind of a move when it comes to the oil to chemical segment. When it comes to the retail segment, revenues are expected to be higher by around 1.5% on the back of store expansion and higher footfalls. However, the retail segment EBITDA is expected to come down marginally by around 1% on a sequential basis, but this is largely because we are also coming off from a seasonally strong quarter, that is a festive season quarter of Q3, and hence we are seeing some kind of a dip when it comes to the EBITDA number. Now, the oil and gas exploration business, there the EBITDA is expected to decline by around 3% on a sequential basis, and that is because of the rise in profit sharing with the government gas. Because of this rise in profit sharing, the EBITDA is expected to come down. On the other side, if you see, the output number and the gas prices are largely expected to be flattish on a sequential basis.
So these are the expectations coming in from the big boy Reliance, but Jio specifically, Somit, you want to flag out something specific, what you're watching out for when it comes to Jio?
Well, for Reliance Jio, that is the telecom arm of Reliance Industries, revenues are expected to be high by 2.5%. EBITDA is also expected to see similar kind of jump. Margins are expected to be flattish, while net profit is expected to be high by around 2%. ARPU number, that is a key number for the telecom companies, that is expected to be flat on a sequential basis at close to 181.8 rupees per user per month. But is the subscriber number that will aid the growth for Reliance Jio in the fourth quarter also. Subscriber numbers are expected to be around 48.1 crore as against 47.1 crore that we had seen in the previous quarter. Now, this will be the 8th consecutive quarter where Reliance Jio is expected to report a subscriber growth on a sequential basis. However, the net subscriber addition that we'll see in the fourth quarter would be marginally lower than what we had seen in the previous quarter, that is the third quarter. Now, ARPUs are flattish because despite the rising FTTH contribution, that is the broadband contribution, there is one less number of day on a sequential basis, and hence ARPUs are expected to be flattish on a sequential basis. Now, apart from these numbers, what are the key things to watch out for from management commentary would be their outlook when it comes to the refining and petrochemical business. What is their roadmap for the new energy business, when they're expecting a tariff hike to come in? How has been the performance of Jio Bharat phone for Reliance Industries, and what is the commentary when it comes to the capex outlay for FY25 would be key to watch from Reliance Industries earnings.
All right, thanks very much for summing up all of that for us, Somit, and we'll be watching out very closely for Reliance come Monday. But in the meantime, let's get you an ET Now exclusive. Mumbai's Urban Development Authority, the MMRDA, is in the process of acquiring a 74% stake from Reliance Infrastructure in Mumbai Metro 1. Now, sources have told ET Now that the acquisition is seen around 4,700 crores, and this is on the heels of NCLT's disposal of the insolvency proceedings against the Mumbai Metro 1. Anurag Joshi is tracking those developments and now joins in with the exclusive information. Anurag?
Mumbai's Urban Development Authority, MMRDA, is in the process of acquiring a 74% equity stake in Mumbai Metro 1 that runs the busiest metro rail line in the country's financial hub from Reliance Infrastructure. MMRDA owns a 26% equity stake in Mumbai Metro 1. Reliance Infrastructure is owning the remaining 74% equity stake. Now, sources have told ET Now that MMRDA is likely to acquire the holding for around 4,700 crore acquisition value. And this comes on the heels of NCLT Mumbai bench ruling, which had disposed of the insolvency petitions against Mumbai Metro 1, and this removed the key hurdle for the stake sale to take place. Now the NCLT Mumbai bench has withdrawn MMOPL, the Mumbai Metro 1, from the insolvency proceedings in view of the one-time debt settlement with banks led by State Bank of India and IDBI Bank. In March, the Maharashtra government had cleared the stake sale proposal to MMRDA, and the money that Reliance Infrastructure gets from the deal will help generate cash that could help the company repay some of its debt obligations.
Well, 5 seats from Maharashtra's Vidarbha region is going to polls today. One seat which will be on everyone's radar is Nagpur, from where the Union Road Transport Minister Nitin Gadkari is eyeing a third term. Times Network Shivani Mishra is standing by for a ground report from Nagpur. Hi Shivani, take it away.
Nagpur at the moment is seeing, heavy numbers in the early hours of morning. Of course, the temperature is also quite hot, and that's why it is bringing people in the early hours of morning to vote at the polling booth. Right now, we are in one of the schools in Nagpur where you will see a larger number of people. Those have come in morning, and all age group of people you will be witnessing here. But let us take you through some voices. Those have already voted, and also we are going to speak to the voters as to what their issues and concerns are going to be. आपके क्या मुद्दे होने वाले हैं? विकास होगा, राजनीति होगी, विपक्ष के आरोप होंगे या सत्ता के प्रोमिसेस?
सभी तो वैसे सभी होना चाहिए. विकास तो मेन चीज है, विकास ही होना चाहिए. राजनीति तो होती रहती है. तो हाँ,
विकास हुआ है नागपुर में?
हाँ, काफी विकास हुआ है, बट एक्सपेक्टेड है कि और आगे होना चाहिए.
नागपुर की अगर हम बात करें तो नितिन गडकरी जी क्या इस बार हैट्रिक मारेंगे, या फिर जो इंडिया अलायंस के कैंडिडेट हैं विकास ठाकरे, वो अपने बातों को लोगों तक पहुंचा पाए हैं?
वो तो एग्जैक्टली मैं बोल नहीं पाऊंगा, लेकिन हाँ, विकास हुआ है, अच्छे काम हुए हैं. लेकिन एक मेरी समस्या ये दिखी कि यहाँ बहुत समय लग रहा है वोटिंग में. शायद वोट परसेंटेज कम होने का कारण भी वही हो सकता है.
अच्छा, तो ये साफ है. पिछली बार भी 2019 की अगर हम बात करें तो वोटिंग परसेंटेज जो थे वो कम थे, और उसी का असर जो है वो कहीं ना कहीं डिफरेंस ऑफ वोट्स में जरूर पड़ता है. लोगों से बात करूंगी. आप युवा हैं, आपका पहला वोट है? तो फर्स्ट वोट है, एक्साइटमेंट भी है चेहरे पर. किन मुद्दों को लेकर वोट कर रहे हैं?
बेसिकली आई हैव टू सी अ चेंज इन दिस कंट्री, इन दिस सिटी, सो आई थिंक बहुत इम्पोर्टेंट है वोट करना.
ओके, सो अगर आप वोट करते हैं पहली बार तो किन मुद्दों को दिमाग में रखते हैं? एम्प्लॉयमेंट को, टेक्नोलॉजी को, डेवलपमेंट को, इंफ्रास्ट्रक्चर को, रिलीजन को, मंदिरों को, या फिर किसी और चीज को?
आई थिंक एम्प्लॉयमेंट तो बहुत बड़ा फैक्टर है अभी, और डेवलपमेंट भी है, इंफ्रास्ट्रक्चर है ही, तो सारे मुद्दे ही है इम्पोर्टेंट. वो सबको मतलब काउंट में लेते हुए ही वोट करना है.
All right, that's with respect to what the expectation is then from the general public. And as the first phase of the Lok Sabha elections has begun, with 21 states and 4 union territories going into polls, all of Tamil Nadu's 39 Lok Sabha seats are up for grabs, and several big names from the likes of Rajnikant to Kamal Hassan have turned up for voting. Let's get in Dharni, who joins in with a ground report from Chennai.
Well, of course, although Rajnikant has not entered politics to contest the elections, on the day of elections, he has come early in the morning and he has cast his vote. This definitely will set an example to the young, population, especially the first-time voters, to come out and vote in large numbers. And we also saw actor Ajit from Tamil Nadu. He was the first person to go vote in this particular polling booth in Chennai. He was waiting for 7 a.m. and he was the first person to enter the booth and cast his vote in Chennai, in the particular polling booth where his family, falls under. So definitely, big actors like Ajit and Rajnikant coming out early in the morning and casting their vote will create an encouraging atmosphere for the youth, especially for age groups between 18 and 30. The first time voters, they will be encouraged to come out and vote in large numbers. So of course Tamil Nadu is going into polls in the very first phase itself, and all the 39 parliamentary constituencies in Tamil Nadu and one in Puducherry, all of the 40, they will be going into polls today, that is April 19th, the first phase of the Lok Sabha elections. And since 7 a.m. Apart from celebrities, the general public also, they've been coming in large numbers across all the polling booths in Tamil Nadu, and they've been casting their votes.
Okay, yes, the polling has begun, and for now the initial numbers are suggesting that the turnout has been quite okay in the early hours. We'll wait by and get more details on that. But in the meantime, taking stock of what's happening in the market, some of these pump companies and pump stocks are fairly active. Take a look at KSB pumps as well as Shakti pumps. Both of the stocks have actually seen a bit of a spike in the last few minutes. Let's pull up the intraday charts of these stocks, managing to hold out with gain of around 5% on Shakti pumps. Even KSB pumps is high by around 2.5–3%. The other gainer in the trading session has also been Wockhardt. That's going with good ground. Orient Pro had just announced an acquisition worth around 135 crores, so that stock is reacting to that. Chalet Hotels, MRPL, Poly Medicure, these are some of the other names which are standing with good amount of gains, and Ujjivan Financial too is actually holding up with a gain of around 5%. On the losing side, however, Tata Communications is seeing acute pressure at the moment. Remember, the earnings actually came day before yesterday. We did speak with the management yesterday and did talk about how the margin is expected to improve from here on. They, of course, did not call out a bottom, and the fact that the margins have come off from 26% all the way to sub-19 is a bit of a worrying point for the markets right now. Yes, it was on account of acquisitions, etc., but the street is still a bit worried about the kind of quality of earnings that we have seen from Tata Communications. We'll try and get more details on that story as well. But we're completely out of time on this edition of First Trade. So what we'll do is we'll wrap up this show with elections just around the corner. The large consensus being around up move in the market versus the correction that we have seen. Let's see what big market voices have to say, how you should deal with this election-related volatility.
That the next major event to look out for is the budget in July. I think, look, the election is also very important, particularly from a foreign investor's viewpoint. I think the domestic investor base has already concluded and acted upon that conclusion regarding elections. But I think amongst foreign investors, there's still a large segment which wants to see the event behind us. They're prepared or have been preparing to act, but they want to see the event behind us before taking action.
Maybe some amount of, disappointment or euphoria around that, because normally it happens, right? Elections are one event that happens once in 5 years, and there's a lot of rumors flying around, a lot of people giving out their thoughts. So it's going to be fairly choppy around that time also. However, don't forget that immediately after the elections is going to be the central budget, which is going to be presented, I think sometime in June end or July beginning. And that will actually, as Sabir has rightly pointed out, I think we believe that that is going to set the trend for the next couple of quarters.
Pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x, right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got created. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means pharma itself would have a market cap of $2 trillion.
Asset management companies also, we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly in offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers.
There are certain pockets within tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there. But that's a space that we remain fairly bullish on.
In association with State Bank of India, the banker to every Indian.
All leaders in individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
DADT now have been getting you bit by bit.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
India's long-term strategy for creating a trillion-dollar economy includes boasting of building a healthier nation. But which metrics will be used to evaluate the nation's progress? In this episode of the Living Room Conclave India Health Mission series, we'll look at where India is on the Global Health Report Card and what we are able to do as a country to accelerate our progress. Watch this engaging conversation only on the Times Network at these times. Presenting partner Bajaj Allianz General Insurance. Co-powered by Herbalife. Outdoor partner Tim Delhi Airport Advertising Private Limited.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy insuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Great news for those who want to rise with India. Now you can get the full download of business, economics, leaders, interviews, analysis, anecdotes, profits, research, results, revenue, bulls, bears, bonds, markets, and more. Your new high seat of business news is here, etnownews.com.
Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And don't forget that today is Friday and we're going to be getting you Buy Now, Sell Now Pathshala as well. But before that, let's have a quick look what the markets are up to. So Cheryl, amidst all the news flow related to Israel and Iran war, the Indian markets were trying to make some bit of a recovery. And we are amidst that itself, but still holding in the red.
Absolutely. A very good morning to you, Shrishti. And I don't think that we can use the word war as yet, because it is just a mild conflict or a tit for tat sort of a scenario that we are witnessing. But there have been a lot of comments coming in over the last 2 hours, and that's the reason why you see the markets actually dipped at open, but thereon we've tried to post a recovery, and we are holding on to that recovery. In fact, even just before the market opened, you had the GIFT Nifty indicating at one point in time a cut of around 380 odd points, and that actually recovered from the day's lowest point, and we were expecting a cut of around 200 points. And the Nifty, if you look at it right now, not faring that bad if you look at what the initial prints we were expecting it to be like. So yes, that definitely, the tensions over there is definitely lingering on the markets. If you look at Nifty, it is down about 130 points, but recovered almost 0.4% from the day's lowest point. Broader markets also have staged a very good recovery, be it the mid-cap index or the small-cap index. Approximately 1% or so gains from the day's lowest point is what both of them have actually posted. Nifty Bank is moving in tandem with the benchmark index. A might bit of outperformance for Nifty Bank, 0.4% downtick, 190 points cut coming in for Nifty Bank as we speak. Advanced decline ratio, needless to say, is in favor of the declines as of now, but hopefully we are able to maintain this sort of a recovery that we are making from the day's lowest point for the benchmark indices. Talking about the list of gainers, then yes, handful of gainers on the Nifty as of now, with the Grasim being the top gainer on the Nifty with gains of about 1.2%. You have ITC, HDFC Bank, M&M are the other set of gainers, while on the losing front is Bajaj Auto, which is reacting to his numbers, 3.3% downtick coming in for Bajaj Auto. Axis Bank, Tata Motors, BPCL, L&T are the other set of losers. Add to the list HDFC Life as well, which is reacting to its numbers. Let's take a look at what Infosys is doing, because remember that this time around, once again, the earnings were a miss, and we had the ADRs that were declining or indicating a sharp cuts for Infosys. Infosys down about 1.2%. Talking about the sectoral indices then, Shrishti, none of the sectors are in the positive territory. You have PSU Banks as the top sectoral loser, Realty is losing, Auto is losing, with FMCG losing the least in today's trading session. So that's the way how the markets are looking like at this point in time. Hopefully, we are able to at least maintain these levels, or in fact better from here on.
Well, yes, Cheryl, let's hope for the same. But with this, let's move on, and let's also go across to Kunal Bothra, who is standing by and joining us live for the Buy Now, Sell Now Pathshala. Very good morning, Kunal. Take it away. Tell us, what is the interesting topic that you have got for our viewers today?
Thank you so much for that. So, given the way the markets are, we all want that this pattern generally shapes up pretty quickly for the indices. So, the pattern which we are discussing today is bullish engulfing candlestick pattern. It's generally a precursor or a first sign that a major bottom could be in place for stocks or asset classes which exhibit this kind of a pattern. And if it's observed for many of the stocks in a very simultaneous kind of a manner, then we expect that the market gets into a bottom formation process, or at least those stocks in the sectors get into that kind of a process. So we look at first a very simple example of how bullish engulfing pattern generally is observed in the charts. A stock or an asset class goes into a downtrend by forming a bearish candlestick pattern on a consistent basis. All of a sudden, you see that there has been a good green bullish candlestick pattern gets formed. This candlestick pattern and this formation, the two-step formation, is called as a bullish engulfing pattern, because this bullish candlestick pattern engulfs the activity for the previous day in entirety, and this generally shapes up closer to a major support, a moving average, or a gap for the stock and asset class. So that also is an indicator that maybe the stock gets into a bottom formation process, and from here starts a process of uptrend for the stock. So this could be a very good point of indication that bottom is in place, and to buy could be a better risk reward for that asset class. We'll look at two examples over here. One, both of them are on the index front. One is the Nifty Financial Services Index. How the asset class got into a downward trend. As you can see here, the index formed from 4,400, 500 levels. There was not a zone where the index formed a bullish engulfing pattern, but over here, as you can see, that there were two bullish engulfing patterns which were formed simultaneously. That led to a major bottom formation process for the index, and closer to this 3,700 mark, as you can see that the index formed a major bottom over here. And this resulted into the index going into an uptrending mode. So this becomes a very good entry point, and especially when you see such kind of two bullish engulfing patterns getting formed simultaneously. We look at another example again from an index perspective, an index which was in the limelight over the last few weeks and months, which is the metal index. After a mild downtrend, the index forms a bullish engulfing pattern. This results into a base formation process for the index and then starts off a strong uptrend for itself. So that's a classical sign of how bottoms generally get formed, and this candlestick pattern can help us try and forecast or at least expect that or anticipate that a bottom is in place.
Right, that's something new that we've learned today in BNS and Pathshala. Kunal, I remember quite clearly that when we started the edition of Pathshala, we would have only one word term that you would want to explain. Now, I see as we are progressing with Pathshala, there are multiple words linked to one particular pattern, that is bullish engulfing candlestick pattern. So that is something new for all of our viewers to actually look at and actually learn. But Kunal, what about the markets then? What's it indicating to you now? What levels of a Nifty should one watch out for? What sort of a strategy should one use given the fact that we are seeing extreme volatility based on the geopolitical news that you're getting from overseas?
Well, absolutely, yes. So I think first things first, what matters over here is not to try and go for a catching a falling knife in this kind of a scenario, because you are plagued with a lot of news flows across the globe. So not just Iran, Israel issue, but when you look at the inflation scenario, the interest rate, concerns from the US, and for our markets, the results. So these are three big, circumstantial evidences that the markets are still getting into a phase of higher volatility. Whenever you see a heightened amount of volatility for the indices, the first port of call is to try and reduce the leverage, cut down your position size, and have only those quality names which makes a lot of sense in terms of your portfolio. And the second and the most important part is that these could actually be very good times for long-term, medium-term traders to try and build more quality stocks in long-term plays, which can help you shield from major part of the market correction as well as balance out your portfolio.
Okay, that's the advice coming in for all the traders out there as well as investors, that this is a good time to actually start looking to build on a solid portfolio for yourself. But with this, it's time to slip into a very short break. Don't go anywhere, viewers. As we come right back, it's time to take all your stock related queries. So stay tuned and start writing to us.
Powered by BSC. Invest right, the future bright. Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust. In association with State Bank of India, the banker to every Indian.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell right at your fingertips. Making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Friends. I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
God, इतना पानी आ गया है पापा।
पापा जी बारिश हो रही है? वाह, छत टपक रही है।
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है।
तो देर ज्यादा ही नहीं होगी।
हेलो, यू घर है, इसकी शादी नहीं कि बिना एडवाइस के डिसीजन ले लिया।
इसीलिए तो घर मैजिक ब्रिक्स में देखिए, प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस है।
गुड, एटलीस्ट मेरा घर तो लाखों में एक होगा।
An actively supportive workplace empowers women and strengthens the organization itself. To honor organizations that prioritize the best workplace culture for women while empowering female employees and fostering a steadfast commitment to gender equality in the workplace, Times Group presents ET Now Best Organizations for Women 2024. The conclave celebrated organizations pioneering a future where every voice, especially women's, is not only heard but deeply respected. They're not just breaking barriers, they are shaping a world where inclusivity thrives. Watch the episode at these times only on ET Now. Brought to you by ET Edge.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're watching Buy Now Sell Now on ET Now. Markets trying to stage a recovery, 0.5% downtick now coming in for the Nifty over the last 15 minutes. If you look at it, Reliance Industries has seen some sort of a recovery creeping in. You have Kotak Mahindra Bank also that's seen some sort of a recovery over the last 15 minutes. No doubt it may not seem that big recovery, but nevertheless some recovery is always good. ICICI Lombard also has seen a recovery of approximately 1.3% over the last 15 minutes. So that's the way how the market texture is looking like at this point in time. But let's talk about all of your stock related query, viewers. You know what you've got to do. You can write to us on the number that will be flashing on your screen. Each time you write to us, remember to mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price and the quantity in case you're already holding the stock in your portfolio. And most important of all, please mention your time horizon every time you write to us. In that way, we will be able to direct your query to our experts. For the short term to medium term queries, we have our technical analyst, Kunal Bothra, who's joined us on the show. And for fundamentals, that is your medium to long term horizon, we have Avinash Gorakshekar to take all of your queries on the fundamental side. Very good morning once again, Kunal, and good morning to you, Avinash. Thank you so much for joining us on ET Now. And let's kickstart taking all of the stock related queries then. And this one is coming in from Swati. And Swati wants to know if new gen software is worth buying at current market price for the next 2 years or so. What's the take on this one? Avinash, have you tracked new gen software? A good bet to buy right now?
Yeah, I think, Cheryl, if the investor has got a 12 to 18 month time frame, then I think new gen software is a specialized software company. I think operates in a very niche space and has been reporting very strong numbers. In fact, the commentary post the Q3 numbers has also been quite good. Overall, I think, the stock has, witnessed a fair to expensive valuation. So, in this kind of market, if the investor can get a chance to buy the stock on any market correction and on decline, that would give a decent risk reward over the next, say, 12 to 18 months. But I think the investor needs to give in a slightly longer time frame because only then the risk reward could be in favor of the investor.
All right, moving on then, and the next query is coming from Tushar, and Kunal, he's holding Dabur at a price of 563 rupees. Is this counter worth holding? Any hopes on recovery, or should he just go ahead and exit this counter? And his second question on GE Shipping, is this a good time to enter into GE Shipping at current levels?
See, I think I understand that many of the FMCG stocks are now coming back to their key, corrective phases, but then it's very difficult to try and categorize that whether these stocks would probably get into a bottom formation process as a basket, because see, on one hand, the likes of Nestle, for example, is seeing a heightened amount of volatility. HUL is looking like it's nearing a major bottom for itself. So it's very stock specific. I would suggest just wait out for maybe another, a few weeks, because if these stocks, they don't fall with respect to the markets and the stocks, they just about go into a time-wise consolidation, that could probably be an indicator that maybe these stocks have formed a bottom for themselves. The selling is over, and now slowly and gradually these stocks would get into a recovery. So I would suggest not to be in a hurry to try and exit the positions, but just wait out for another couple of weeks. GE Shipping, on the other hand, the stock is still trading into a range. 1050, 1060 is a breakout point for GE Shipping on the upside. But I would suggest that if possible, look to buy the stock on corrective phases. 950 could be a good entry point.
All right, this one is coming in from Rajiv Kunal, and this one is for you. He's saying he's a big fan of King Kunal, is what he's written to us. He's writing to us from Mumbai, and he's bought about 600 shares of Navkar Corp at the price of 95 rupees per share. He wants to know 3-month technical view on that particular counter. What levels can he expect for Navkar Corp? 95 was his buy price.
First of all, thank you so much for that, and it's a good pleasure. So to try and just to receive beautiful comments from all the viewers. Now, in terms of Navkar Corp, what's actually very interesting about the chart is this last 6 months of recovery, because prior to that, it's a stock which has been a sheer disappointment in terms of the price trends. But in the last 6 odd months, from I think October, November lows, when the stock was almost at 55, 60 levels, the stock has started to show some signs of good trend, volumes picking up, and for the first time the volumes had been at a much positive trends for Navkar Corp. So I would probably expect that don't give it just another 2 or 3 months, because it's possible that the markets may take some time to settle after this kind of a geopolitical news flow. But if this volume trends settle up further for Navkar Corp, then the stock may come back about that 120 levels and possibly head even higher. So I would suggest to just wait out for the stock as of now and have a slightly higher term time horizon rather than 3 months.
All right, moving on then, and the next query, Avinash, is coming from Vijay from Bangalore. He is holding 7,000 shares of Salazar Technologies, Techno Engineering, from a price of 27 rupees 50 paise. Is this a good stock to continue? Any view on this one?
This is a stock which is servicing the electrical and basically the power transmission industry. I think numbers have been decent, but still the stock has not delivered, in terms of the stock price performance. So I think, this is a typical micro cap stock where liquidity is a little bit of an issue. So I think if the investor can hold on only for the next, say, 12 to 18 months, he can continue to hold. Otherwise, I would suggest that, he should get into far more liquid counters like an IDFC First Bank or maybe a Federal Bank, where I think, the risk reward definitely is also better and where the liquidity is also much better. Typically, illiquid stocks tend to basically not perform that well. So IDFC First Bank looks pretty attractive at the current level. The results are also expected on the 27th. So I think numbers should be much better than what the street is expecting.
Right. Moving on then, and the next query, Kunal, is coming from Siddharth from Kolkata, holding Route Mobile 30 shares at a price of 800 rupees. What is the long-term outlook on this one?
See, I think Route Mobile has been a stock which has been going through a major consolidation. No major signs of a trend or uptrend coming up into the stock price, and I think looking at the current chart structure, I don't see any major trend picking up. So I think if you're looking to buy the stock, I would suggest just that you avoid and then maybe concentrate on some other space. I would probably recommend, of course, not stocks from the same sector, but differentiated stocks. For example, Balrampur Chini, Praj Industries, they are the ones which are looking fairly attractive, and I would probably sense that we could be at a cusp of a major bottom formation for many of the sugar stocks. So I would suggest not to buy Route Mobile at current levels, and if you're holding, then maybe keep a stop loss of 1500, but look to shift to some other sectors in stocks like Praj as well as Balrampur Chini.
All right, this was coming from Shankar, who's writing to us from Tuticorin. He has 145 shares of Shobha at 705 rupees per share and 516 shares of PFC at a price of 95 rupees per share. Is it worth holding on to for the next 2 to 3 years, Avinash, or should he look to book profits in both of these counters? Because if you look at the stock price, his buy price and where the stocks are, he's really made good returns from both of them.
No, I think the next 2 years would definitely be good for both PFC as well as Sobha developers. Sobha is a very quality real estate player operating in the Bangalore market. And PFC has been doing extremely well considering the fact that power generation as a sector is expected to do well over the next, say, 2 to 3 years. But I think since he has made a decent amount of money, he could actually book out some, profits out of both these counters. and probably, hold on the balance quantity in both SOBA as well as PFC for the next, say, couple of years. Long-term prospects are good, but I think by this he can actually recover his capital and, make the remaining quantity of stocks completely free of cost. So his margin of safety could increase significantly.
Once again, coming to you, Avinash, why so? Because this counter has been in the news, and I'm talking about Axis Bank, where Suraj is holding 40 shares at a price of 1,040 rupees. Some of the reports suggesting, as well as the stock impact today, that is down about 2%, is on the back that the company is looking to raise some funds for which the management was not in the last con call, and this could also lead to some bit of a dilution. So in the near term, do you believe that there could be some impact because of this? But keeping that aside, for the long term, maybe for the next 2 years, is this a good stock to be in?
Yeah, I think, see, within the private banking space, Shristi, I think Axis Bank has delivered very strong numbers. In fact, most of their subsidiaries as well as the core business continues to do well. I think, see, if you look at this stock, I think banking as a sector is definitely bound to do well once, the new government comes in, we have the new budget. Infrastructure spending as well as corporate capex has been going up. And plus fee-based income, for the bank is also steadily increasing. They are also very strong on the digital side. So I would say that, if you keep a 12 to 18 month time frame, I think Axis Bank should be held on to. Short term, there could be some volatility, but longer term prospects continue to be good.
Right, this one is coming in from Swaminathan from New Delhi. He's holding about 100 shares of Amara Raja batteries from the levels of 744 rupees per share. Kunal, he's been holding this for the last 2 years or so. He's holding it since 2022. Now that the stock has crossed 1,000 rupees per share, he wants to know whether it will actually surpass its previous all-time high levels. Any breakout that you are witnessing? Because there's a lot of news flow actually supporting this price momentum also when it comes to Amara Raja.
Well, absolutely, yes. And I think that's one of the major reasons why you're seeing these stocks coming out of their 6 months or 6 years or I think 8-9 years of major consolidation. So Amara Raja Battery, I think the stock went into a consolidation in 2015-16 or so, and from there the stock has been trading into a very broad kind of a range. So I think it's a good sign that these stocks are coming back into a breakout. We've seen what has happened to Exide, especially in the last I think 2 months or so, 1 to 2 months, where the stock from 300 or sub 300 levels has gone past above 450 levels. So I would expect that this momentum should probably take Amara Raja Battery also on the upside, would suggest a hold.
Alright, Avinash, amongst the power space, any of the two counters that you like at this point, where Satya Veni is looking to invest rupees 4 lakhs in both of these names?
I think within the power sector, I think we continue to bet on Tata Power. I think power generation business is going to do extremely well. Plus, they are now, very aggressively looking at renewables as well as electric vehicle chargers infrastructure as a big business opportunity. So I think this stock can be accumulated on declines. And the second stock is Irida, which got listed this year. I believe, that if you were to look at the renewable energy space, then it's one of the primary, lending agencies. And I think at these levels, if the investor can keep a time frame of at least, 1 to 2 years, I think definitely, a good amount of money and a good risk reward could happen.
Alright, this one is coming in from Tina. Kunal, this one is for you. NBCC, she's holding from the levels of about 90 rupees per share, and NHPC 83 is a buy price. Should she hold on or exit? Her time frame is around 12 to 18 months. She's okay holding on to these counters for that sort of a time frame. What's your take on NBCC as well as NHPC?
See, broadly, I'll be bullish on these stocks, but it's just that, the run which had happened for these names in the last 12 months or so, 12, 18 months, I think we may probably be at a point where these stocks may underperform significantly in the next 3 to 6 months, or at least 6 months and more. So I would believe that if you have a time horizon which is 6 months to 1 year approximately, then it doesn't make sense to continue to hold on to these stocks. At least book out partial profits, into these names, if not more. Today may not be a great day to try and book out partial profits into these stocks because the prices are already oversold. But in case if, say, over the next 1 or 2 weeks, you see these stocks bouncing up by a margin of 5 to 10% higher, then I think that could be a good territory where you may look to start booking out profits.
Alright, but with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
शीर्षासन कहते हैं इसे।
पापा स्ट्रेस कम कर रहे हैं, घर नहीं बिक रहा ना।
बाहर से नहीं मिल रहा।
घर बेचना है तो मैजिक ब्रिक्स पे आइए। यहाँ पे हजारों सेलर्स रोज मिलते हैं लाखों बायर्स से,
ताकि प्रॉपर्टी जल्दी बिके और बेटर प्राइस मिले।
अब आप सीधे हो जाइए।
For a company dedicated to empowering travelers and transforming the way people discover the world, Ixigo is more than just a travel platform. It's also a vibrant workplace that fosters creativity, collaboration, and entrepreneurship amongst its employees. Watch Ixigo as one of India's finest workplaces. Premieres this weekend, only on ET Now.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back to Buy Now, Sell Now, and take a look at the recovery in the markets, because Nifty 50 has also recovered from the day's lowest point that we have been flagging off. But in the last 10-15 minutes or so, there's more recovery that we are seeing happening on both the index. But let's get back to your queries then. And the next query is for you, Kunal, because Jai Ram is looking to invest into a couple of stocks, and he wants your advice that which amongst them is the best for the long term. He has stocks like AB Capital, Sansera Engineering, as well as South India Bank in mind.
So, AB Capital, Sansera Engineering, as well as South Indian Bank. See, out of the three names, I would probably believe that AB Capital is a better, bet, in terms of the chart structure for the stock in the last 6 months or so. Sansera is the other name which is also confirming a breakout for itself. I think the short-term charts have been quite positive. The stock in the last few weeks, I think, has recovered from 920 to 1050 odd levels for itself. South Indian Bank, on the other hand, my concern is the way financials as a space as well as banking as a space has behaved. I would probably expect that the banking stocks may continue to lag or underperform, unless you will see probably the larger cap names, the likes of HDFC Bank, ICICI Bank, trying to pick up pace as well as head towards breakout for themselves. I think that would probably be the the benchmark feature for the Bank Nifty to try and make a comeback, and the private sector banking stocks and the mid-cap end of the banking names making a comeback. So I think I would probably be wait and watch on South Indian Bank, but the other two names, AB Capital as well as Sansera, is what you can look to buy.
All right, this one is coming from Praveen Kumar, who's writing to us from Palakkad, Kerala, and he wants to know whether he can buy Sandhar Technologies for the long term. And one of the theses that he is wanting to bet on this counter, Avinash, is the fact that Elon Musk is likely to visit the country. We are all waiting for that announcement that he's going to make. What sort of an announcement or what sort of meets he's going to take place? So, based on that, you think Sandhar Tech is a good bet?
Yeah, I think clearly, Sandhar Technologies has got a large exposure to the electric vehicle segment. And I think, Elon Musk's visit is definitely very important. I think it's going to create a kind of an opportunity for a lot of Indian, auto component companies which operate in the electric vehicle space. So to that extent, yes, sentimentally, most of these stocks will see a decent upside. In fact, there are many companies like Uno Minda. This is also a very large player in the electric vehicle component space. So I would suggest, that let the water settle down. Let us get some good confirmation, because the company's performance has been quite good, but the stock has jumped quite significantly. So, if one were to buy the stock, I would suggest it's better to buy on declines rather than in a rising trending market. So it's better to wait for a mild correction here, and then I think he can allocate some funds to Sandhar Tech.
Right. Moving on then, and the next query is for you, Kunal. This is from Sitaram Ganesh, and he's holding Dr. Reddy's, and he's also mentioning that now it has broken 6,000 mark. Where's the next support level where he can go ahead and look to add more?
If I'm not wrong, the stock is going through some 5 or 6 consecutive weeks of underperformance, and that is generally very rare kind of a phenomena for a stock like Dr. Reddy, which generally tends to settle after just few days of selling for itself. That generally indicates that maybe we could be at a cusp of a mild reversal further for the stock. The next level of support, for the stock is around 5,750 to 5,500 range for Dr. Reddy. So if you're looking to buy, then keep this range in mind, so that whenever the stock enters into or taps back into this strong support zone, you can look to buy back.
All right, this one is coming from Shubham. He's writing to us from Jammu, and he has 5,000 shares of Sarveshwar Foods at an average price of 10 rupees. I think it's a penny stock. I'm not sure if both of you all track this counter. Kunal?
No.
And Avinash?
No, I don't track it.
Let me skip that query then, and let me take this next one. Is coming in from Balaji from Madurai. And Kunal, this one is for you. 500 shares of Dhanlakshmi Bank at a price of 53 rupees per share, as well as Ease My Trip at 48 rupees per share. He wants to know, can he add some more of both of them in his portfolio right now? What sort of strategy should he adopt for Dhanlakshmi and Ease My Trip?
Well, this is exactly what I mentioned at the start, Cheryl, that this is a very good time to try and buy large cap stocks rather than betting on these mid cap stocks. Mid-cap, small-cap names, because when the market gets into such kind of volatility, large-cap stocks are the ones which tend to shield from major part of the market correction. And we also look at this way, that these large-cap stocks are not available at a premium; they are available at a significant discount. They are trading at lower end of the support territories for themselves in terms of relative price action. So I think in all scenarios, I would probably suggest that if you're looking to deploy your additional capital, don't look to average these stocks, but look to add quality to your names.
Right. Moving on then, and Avinash, what's your view on Sterlite Tech? Poonam from Punjab is holding 250 shares at a price of 156 rupees.
Longer term, I think looking at the kind of 5G rollout and the big opportunity present there, Sterlite Tech is one of those companies, which is a fully integrated player in the optic fiber space. The business is lumpy, but they have a large order book to execute over the next, say, 12 to 18 months. I would suggest that, if the investor has got at least a 12 to 18 month time frame, then only one can look at it, because most of the negatives are in the price. I think prices of optic fiber now globally also have started moving up. And I think with a large 5G opportunity in India, definitely Sterlite optical, technology should do very well. But I think you need to give in a time frame of at least 1 to 1.5 years here.
Kunal, this one is coming from Sunny. This one is for you. He wants your short-term to medium-term view coming in on IEX. He has 1,000 shares of IEX at a price of 150 rupees per share. He wants to know at what price should he look to average this counter, and the other one is, should he look to buy Clean Science right now?
See, there are 2 points for IEX. One is that the stock is, of course, in the thick of a lot of news flow, and that I believe makes the trends a lot more unsustainable for IEX. But when I look at the charts, I would probably term this as just another stock. And in case if the stock breaks past about the previous resistances, I think 170 approximately is the major resistance. 160 is the first major hurdle for the stock price. So these are the 2 levels where you can look to buy. Say if the stock crosses about the 160 mark, you can look to add some quantity, and the degree of confidence could be much higher once the stock scales past about the 170, 175 hurdle for itself. So I would suggest that keep these 2 levels in mind.
All right. The next query that I have, Kunal, is also for you. Jose from Coimbatore wants a short-term outlook on Shriram Finance. His buy price is 2,450 rupees. In the short term, the stock is expected to recover some bit, or should he go ahead and book loss at this point?
I think 24.50 is what you've bought. Then I would probably suggest keep a stop loss of 22.70-75 for the stock on closing basis. This is where the stock had taken a bounce back even last time around. So it's a very high quality kind of a financial services name, but it's just that because of the recent market correction, it's possible that these stocks may also tap back to their strong support territory before they bounce back and start off an uptrend. So I would suggest keep a stop loss and then hold on.
All right, I believe we have an issue when it comes to our line graph. So there you go. It was Shriram Finance that Kunal was talking about. Let's move on. Then let's talk about the query coming from Anant Nayak. He's writing to us from Bangalore. Danseri Ventures is a counter that he wants to know whether he should look to buy currently at current price. He is already he had already purchased it at around 85 rupees and sold at 132 rupees per share. Danseri Ventures, Kunal, have you looked at the charts for this one? Because given the fact he's already exited, do you think it's a good bet to re-enter all together once again?
Not really. I don't track the stocks, Shell, so I'll probably refrain from commenting.
And do you think GM Breweries is a good one to buy right now?
Yeah, I think GM Breweries could be a good bet. In fact, one of the stocks which I've been consistently advocating over the last few weeks has been Som Distilleries from the same space. Radico Khaitan is something which has given a breakout or is on the verge of a breakout for itself. So which means that the entire sector is now going to a second leg of breakout for itself. I would suggest that you can look to buy GM Breweries, and if possible, if you're looking to create a portfolio or a basket of stocks, for example, from the liquor space, then I think I would probably recommend even Som Distilleries as well as Radico.
All right. The next query that I have, Kunal, is also for you. This one is specifically coming for you from Prathna. Is this okay to buy a Ujjivan Finance at current market price, but for a long term?
So Ujjivan Finance, okay. So I believe, I think it's a very good chart. In fact, I was looking at the stock in the morning when it had moved up some 3-4% up move. It shows a lot of strength every time the market gets into a high degree of volatility. The stock has relatively been a lot more stronger performer in the last 1 to 2 years. Yes, in the last 1 or 2 months, the stock may have corrected more from 600 levels to maybe sub 500 mark, but then largely Ujjivan is something which I would probably believe that you can continue to hold on. So I would suggest hold on to Ujjivan, which is a stock which is trading now closer to 550 levels.
All right, so it is Ujjivan Financials, that's the parent company, not the small finance bank that Kunal was just talking about. Moving on, let's take this next query that is coming in from Gautam from Mumbai. He wants to invest in artificial intelligence based stocks in India. He's asked for recommendation from Kunal, but I'll take it to you, Avinash. Given the fact that it is a niche space, or rather a space that is still developing, any counters that come to your mind involved in AI or chips that one can look at for the longer term in order to invest in it?
As of now, there are not many companies which are into semiconductor chips, Cheryl. But I think clearly, I think if you were to look at AI or, the digital embedded business, then I think LTTS, which is a part of the Larsen & Toubro family, I think that is one company where possibly one can take an exposure for the longer term. I think it is one of those companies which is doing extremely well. So I think L&T Technologies is something where possibly, the investor can look at, doing a SIP if he's got a 2 to 3 year kind of time frame.
Right, moving on then, and Avinash, once again, a query coming in from Parag from Vadodara, and I'm not sure whether you tracked this counter or not, but this query is on Rishi Roop Rubber. He's been writing to us like almost daily to have a take on this one, since he's holding 2,000 shares at a price of 136 rupees. Any view on this stock? I'm not sure whether we have this stock as well to share the price that is currently trading at. Rishi Roop Rubber, Avinash, any view on this one?
Actually, just even I don't track it actively, so I won't be able to give you a fundamental.
Let me move on then. Let me take the next query. This one is coming in from Kumar, who's writing to us from Mysore. And he has BPCL at a price of 444 rupees per share, about 1,000 shares of BPCL in his portfolio. Kunal, hold or should he look to book profits in this particular counter? Because yes, let's not forget that along with the PSU pack, OMC started rallying much later. But now it is all dependent on what's happening in the international crude market, isn't it?
Well, yeah, I think that will probably continue to be a part of play for BPCL and the oil marketing companies. But when I look at the charts for the stock, there's nothing exciting in the last 2-3 weeks for the stock. It's been trading into a range. Yes, the stock has done pretty much well for itself from mid of 2023 when it was sub the 350 mark towards the point when the stock had crossed 650 levels. But I believe that larger part of the rally is now behind us. What we are now likely to probably foresee for these stocks would be more of a time-wise grind and as well as a price-wise consolidation. So again, as I said, not to sell at current levels, but in case if you see a bounce and the stock coming back to 600 levels, that would be a good point where you may look to book profits.
Okay, moving on, and Avinash, the next query is coming in on Tube Investments. This counter has given great returns to the investors, and Lakshmi Narayan wants to know that is there still opportunity left in Tube Investments? Good time to enter for the long term?
Yeah, I think, looking at the fact that this is a very quality play within the engineering, sector, my sense is that over the next, say, 1 to 2 years, the company has stated that they will be launching several new products. Plus, within the existing vertical, they have large exposure to engineering, automobiles. So I think, longer term, definitely prospects look good. Of course, in the short term, the stock will remain range bound. But if one were to look at the next 2 years, then I think one could definitely look at adding it to its portfolio. One could definitely expect a very decent risk reward. But yes, the time frame has to be slightly longer term.
All right, that's the take coming in on Tube Investments. On that note, we slip into a break on this edition of Buy Now, Sell Now. But let's talk about Federal Bank. Before we do that, they are going to expand their operations overseas as the company has received, or the bank has received, the RBI approval to establish a representative office in Saudi Arabia. The nod is subject to further regulatory approvals from the relevant authorities in Saudi Arabia. But this is one of the big feats coming in for Federal Bank, so a stock to keep on your radar.
Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust. In association with State Bank of India, the banker to every Indian.
Which I feel inside. Hold me tight, just hold me tight.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal. Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Get ready for a groundbreaking journey into the future of retail as we deep dive into the visionary mind of Prakash Patel, Managing Director, Bhumi World, a veteran in the industrial B2B development, as he unveils the thrilling concept behind creating an outlet mall experience that's set to redefine the retail landscape.
We are the biggest industrial park developer for SME in India right now. That people need a brand, people want to wear the brand, but in a good reasonable price. So for that we have surveyed and everything, and we have created a factory outlet mall which will give you a discount 365 days.
Don't miss out to watch this special episode exploring Bhumi World Factory Outlet. Only on ET Now.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're watching Buy Now Sell Now on ET Now. Steady recovery underway when you talk about the benchmark indices, 0.7% uptick coming in from the day's lowest point. When you talk about the Nifty index, let's take a look at Bank Nifty and let's see what exactly Bank Nifty is doing at this point in time, because Bank Nifty anyways was faring much better than benchmarks, and there you go, almost near the day's highest point for the Nifty Bank, 0.9% uptick from the day's low. Broader markets also, like I said that earlier also, that almost a percent recovery from the day's lowest point for the mid-cap index as well as for the small-cap index. So yes, that recovery that we were hoping to creep in looks like it is actually gaining momentum right now when you talk about the broader markets, benchmark indices, as well as Nifty Bank right now. Smart recovery coming in for the benchmark indices. Let's take a look at what Sensex is doing, because right now Sensex is only trading lower by about 0.3%. This as against almost 0.9% up downtick that the markets registered at open. But let's move on and let's continue taking all of our stock related queries. Then this one is coming from Anusha, writing to us from Karnataka. She has 20,000 for investment right now, Kunal, and she wants to invest only for a period of 2 months. Which stock do you think is the best stock to look at for a period, even if it is for 2 months?
That's a very, very short-term time horizon, and given the way the markets are, I think it'll be a bit more riskier. But I'll probably take my chances over here. I would recommend something like City Union Bank at current levels. I would believe that the stock looks fairly attractive even at current juncture. Mahindra and Mahindra from the large cap space, that's a stock which looks fairly poised for further continuation up move. So you can look to buy these stocks. Again, very difficult given the way the geopolitical news flow is surrounding the markets as such, but then I'll probably stick to these two names as of now.
All right, moving on then, and the next query is, let me take it from you, Avinash. Any view on Astra Microwave as well as Azad Engineering? Are these good bets to enter? And if yes, then is this a good price to enter as well, or one should wait for some dip and then enter in these counters?
No, I think both the companies, you mentioned, Shristi, are good names, Astra Micro as well as Azad Engineering. I would suggest that, if the investor wants to buy, then I think he needs to wait for a mild correction, because both these stocks are actually elevated quite significantly. Astra is into the defense space and Azad is into specialized engineering kind of, sector. So I think both these companies have done remarkably well in terms of their top line, in terms of their profitability. The order book also is pretty solid for both these companies. So I would suggest that, maybe the market corrects a little bit. I think at lower levels, I think the risk reward would be better, but not at the current valuations.
All right, this one is coming from Kaval. He's writing to us from Dubai and he wants to know about Welspun Living, 157 rupees, buy price is 157, around 240 shares in his portfolio, and EPL 190 is a buy price for 250 shares or so. Kunal, Welspun Living as well as EPL, how are the charts looking for this particular counter? What sort of a strategy should Kaval use?
Well, again, very docile kind of charts, because these stocks have gone through a very flattish kind of a trading range. Of course, the range is a bit broad, but then when you look at the trends, there's nothing meaningful which is emerging. The indicators have flattened out for Welspun Living. Even for EPL, the stock is now trading closer to 177 mark. Welspun Living, if I'm not wrong, is now trading closer to 140-45 odd range. And when we look at the charts for the last 6-7 months, there's nothing exciting on the charts which probably warrants any kind of a major buy, contra buy, or even a breakout. So I would probably suggest to avoid these two names and not to buy in case we are looking to buy the stock. So in case if you are holding, just continue to hold on.
Kunal, once again coming to you, Rohit from Pune has written to us and wants to know, is this a good time to enter L&T for the short term?
I think it could be a very good time to try and buy the stock because, very rarely you see stocks like L&T going into a 10% correction from 3800, 3850 mark. The stock has come back towards 3500 levels. Now, this could be a very good entry point for a stock like L&T because we rarely see these kind of 10% corrections for the stock, and historically these have actually been good points where traders would have looked to accumulate further or look to add quantity in the stock, bounces back to try and come back into a strong uptrending mode. So I would suggest a buy.
All right, that's the take coming in on that particular counter. But with that, let's kick start with the rapid fire then. And the first query that I have is coming in from a viewer, John Simon. He wants to know about Adani Power. How does this particular stock look to you on the charts, Kunal?
Well, not attractive. I would suggest to avoid the stock as of now. In case if it dips down towards 500, look to buy.
Alright, Avinash, what's your view on Tata Elxsi? Because V Venkatesh has bought the stock at a price of 987 rupees. He has 107 shares. After phenomenal profits, good time to book out or continue to hold?
No, I think he should book out 50% and the rest he can hold on. I think this is also a very niche player in the IT space. And I think considering the kind of order book and the kind of traction which the company has shown, long-term prospects appear to be quite good. So he can hold on to the balance quantity and book out a part of their stocks.
Okay, Ramesh from Hyderabad wants to know about Asian Paints, 140 shares at a price of 2,852 rupees per share. Kunal, what's your short-term advice?
Continue to hold on as of now.
Okay, Kunal, short-term view on SJVN. Srinath is holding 1,000 shares at a price of 150. Cut loss or hold on?
Yeah, I think you should look to exit.
Sudeep from Mumbai has Delta Corp at 165, Burger King at 150 rupees per share, making loss in both of these counters. Avinash, what's your take? Stay put with them for the next 1 year or look to exit from both of them?
No, I think both the stocks can be held on. I think Delta Corp, I believe that post-elections we could see some good announcements, from the government. And I think, the other stock which you mentioned also within the QSR space, I think things have started looking up quite positively. So I think for the next 6 to 12 months, continue to hold on.
Okay, Avinash, after the results, good run up on Just Dial, and Raghuram is holding 20 shares and his buy price is 725 rupees. Good to book out profits or continue to hold?
No, I think he can book out profits. I think it's a good 30% move and that too in a very short period of time. So I think he could exit and book out profits as of now.
Kunal, this one is coming from Venkat Ramani. Piramal Pharma 760 shares at a price of 122 rupees per share. Stay put with this add some more for a period of about 2 years. Piramal Pharma.
Continue to hold on.
Okay, Kunal, lastly, Alok Mange is holding SBFC Finance, 6,000 shares bought at a price of 86 rupees. Is that a hold or sell?
Hold as of now.
Alright, with that we come to the end of the rapid fire as well as the query segment. Thank you so much Avinash as well as Kunal for joining us on the show, and thank you Kunal for the Buy Now Sell Now Pathshala edition as well. With that, viewers, we come to the end of this week's edition of Buy Now Sell Now as well. So it's a goodbye from Shrishti, myself, our producer Shreyansi Anjali, as well as our director Santosh. Thank you so much for watching.
बड़ा दोस्त हो राहों में तो चलो अपने ताव में।
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
India is the world's fastest growing economy. You hold the future of India's growth in your hands.
AI will not become a master, it is actually a perfect slave to those who control it. So if we surrender completely to AI and not question, then we'll become slaves to those who control AI.
Our organizational culture is really founded on the principle of our purpose, which is to refresh the world and make a difference.
What energy!
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Dulux Weather Shield Power Flex.
इसका हर रंग लड़े धूप, धूल और बारिश से.
It's colorful. It's powerful.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Indian markets are going to be taking a booster shot.
Hi, good morning. You're watching the market right here on ET now.
Indian markets are at an all-time high. You would really pinch yourself to say, is it this all factors align wonderfully well for us?
Nifty is now up a staggering 2,000 points. That impacts the market like no other. Stocks on the editor's radar. The strategy is going to be for the day.
It just starts coming up on your screen. There's a lot of green on the screen today.
Hello, good afternoon. You're watching Markets at Noon on ET Now. I'm Vinny Motiwal. Along with me is Ajay Sharma as well. Ajay, a very good afternoon. Today has been a bit of a subduedness that we saw coming in the starting, then a recovery, and Reliance right now is leading that recovery, at least for the benchmark.
Actually, first of all, no, it was not a very bad opening as we were expecting. At 8:30, we were looking at almost 200, 300 point cut on the SGX 50. But by the time the market actually opened, it was a shallow dip. And to a large extent, that dip was actually bought. Look at the recovery. Not only show the intraday Nifty first, then we go to Bank Nifty intraday and intraday small cap and the mid cap. See, from 950, 916 dip, there's a very sharp recovery coming in, and we are almost just about 70 points lower now. It appears in the second half. Won't be surprised if we recover fully. Bank Nifty also breaking into green, small cap, mid cap as well. So very mature reaction. Clearly, the market knows that this is not a full full-blown kind of a war-like situation. It was more of a posturing actually, and that is why the dip was bought. And a lot of stocks actually in the F&O gainers, if you look at, stocks are doing well. Look at Indus Tower, they are doing well. Some of the banking names like HDFC, etc. have come back. So it's a pretty decent kind of a day which is panning out, at least in the last half an hour, 45 minutes. People were scared between 8 and 9 a.m. People were scared that if it gets escalated, then a lot of forced selling will come. That wasn't the case. Reliance also, yes, you're right, 10:30 onwards, sharp recovery coming in Reliance as well.
But Midcap is not managing, Ajay, when you're looking at it today, mid and small cap, that broader market seems like it's a bit more under pressure today than the benchmark indices as of now. And
the recovery is slower, I would say. There is a recovery there as well, but not in the same proportion as the large caps. Yes, you're right about it. Large cap which is the stronger area. Mid cap, small caps are relatively less, kind of strong. But let's take the discussion forward with Dharmesh Shah, who's joining us now from ICICI Direct. Dharmesh, morning, afternoon rather. Thanks very much for your time. Dharmesh, first of all, how did the setup look? Did it look like there was a breakdown in the first place, or you were kind of already getting a sense that today's dip will be bought? And what are you recommending your clients today after looking at the price action which has happened in the first half of this session today?
Yeah, good afternoon, Ajay. Yes, definitely, I think so. In the morning, it was a very panic type of situation where the Singapore Nifty was suggesting it down about 300, 400 points. But we did, I think so, if you look at the history, go back to the history, I think so. Because clearly, I think so, when such events comes, once the anxiety gets settled from such events, market generally has a tendency to move towards the primary uptrend. We believe, I think so, once this anxiety gets settled down, maybe in the one week of today, we believe things should get settled, and 21,700, 21,600, like in the last month low, should hold in the.
Okay, 21,700, 21,800 should hold. So that is the point. Now the data is coming in. 350, 330 points Bank Nifty recovery. Small cap, mid cap also recovery will come up. What are your top ideas right now? Stock ideas?
As far as stock ideas are concerned, Ajay, we remain to be structurally positive for Reliance Industries. Now, Reliance is again a pure proxy play of oil and gas and telecom. Both. We believe, I think so, is stock, after witnessing a sharp move from 2,800 to 3,000, has been consolidating the strong bull candle for a long time. We believe once the things get settled in market, we should see a primary uptrend for Reliance, where Reliance can look for target of around 30,050, keeping a stop loss of 2790. Key point to highlight for Reliance is, if you look at the trading pattern, it has been holding its 50-day exponential moving average for a long time, and multiple times it has given a buying opportunity along those levels. So we believe, I think so, in the current context also, Reliance should hold its 50-day exponential moving average, and we should be looking for target of 3,050 for Reliance in a stop loss of 2790. Second stock which we like in the defense space, the PSU is BDL, Bharat Dynamics. Now, if you look at the Bharat Dynamics chart, the stock was been consolidating for the last 5 weeks in this range of 1730 to 800, and 5 years which strong
break.
So 1750. We remain to be positive for Reliance and BDL the near term.
Okay, Dharmesh, thank you so much for joining in with us. I think we're connected on a bit of a patchy line, but thank you for your views as well as the stocks that are looking interesting to you right now. Thank you so much for that. But yes, there are a lot of other stocks that have been moving in trade as well. Industries has continued to gain for last 3-4 trading sessions. We have Tata Communications, which is in focus as well. After the brokerage notes that have come in this morning, we're seeing a bit of a fall that's come in for Tata Communications, among the top F&O losers today. TVS Motors too in focus on the back of a brokerage note that we had from Citi, where they're maintaining a sell for the stock. They've opened a 90-day negative catalyst for TVS Motors. So yes, a bit of a pressure coming in there. Another stocks that one should watch out for, we have Grasim Industries that's actually managing to hold on, Escorts, Kubota that's managing to hold on as well, and ONGC in the oil and gas space that's managing to see some bit of a gain today. But let's move on, talk about Axis Bank. Now the private lender is actually in focus on the back of the news that the bank might be going in for an QIP. What does this mean? And let's go across to Gaurav to get in more details of this as well. Gaurav?
Well, yes. On 24th of April, Axis Bank is going to hold its meeting to discuss its Q4 numbers. But at the same time, in this exchange release, they have also said that they will be evaluating the potential QIP during the meet. Now, what has happened is that this is actually a surprise for investors because during the 3Q call, they had categorically denied that there won't be any need for the capital raise, at least for the 12 to 18 month. And now that the QIP is coming up, this could be a surprise for investors. Apart from that, there is another trigger that CEO's current term, the current CEO's term is going to end on December 2024, and the clarity on the extension is still awaiting from the management. Now, if you look at analysts' view, they believe that the QIP announcement that the Axis Bank has given is actually could be an enabling provision for capital raise, which is a normal case when it comes to a starting of new financial year. And there will, if you look at the previous data, there was no enabling provision for QIP in the last year's meeting, and that is why analysts are not a bit surprised because of this move. But if we look at the stock performance, it is down almost 2% in days trade, and if you look at the stock performance, it is down almost 8% in the last 5 days as well. So definitely keeping an eye on what happens in the Axis Bank's meeting.
Surely, Gaurav, thank you so much for that. But like Ajay, I was saying Tata Communications, that's a stock that's come into focus, and we're seeing a sharp fall that came into the stock today. Numbers were not that exciting, but what they said, that the investment was going to be high. So because of that, obviously the margins were going to see a drop. Brokerages have downgraded the stock. ICICI Security downgraded the stock. We spoke about it before as well, that Kotak is actually maintaining a sell. But what more did the management actually have to say? That's going to be interesting to hear out, because the commentary is going to be key in terms of the margins, and anything change in terms of expectation of growth is something that we're keeping an eye out on. So let's go cross and listen in.
There is a drop, but I would say largely it is going by design. We are in a mode of investment. When we called out our strategy to double our revenues, we said that we need to invest in the markets with people on the ground, invest in marketing. As an integrated unit, the media business will turn profitable. And similarly, Kalera integrated with our erstwhile Digo and InstaCC platforms, which is what we call as a customer interaction suite, that will turn profitable this year. Our strategy very clearly is to improve the margins in this coming year. I don't want to comment on a quarter-on-quarter basis, but our strategy when we acquired these companies is to deliver on the synergies, to deliver and make them profitable, which means that our overall company profitability will go up. That is what we will be working on.
Okay, on that note, let's just slip into a very short break. We do have Motilal Oswal that has consider his bonus issue on 26th of April. That's keeping the stock up as
3%,
yes.
But the retail always gets excited about the bonus issue. But the stock has run up quite well right now. We'll take a short break, come back with very interesting management's also joining in. Anthony Wace will be joining us, and Mr. N.G. Subramaniam, the group CFO. So don't go anywhere.
Powered by BSC. Invest right to future bright.
Co-powered by Ashok Leland. कोई मंजिल दूर नहीं.
Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust.
In association with State Bank of India, the banker to every Indian.
Indian markets are going to be taking a booster start.
Hi, good morning. You're watching the market right here on ET now.
Indian markets are at an all-time high. You would really pinch yourself to say, isn't this all factors aligned wonderfully well for us?
Nifty is now up a staggering 2,000 points. That impacts the market like no other. Stocks on the editor's radar. The strategy is going to be for the day.
Will just start coming up on your screen. There's a lot of green on the screen today.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
An actively supportive workplace empowers women and strengthens the organization itself. To honor organizations that prioritize the best workplace culture for women while empowering female employees and fostering a steadfast commitment to gender equality in the workplace, Times Group presents ET Now Best Organizations for Women 2024. The conclave celebrated organizations pioneering a future where every voice, especially women's, is not only heard but deeply respected. They're not just breaking barriers, they are shaping a world where inclusivity thrives. Watch the episode at these times only on ET Now. Brought to you by ET Edge.
God, इतना पानी आ गया है पापा जी बारिश हो रही है वाह छत टपक रही है
अरे शिफ्ट करने वाले ना पापा बस घर मिलने की देर है
तो देर ज्यादा ही नहीं होगी
हेलो यू घर है इसकी शादी नहीं कि बिना एडवाइस के डिसीजन ले लिया
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं
गुड तो एटलीस्ट मेरा घर तो लाखों में एक होगा
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
टाइम्स नाउ नव भारत दे रहा है सुनहरा मौका लाखों के इनाम जीतने का। देखेगा नव भारत जीतेगा भारत कॉन्टेस्ट। आसान से सवालों के जवाब देकर आप जीत सकते हैं कार, बाइक, आईफोन, लैपटॉप और शॉपिंग वाउचर। देखो, खेलो, जीतो। टाइम्स नाउ नव भारत पर।
Alright, so in focus is Anthony Waste. NG Subramaniam, Group CFO of Anthony Waste Handling Cell, is joining us now to talk more about the way forward and obviously the Q4 business update. In this kind of market, the stock is in the green. Pull up the last 1 week, 10-day, 15-day, 3 months chart. Also, it will come up. Mr. Subramaniam, talk to us about what led to this rise in revenues. And we are observing that last few quarters, there is a very good order flow coming in your way. Talk to us about how the momentum is building.
Good afternoon, Ajay. We are in municipal solid waste. So as and when we back the contracts, we definitely show up a stronger revenue growth. So over the last 3-4 quarters, the company has been diligently working on executing the contracts that were bagged just after COVID season. So let it be Panvel, your Pimpri-Chinchwad waste to energy project, your Nasik project. These were the large CNT and the waste to energy projects that the company had bagged. And we have started commercial exploitation of the same. So that is why you're seeing a good traction in the core revenue growth. For FY24, I think a 17% core revenue growth has been reported, and that will build on the order book. I mean, we are exiting FY24 with a unexecuted book of around 8,200 crores. So that kind of gives us a significant revenue visibility, and these are like an annuity model for us.
Okay, NG, you started sporting a big beard. I could barely recognize you.
True, I saw you for the first time. I'm like, okay, this is it.
Clearly, good to see you, man. Good to see you. Well, NG and I go back a long way. At one point in time, NG was our colleague as well. NG, you've been working in this waste management is a huge area, right?
Yeah.
It's a huge problem to be served in a big fashion, but very few companies, one of them of course is yours, is really taking it head on because the size of the problem is so enormous that perhaps it will take thousands of companies such as yours to actually, bring it completely under control. How's your runway looking like? I'm talking, I want to view from you beyond the Q4, as in quarter to quarter kind of yearly kind of a view. I want to talk about Does it look like a juicy, long runway of opportunity for you when you guys sit and formulate your strategies on a longer term?
So, Ajay, let me take you a decade back. In 2010, 2014, I mean, we were around a 200 crore kind of a company working with smaller projects and stuff. And over a period of a decade, we have started concentrating on larger cities where the waste management is a bigger problem. We also have a huge legacy problem of waste getting accumulated in dumping grounds. So that's another big problem which the society faces. So the government over the last decade has seriously started channelizing its focus in finding operators and companies like us to kind of provide a very judicious proposal wherein the waste can be processed, not just collection and transportation, but also processing of the waste. Like almost 70 to 80% of Mumbai's waste is getting processed either in the form of compost or refuse-derived fuel and generation of power and recyclables. That's the way any city, any urban local body has to move. Approximately 43% of the state capitals today are not privatized. So that kind of gives you a huge potential for the business opportunity. We at Anthony are managing around 12 to 14,000 tons of waste a day. That is just going to scale up. I mean, that's just less than 5% of the reported tonnage of waste that is generated in the country. The potential is huge. You need to be selective about the kind of clients that you work with. Since it's a B2G kind of a sector, you need to be very selective in the kind of clients that you want to work with, the kind of technology that you want to offer. And these are long-term contracts, right? So you don't want to get your math wrong. Just for the first 2 quarters numbers looking juicy on an Excel sheet, you will want to be very careful about the kind of costing, the kind of work, the kind of process, and the kind of deliverables that needs to be provided to your client. Over the last 2 decades, I mean, Anthony has been able to work towards with various municipalities. Like we worked with Varanasi, we worked with Navi Mumbai, Delhi, Noida, Nagpur, Nasik. These are just to name few, and we have been able to improve the Swachh Bank rankings consistently. We are number 1 in the Ganga linked cities. Varanasi stands number 1. Navi Mumbai stands number 1 in the state of Maharashtra in the population category. We are working hard to improve Noida, Nagpur rankings. So that is how we as a company are trying to improve the livability index of the cities where we work.
Right, Mr. Subramanian, this is Vinny joining the conversation as well. Good afternoon. And, I also just want to know a couple of things in terms of the recent, the merger approvals that have come in for the company. So one, could you elaborate a bit more in terms of the rationale behind this merging? How is this going to help the company in terms of what is the value unlocking that you would see, or how does that actually work for the company?
Definitely, Vinny. Thank you. So Anthony Waste has multiple subsidiaries with various experiences. So, I mean, 3 of the wholly owned subsidiaries are getting merged into one wholly owned subsidiary, wherein the single subsidiary will then have an experience of not only mechanical power sweeping, but also of collection and transportation of waste. So if any client wants us to come and bid for a project, we have a bouquet of services that we can now offer. So that was the main reason why we put all our services into a single bucket, and we are able to have a super strong technical qualification. One. Second is also eases a lot of compliances. Being a listed company, I mean, with 9 reporting companies, I mean, it doesn't make sense. I mean, we like to kind of make the company much more transparent, much more organized, and it's easier from the compliance perspective as well. And more importantly, these companies were formed when the income tax were slightly preferring the infrastructure services by giving them Section 80IA benefit. Now that benefit is anyway accrued out, and now we are in the new tax regime. So that it doesn't make sense for us to have multiple subsidiaries to continue.
Just one more thing, I want to know, obviously in this biomining segment which is there, how big is this opportunity? How do you see it changing, and the traction that's coming in from here in terms of more orders or inquiries that is there?
Definitely. So biomining, we did the first contract in 2020-21 when we bagged the Greater Noida biomining, where we mined around 1.2 million tons kind of a waste. So definitely the potential is very high, because if you go to any city, I mean, I'm not just talking about tier 1 city, but let it be tier 1, 2 or a tier 3 city, you are seeing a huge amounts of garbage which is just being dumped around. And cities are now growing around the dumping ground. So these waste has to be, these are sore spots. So we need to kind of get rid of these waste. So that's where biomining comes in, when historical legacy dumping grounds are cleaned up, the land is excavated, the waste are segregated, anything which is of remedial uses can be remediated, anything which is having a biomaterial use can be used as a soil conditioner, and the land is given back to the urban local body for further utilization. They can set up a professional scientific waste processing site, or they can do whatever they want with that new land. Land is expensive, land is premium, and the city is now growing, so they don't have enough space and the waste needs to be processed. So biomining as a segment is going to be there for the next at least a decade and a half, because take any city, and let it be Indore, Surat, Ahmedabad, Chennai, Bangalore, you name it, they have huge mountains of waste, which is there. So that is a big potential for us.
NG, before we let you go, so now you're seeing so many potential areas of growth. You're being very careful in choosing whom you work with. What are the targets you've set for yourself? We are also at the start of the new financial year, winding up 24. For next 2 to 3 years, what kind of profitability or top line targets that you're setting for yourself?
Right. So as we get into FY25, we already have 2 contracts that we have already bagged. The work is going on. That is the construction debris waste processing at Mumbai, the western suburbs of Bombay. And the second would be our Sidco biomining project. Now, these 2 will start giving me hardcore revenue in FY25. We will also be bidding for new projects with the election and everything out of the way in the next 2 quarters. Maybe by October onwards, the corporation will be back in the action of granting new contracts to waste management companies. So looking at the current scenario, looking at the fabric that is we can see and we can kind of look at, 20 to 25% CAGR growth on our core operating revenue is something that we are confident to achieve. The debt equity ratio for the company is pretty much good for us. It's like less than 1 at given point of time. So we can definitely leverage when we get good projects to bid for and bag for. So a CAGR growth of 20-24% is something on cards over the next 4 to 5 years. Profitability will be maintained at an EBITDA level of around 21 to 24%, depending upon the kind of contracts and the mix that we get. So those are the numbers that we are kind of batting for.
All right, NG, we'll let you go on that one. Thanks so much for joining us. Good to see you once again.
Thanks a lot, Ajay. Thank you.
Okay, bye. Let's move forward and address one of the important developments which, kind of scared the hell out of the market, at least momentarily at opening, I would say. And of course, the first hour of programming. And that was the Middle East, some action, reports of action over there, whether it gets escalated from here or not. But there is definitely focus out there, a lot of news flow coming in. And let's understand what exactly is happening there with our colleague Srinjoy joining us. How to read the news flow right now? What would it mean for markets like India? Srinjoy, please tell us.
Yes, first of all, were these attacks by Iran on Israel, about 300 drones and missiles. Now, Iran had warned the Israelis in advance, saying we are going to do this, which is why it was easier to probably intercept all those missiles and drones. About 99% of them were intercepted or shot down. Then, of course, it was then the Israelis have struck back. And as you know, as you said rightly, they have attacked Isfahan. Now, the thing is, it has struck very close to an airfield. It has struck close to an enrichment facility. All of that is known. What happens now is the big Iranian government and, of course, the Israelis. First of all, we don't know how things will pan out. Are the Iranians going to strike back? Then if they strike back, the Israelis will strike back again. So this could go on, and it could only get worse. That is, of course, one scenario. The other is, of course, yes, the Israelis have struck. They have made a point. Before that, the Iranians had struck. They had made a point. So if both sides have made a point, then is it necessary to make more points? That's the one issue. Now, how the world will see this, what the world will do vis-a-vis the UN Security Council and all that, we do not know. At this point, things are difficult enough. The war between Ukraine and Russia has been going on for over 2 years. Then, of course, beginning with October, 7th of October, the Hamas strike against Israel. and the deaths of many people, including civilians, women and children and so on. Then the Israeli attack on Gaza, and about 33,000 people have been killed. Many are children. So it's been a lot of casualties in that area. Now this Iran-Israel thing has actually hotted up. Things could get even worse, but let's hope that sense now prevails. Both sides have said, could have said, or may say that, look, we've made our point, and then things get a little cooler. We don't know what will happen. We don't know whether the Iranians will strike back or not. We don't know what the Israelis will do if there is another strike. So now we will have to wait and see how much damage there is and what the next step by Iran and by Israel will be.
Okay, thank you so much for that update that is coming in on the Iran-Israel front. And obviously, they made their point, is what Sanjay is saying as well.
I love it the way he puts it, that both the sides have made a point. First, there was a point made. It was more posturing. Now the point has been made from both sides. It should be business as usual from here on. Should not be any escalation. And that is what Nifty is also breaking into green.
So the point is made, and Nifty wants to make the point that I'm going to come back to the green now.
Opening dip was bought, so point has been made.
Absolutely. Good recovery, right? We're seeing a % recovery from the day's lowest point. Look at the movers also that we have today. HDFC Bank, ICICI Bank, ITC. All of them among the top contributors for the Nifty 50. Let's look at just what the mid and small cap is doing. You know, obviously we saw the benchmark indices coming back, but is the pace of recovery for Nifty mid cap and small cap also picking up? That's something to watch out for. Yes, but not on the green, but yes, inching towards that at least a small cap. And mid cap still far away, but making that recovery. But that's what is coming in, recovery as of now. We're keeping an eye out on that. Don't go anywhere. We'll give you all more updates after this very short break.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
Elastic Run, an organization sparking a quiet revolution, reshaping consumption as well as distribution, and is dedicated to transforming lives across the landscape of India, where employees are not merely contributors, but integral partners in the journey of societal transformation. Watch Elastic Run as one of India's finest workplaces. Premieres this weekend, only on ET Now.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Your issues become our agenda. From airfares to government high-handedness, we voice your concerns and demand answers for your questions.
4 से 5 घंटे की बिजली कटौती हो रही है। टिकट बहुत दिक्कत हो रही है मैम।
Because we believe in fighting for what is right. Mirror now, you first.
Welcome back. You're watching Markets at Noon on ET. Now, let's move on. And what we're learning from our sources that Consumer Affairs Secretary has written to the food regulator, that's FSSAI, in the Nestle baby food case. Now, Sameer Dixit is joining in with us. We've seen the Nestle stock actually yesterday saw a sharp fall also after the issues came in that the baby food had higher content of sugar. And that's something that was concerning. So, yes, let's go across to Sameer to get in more details. Today also the stock is down, but what did they write in the letter? Sameer is joining in with us.
Serious allegations have been raised against Nestle. According to Public Eye, a Swiss investigative organization, and IBFAN, International Baby Food Action Network, they sent samples of baby food item of Nestle to a Belgian laboratory for examination, and these baby food items are being marketed in Asia, Africa and Latin American nations. And in the examination, in the result, it has been found that these baby food item contained added sugar, whereas the same product, the same baby food item, if marketed in European or American nation, then no such added sugar was found. For example, Cerelac, a baby food item, if marketed in India, then it contained added sugar of around 3 grams per scoop. The same food item, if marketed in Ethiopia, then it contained added sugar of around 5 grams per scoop. And the same item, if marketed in Thailand, then it contained added sugar of around 6 grams per scoop. So these sort of allegations have been raised. Interesting point is that the same baby food item, if being sold or marketed in a European or American nation, then no such added sugar was found. So on these sort of allegations, we raised query to Nestle India and they have responded. Nestle India mentions that they constantly review and reformulate the baby food item, the various variant. In addition to this, Nestle India also mentioned that they have reduced around 30% of the added sugar in the past 5 years. So they have been constantly reviewing and reformulating the baby food item, the various variant. But if you see the larger picture, the report suggests that in year 2022, Nestle India alone had a sales of more than $250 million. So this means that they have got a very strong hold in Indian market, and the allegations means that they have got a lot to answer.
So we are waiting for that answer. We haven't heard from Nestle overall on this matter right now, but it's a very important development overall if you see, because the ingredients of whatever we all are consuming right now is increasingly in focus. And so from that angle, now this issue of sugar in baby foods is being an observation. Let's move on and talk about another company. Mr. Ravindran Gumaste, the Vice Chairman of ISMT, is joining us. Remember, ISMT is now belonging to Kirloskar Ferris Group. And after this acquisition of this company, there's a lot of turnaround which is happening at ISMT. And now the good news is that last week they've bagged certain new orders from ONGC. Mr. Gumaste, thank you very much for your time. Almost 350 crores orders coming in. How's the visibility on orders from ONGC, of course, which you work for, but other clients as well? If you can tell us a bigger picture as well.
Morning, and thank you for being on your channel. And as you know, we acquired this company 2 years back, and we have done a lot of work. One of them is expanding our product portfolio and expanding the market reach. And oil and gas sector is very, very important for us, and we would like to have significant presence in that market. And as part of that, I think key focus first is on India. We have to make in India for India, and we have been working with ONGC to meet their requirement to the extent possible in our portfolio. And I think we are very happy we booked this order, and we'll be executing within next 4 to 5 months this order completely.
Mr. Gumaste, it's so good to have you today. I was wondering on a issue, and I was not getting the right answers because there are very few players around it. We all know that there are so many pipe manufacturers in our country, but very few of them have the capability and the required technical I would say expertise for transportation of oil and gas related projects. Now Mr. Modi has in his manifesto announced that they want to replace the gas cylinder from the face of our country. In a phased manner, there would be piped gas in every nook and corner of the country. Such a huge project, thousands of kilometers of pipe which can transport gas will be required, and very few companies are there. How big is an opportunity of that sort for a company such as yours or others as well?
ISMT as a company suffered for more than a decade, I would say 2 decades, did not have enough of expansion. The financial performance was not up to the mark. It became an opportunity for us to step in. And we have a huge commitment and we are moving towards investing in green power and going towards green steel and green tubes as well. And that will open up really a big opportunity for us. And as you just mentioned, demand for tubes of all kinds is expanding multiple opportunities. You mentioned about oil and gas, but water supply systems across the country is a big opportunity, and we are aware of that. And we are focused. The first focus in the first 2 years of acquisition of ISMT was turning around the company and bringing it back to the operational profitability. But simultaneously, we have already taken the projects for debottlenecking and expanding the production portfolio. And we will definitely look towards these opportunities, and we will be very keen on expanding our the business volume in the tube sector. Yes, very encouraging future.
Right, very encouraging future. I just want to understand then, after this opportunity that is there, what would it be? You spoke about the growth opportunity for the company that is there in this. What would be the growth that one could see for the company at least 3 years down the line? How do you see that growth shaping up? What would a number be looking like?
We were like 170,000, 160,000 tons of tubes per annum. And we have stated that within the next 3 to 4 years' time, we will take it to 3 lakh metric ton of tube. If not, at least 250,000 is a extractable production out of the 2 mills, one in Baramati and one in Ahmednagar. I think capacity utilization improvement, OE improvement, and that is the key focus right now with the available mills. But we are focused not only on just expanding the volume, but also improve the profitability of the company, because which has suffered over the last couple of decades. And that is why one of the avenue available is the power and fuel cost, which is very high presently, and we are looking at opportunity of green power to reduce our cost and improve our cost competitiveness, which will also help us in expanding the business volume. We are looking at doubling our capacities over the next 5 years.
Areas, specifically, which all products are you doubling your capacity? And how does the synergy look with Kirloskar Ferrous? Your merger is also due. If you can explain.
Yeah. Very shortly, I think it would be a merged entity, and ISMT will become alloy steel and tube division of Kirloskar Ferrous Industries Limited. And synergy is phenomenal because we at Koppal or Hospet in Karnataka, we are running the pig iron business, pig iron plant. We have 3 mini blast furnaces. And we are looking towards integrating that with manufacturing of steel, alloy steel in Koppal, which becomes a value add for the pig iron. And we can use these alloy steel slabs or blooms in Baramati for rolling down. And our Jajuri plant, which is arc furnace based alloy steel manufacturing, has the phenomenal capability to get into green steel very quickly. And we can roll it completely and sell it in the market as green steel. So we are looking for phenomenal synergy, and we will convert 300,000 of pig iron into steel, and that would be a very good synergy for the group entirely. And we are also looking, as you know, for almost now 5 years, operationalization of the iron ore mine, which should make us iron ore mines to oil rigs. It's a phenomenal value addition, and that to everything made in India. And that's the kind of synergy we are looking between KFIL and ISMT.
Just want to know, with so much of the plans that you have, the expansion that is there, how is the funding going to be? How are you going to suffice the capex? Is it mainly going to be through internal accruals, or would you require some funding?
So we have very strong internal, cash generations, but we are not hesitant to borrow if it is required. We are low leveraged company. We will continue to be low leveraged company. And we have a program to almost invest 2,000 crores over the next 5 years to meet these capex requirement. And most of it comes from the internal accruals. It is not only on the debottlenecking the capacities in tube and steel, getting into steel in KFIL, as well as I think very important is the substantial investment in green power. These are the three areas where the major capex will come, and most of it will be supported by internal accruals. And time to time, if it is required, we will borrow, but not in a big way.
Right, sir. Thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the sector as well as what the company is expected to do going forward. That was the management of ISMT joining in with us, and obviously the opportunity that they see in terms of the tubes of oil and gas, how that is going to be working out for them in terms of auto execution for the company. But let's move on, put the focus and spotlight on TVS Motors. That's a stock that is in focus today, and we're keeping an eye out on that. Why? Because we have a brokerage note that's coming from Citi, which has actually opened a 90-day negative catalyst watch on TVS Motors. Ashesha is going to join in with us to give us more details on that. Ashesha, good afternoon. And what is the note actually highlighting? We've seen a fall coming in the stock already, but what's the note highlighting there?
Absolutely. TVS Motor is sitting with a cut of over 2% as we speak, and this is back on the back of a Citi report where they've opened a 90-day negative catalyst watch on this counter. They are maintaining their sell stance on the stock. They've also gone ahead and hiked their target price marginally to 1450 versus their earlier target price of 1400, but it is much below the current market price of about 1940-50 odd levels. They believe that the competitive intensity in the electrical two-wheeler space is intensifying, and that is a negative. Fourth quarter results are also expected to be on the weaker side. They expect lower operating leverage could impact fourth quarter results, and as far as valuations are concerned, they also do not look very attractive. They provide little margin of error is what Citi has said in its report. So they have opened a 90-day negative catalyst watch. They are maintaining the sell rating, and the stock is declining on the back of this report.
Right, Ashesha, thank you so much for that update. As of now, like Ashesha mentioned, the stock is down 2%. But let's move on and look at what's happening in the world of F&O. We did see a recovery coming in the markets, a sharp recovery, Nifty comfortably trading about 22,000 levels as of now. But what's in the world of futures and options? Ansh is here to tell us more on that. Ansh?
Yes, we did give a recovery of around 200 points of days low to trade around 22,000 psychological mark. But on option front, we are seeing some call writing happening at the same 22,000 level, indicating that traders are not actually expecting Nifty to close above this level in today's session. Whereas on downside, we are seeing mild put buying happening at around 21,900, indicating traders expecting Nifty to go around this level. Moving on to Nifty Bank, so Nifty Bank actually started below 50 and 100 EMA, but it gave a recovery, and now it's trading above both the key DMA levels. But on upside, we are seeing call writing happening at 47,500, indicating strong resistance around this level. Let's also talk about few FNS stocks that are in focus, and we are seeing strong short build-up happening in Tata Communications, Bajaj Auto and TVS Motor, whereas Biocon has high probability of getting into ban list tomorrow.
Thank you so much for that update. That's what's happening in the world of FNOs. But with that, let's just slip into a very short break. Don't go anywhere. We're going to be back with more updates after this break.
In association with State Bank of India, the banker to every Indian.
Great news for those who want to rise with India. Now you can get the full download of business, economics, leaders, interviews, analysis, anecdotes, profits, research, results, revenue, bulls, bears, bonds, markets, and more. Your new high seat of business news is here, etnownews.com.
You feel the love which I feel inside. Hold me tight, just hold me tight.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Hello and welcome to our special feature, Zing HR presents Purpose-Driven HR for Business Outcommission, partnered by ET Now.
I think these days people look at human resources as a bunch of resourceful humans. Like people who can stand up for them, people who can make the difference.
In a scalable organization or a global organization, to get those pivots in about when I need to tweak or initiate a certain feeling to help the person realize that yes, the company cares for me at this stage.
If your manager actually helps you drive that share, this combination is really where it comes together. Your manager also works as a connect with the other teams which are doing that, and that's the way it will move up.
Technology is not the purpose. People forget that it's just a means. But if the purpose is to hire in the shortest time the right person who's going to be successful, then the means could be anything.
Catch the special feature series only on ET Now.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're watching Markets at Noon on ET Now. Clearly, we are seeing a recovery in the markets. Like we spoke about, 22,000 levels is what the Nifty is managing to hold on to as of now, recovered comfortably from the day's lowest point. But what's also supporting today's recovery is Reliance. But we do have Reliance reporting its numbers on Monday. What are we expecting this time around from the earnings of the company? Let's go across to Somit, who's going to talk to us about the Q4 expectations. Somit?
Well, in the fourth quarter, if you see Reliance Industries is expected to report a strong set of numbers. Revenues are expected to be higher by around 4%. EBITDA is expected to jump by nearly 4.5% on a sequential basis. Margins are expected to come in at close to 18.1%, while the net profit is expected to be higher by around 5 to 6% on a sequential basis. Now, the company is expected to report its highest ever quarterly EBITDA number on the back of growth that we'll be seeing in the oil to chemical segment and also because of the telecom segment. Now, segment-wise, if you see the oil to chemical segment EBITDA is expected to be higher 13% on a sequential basis, and this recovery is owing to higher refining margins, higher throughput and better petrochemical spreads. Now, throughput is higher because in the previous quarter, that is the third quarter, there was a planned maintenance shutdown, and hence we are seeing such kind of a move when it comes to the oil to chemical segment. When it comes to the retail segment, revenues are expected to be higher by around 1.5% on the back of store expansion and higher footfalls. However, the retail segment EBITDA is expected to come down marginally by around 1% on a sequential basis, but this is largely because we are also coming off from a seasonally strong quarter. There is a festive season quarter of Q3, and hence we are seeing some kind of a dip when it comes to the EBITDA number. Now, the oil and gas exploration business, there the EBITDA is expected to decline by around 3% on a sequential basis, and that is because of the rise in profit sharing with the government gas. Because of this rise in profit sharing, the EBITDA is expected to come down. On the other side, if you see, the output number and the gas prices are largely expected to be flattish on a sequential basis.
Okay, Soumit, thank you so much for that. Keeping all eyes on Reliance, and that's going to be on Monday. But let's move on and ET now. And India's oldest stock exchange, BSE, is celebrating BSE Day today, showcasing the legacy and the future of Bombay Stock Exchange. ET now editor-in-chief caught up with the BSE MD and CEO Mr. Ramamurthy to understand the legs of the market rally, what's aided the surge in the market over the years, and what lies ahead. Here's an excerpt of that conversation.
If I can become that Samay right now, we are in 2024, but hypothetically if we are celebrating the BSE Day 2030, और अगर मैं समय हूँ तो मैं क्या बोलूँगा?
देखिए कल को किसी ने देखा नहीं है, आप कल की बात भी नहीं कर रहे हो. You are talking 2030, which is 5 साल down the lane. We can only dream, and it is very essential to dream. As Kothari Sahab rightly said, only dreamers achieve something. So let us dream something. We would certainly expect the market, the economy, the prosperity, all at a very different level. That is one thing which every one of us will even today be able to foresee, because the way the country has been growing in the recent past, with the amount of political stability, with the amount of regulatory keenness in ensuring the growth of market, and the amount of effort which MIIs are ready to put along with the regulators to make that happen, they have been stupendous. What I would like to see, therefore, 5 years down the lane is just not equity and equity asset classes alone. I would like to see a major development in terms of corporate bonds, government bonds, derivatives products associated with them. These are all today looking to be a slightly a longer term situation, despite the fact we have been trying for a long time. There has to be a proper interest rate curve across all price points, with actively traded securities across all price points. The corporate bonds also should be active along all the entire curve, so that it is very easy for me to quantify and assess the corporate risk from that. There are multitudes of products today which are traded across the globe. We probably do not have many of them. All those products coming in place, making more and more people to get the benefit of it, the market capitalization going up. Today, the assets under management of all the things put together, all the people, holders put together, I'm told it's around 15% of GDP. That's not a great number compared to the global standards.
Equity is still less than 10%.
Absolutely. So it has to grow a lot. So there are multitudes of areas where we will see prosperity growing, and that's where I would like to see in 2030 the country.
And the first phase of Lok Sabha elections is underway, with 21 states and 4 union territories going to polls. All of Tamil Nadu's 39 Lok Sabha seats are up for grabs, and several big names from Rajinikanth to Kamal Hassan turned up for voting. Times Network caught up with BJP's candidate. Let's have a look at that as we bid you all goodbye on this edition of the show.
Madam, it will be an historic election, that I can tell you. And if you look at the people who are assembling outside the polling booth with enthusiasm, with love for our Honorable Prime Minister, I'm sure June 4th will attest to the fact that Tamil Nadu is moving into a new era of politics. People of Tamil Nadu are very clear. They want a continuity at the center. They want a change at the state. And this election is a combination of many factors. And everybody has got their own reasons for voting. But if you look at the answers for all the reasons, is Honorable Prime Minister Narendra Modi ji and NDA.
The DMK and ADMK, they've been consistently telling that the BJP holds no significance in Tamil Nadu politics. If we take your name itself to the top leaders of the DMK and ADMK, they tell that Annamalai holds no significance.
June 4th will be the answer, madam. June 4th will be the answer. Thank you, madam. Thank you, madam.
What is your message to the people of Tamil Nadu, sir, on the day of voting?
My only request is all of you please come out and vote. There is no excuse for not doing our democratic duty. And the makers of Constitution have put a lot of trust on common people like us to make this democracy function. And please come out and vote. And it's once in 5 years. There is no excuse. We miss it. It is not that every week we do. It's not that every month we do. Please come out. Even if there is a little bit, there is hot sand, there is a queue. The Election Commission has made all arrangements. There is a shade. I don't even think anything should inconvenience you. Rise beyond it. My request to all our brothers and sisters and all our senior citizens and our fathers and mothers, please come out and vote in large number.
I'm very confident. I was already confident, but when I visited the booths and the shining faces of the voters, definitely I'm very confident.
Ma'am, the Chief Minister of Tamil Nadu, M.K. Stalin, today morning after casting his vote, he stated that this time it's India that is going to win. So what do you think? How is the fight that is happening in Chennai?
No, that is Bharat is going to win. But strong leadership will be the Prime Minister. And definitely we will be the winning force. He will be telling like that only. But India means what? India is Bharat, the present, the person who is leading, and that will be again the verdict of the people.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Sir, आप इतने colorful हो, but how can colorful be powerful?
Follow me. बारिश का प्रेशर बढ़ेगा, पर इसको कोई फर्क नहीं पड़ेगा. Dulux Weather Shield Power Flex.
इसका हर रंग लड़े धूप, धूल और बारिश से.
It's colorful. It's powerful.
शीर्षासन कहते हैं इसे.
आप बस स्ट्रेस कम कर रहे हैं. घर नहीं बिक रहा ना.
बाहर से नहीं मिल रहा है.
घर बेचना है तो मैजिक ब्रिक्स पे आइए. यहाँ पे हजारों सेलर्स रोज मिलते हैं लाखों बायर्स से. ताकि प्रॉपर्टी जल्दी बिके और बेटर प्राइस मिले.
अब आप सीधे हो जाइए.
India's long-term strategy for creating a trillion-dollar economy includes boasting of building a healthier nation. But which metrics will be used to evaluate the nation's progress? In this episode of the Living Room Conclave India Health Mission series, we look at where India is on the Global Health Report Card and what we are able to do as a country to accelerate our progress. Watch this engaging conversation only on the Times Network at these times. Presenting partner Bajaj Allianz General Insurance. Co-powered by Herbalife. Outdoor partner Tim Delhi Airport Advertising Private Limited.
You are the shimmer of untold dreams. The glitter of innumerable stars. The key and the melodious note. The soft laughter of the jewels. The brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
Now let's get started. Love seeing you in action.
This is gonna be a lot of fun.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India, for better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET now.
This is a very special show we have for you today, right ahead of the very important visit of Elon Musk here to India for a 2-day visit. He'll be meeting a slew of policymakers and business leaders, including, of course, our Prime Minister, Mr. Narendra Modi. So this is Musk Means Business. This is a special show which we have for you on ET Now. What will be the agenda of this meet? What will be the size and scope of the meeting he will be doing with all the other stakeholders? And we as citizens, what does it mean for us? Now that we are looking at forging very meaningful partnerships with global business leaders and their companies. I have with me my colleague Sumit and Srishti joining us first, and then we'll have experts joining us. Hormaz will be joining us because Tesla is something which everybody is looking forward to. We'll also be joined by Pankaj Morarka, and we would have a very exciting startup coming in, Mr. Ravi Chandran of Agnikul, to talk about how the space economy and the space related the companies over here have the future from here on and what are the economics behind it. So this is a special show which we are bringing for you. But before that, let's go to Sumit and Srishti. Sumit, so let's start. How important it is and what could be the the size and scope of the meetings which are there lined up?
Billionaire Elon Musk, who is Tesla's co-founder, is going to start his meeting in India with his visit in the next 2 to 3 days. He's scheduled to meet Prime Minister Modi of India and other officials of government, along with certain ministers and industrialists. He's also going to meet startup co-founders and founders in space sector. Space is one area where he's very enthusiastic, and India is also very keen to invite investment in startup as well as electric vehicle manufacturing. Tesla, it is being reported that going to announce $2 to $3 billion investment in India. It's already sourcing parts worth $1 billion every year. That is going to go up to $2 billion this year. For Tesla, India is an important market at a time when sales in many other markets are coming down. China especially, where BYD and other EV makers are giving a very tough fight to Tesla. In the long term, India is going to be an important market, and earlier also reports said that Tesla can look at having or manufacturing a special India-oriented vehicle that can be sold throughout the world. But what are the current plans? How much of that investment will be coming to India in what span of time? That's all going to be very public. It's possible in the next few days when Elon Musk begin his India visit.
Right. Thanks for that, Sumit. Whenever we speak about Tesla or we speak about Elon Musk, the EV ecosystem is something which comes into focus. And we are also here back home in India. There's a lot of stuff happening in the EV ecosystem. Srishti is here. How Tesla's footprint in India could actually change or actually impact the ecosystem here. Srishti?
Well, as we know, the EV penetration in the four-wheeler segment is around 2 to 3%, but that's expected to grow phenomenally well in the times ahead. And India is all excited about Tesla's entry. But it is not just the case that India is looking for Tesla's entry. Seems like that the Tesla also wants India. Why so? Because there are some of the concerns related to the sales slowdown of Tesla in the global markets, where China, their second biggest market, is getting hit in terms of sales, and then Tesla is eyeing at India, where they are not just expected to import cheaper cars after the new EV policy, but other than that, reports also suggest that Tesla will be eyeing to produce affordable EV cars in India and then export to the world. So that will be a win-win situation for both the parties that are involved. But let's have a look at the EV ecosystem in terms of the pricing and what models Tesla will be getting in India. So if we look at the pricing of Tesla's available model right now, then the cheapest amongst them is Model 3, priced around 33 to 37 lakhs in Indian rupees, and the most expensive is Model X. But going ahead, there are reports that somewhere around 20 lakh of rupees, Tesla will be coming out with their EV model, and that could actually be a threat to some of the leaders in the EV space like Tata Motors, which currently holds around 70 to 80% share in the Indian EV ecosystem. M&M also has some footprint with just XUV 400 at 16 lakhs of rupees. And other than that, we have players like VinFast, BMW, MG. They are all present in the EV space, but they are all skewed in the premium category. So the first battle is in the premium category, but with the affordable EVs, if at all that happens with Tesla, that could be something that can change the ecosystem. Back to you.
Right, thanks very much for that. Let's take it forward with Hurma Sarabji also joining us, Pankaj Murarka and Mr. Ravichandran, all three of them. Mr. Ravichandran brings to the table his understanding of the space economy, how Indian startups stands to gain. Hurma's, of course, is a legend in the auto space, and all of that. How should you and I benefit from it, or do we have a play? Can we have a foot in that growth which lies ahead in this space? How to benefit from the stock market angle? Pankaj Murarka will help us understand. Hurmaz, let's come to the most sexy part. How is the Tesla entry? And it has come after a long of back and forth, a lot of negotiation. Both have come in midway. My way or highway hasn't lasted. Both of the Indian government and the policymakers, along with the Tesla as a company, both have come midway. It appears the progress has happened from here on. How will it change the EV ecosystem from the not only from the Tesla as a car point of view, but also the suppliers, the distribution, all of that, in your view? Will the costs come down and more business will be done around that now?
Well, I think one thing's for sure is, we know that Tesla and especially Elon Musk, they're really the poster boy of the EV world. So it's created a lot of interest back in the EV space, especially in India. And that's a good thing. It'll make everyone think more electric, even the consumers, industry, so on and so forth. But, I think even if you're a superstar like Elon Musk, making an entry into India isn't very easy. I think, our core of our market is really, really at the budget end. And though Tesla has had plans with Project Redwood to kind of produce an affordable car, it really remains to be seen what the specs of that are, however much localized it is. So clearly they'll be building a supply chain. The reports of Tesla investing a couple of $1 billion in India, that seems to be, a pretty large sum. Obviously, a lot of that will go towards building the supply chain, might even have partners to do that. But at the end of the day, it's really making a product that's very nuanced, very suitable for this market. And what I'd like to say is, they were testing the Model 3, and they were planning on launching that. But from what we hear, that was stopped. And one of the issues with the Model 3 was very poor ground clearance. In fact, I had reviewed one and for the Auto Car Show, which was played on this channel. And one thing was here that Model 3 in its form from the US was hitting almost every speed breaker. So these, a lot of kind of adaptation has to be done to India. Obviously, they won't launch it like that. So it's not easy. And I think, while it's great Tesla is coming, I don't think they're going to run away with the market as a lot of people imagine.
Very important point. That's a very important point. In fact, Tesla and a lot of excitement around it on one side, but Indian auto companies, both listed and unlisted, have themselves upping their own game, sharpening their products and their acceptance as well in the market from their own EV offerings. Pankaj, you track the market with a magnifying glass. There are half a dozen, or I'll say longer list of the ecosystem participants like auto ancillary companies, battery companies are doing a lot of work on the EV side. How they stand to gain with this opportunity? Obviously, others are also doing it, but this will definitely be a big bang splash in the EV space.
Absolutely, Ajay. I think, as almost said, Tesla and Elon is a poster boy globally, so it does bring a lot of attention in that sense. And having said that, I firmly believe that it's very evident that India will become the third largest passenger vehicle market in the next 5 to 7 years. And in that sense, any global player cannot afford not to be in India. And also, it's very evident from the trend that we're seeing, the future of automobile is electric, irrespective of whatever it's two-wheeler, three-wheeler, passenger vehicles, and so on and so forth. Indian companies have a significant market share when it comes to auto ancillaries in global exports. India is a key sourcing destination for global companies. You talk about any OE globally, be it, let's say, Daimler, Volkswagen, or even for that matter, Tesla as well. Tesla already sources from some of the Indian vendors for their cars, which are sold in US and Europe. So India, from the auto ancillary perspective, we have a strong manufacturing base. We have the technology and know-how which India has built over the last 20 years. And India auto ancillary companies work with global OEs on their new products and developments in that sense. And so we have a fairly robust auto ancillary exports in that sense. So I think it will benefit in both sense. One, obviously, Tesla coming here and the big bang launch will expand, howsoever small that market at this point of time at the luxury end of electric vehicles. I still think it will expand that market. And it will also help in evolution of the market at the mass segment in that sense. And also, Tesla, they'll also bring their global vendors as well. And more importantly, given the indigenization clause, they will increase their sourcing as well from India. So I'm sure a host of auto ancillary companies will benefit. And as I said, there are already a handful of companies from India which are already supplying different kind of parts, be it the DC motors or something, or the lightings and stuff like that to Tesla globally.
Pankaj, just for the benefit of our viewers, I'll just lay down some of the companies which are working closely with Tesla and other companies in the EV space, and then you tell me where the opportunity lies. Shina, I'll just come to you in a moment. SK, for example, is already supplying bearings, Sundaram Fasteners, gear transmission, Suprajit is doing light duty cables, Motherson, Sandhar Tech, Varick, and of course we saw the big bang tie-up which Excite recently did for two Asian companies for EV batteries. Where does the maximum amount of opportunity lie? Pankaj, I don't want you to take names, but tell us the category where the big opportunity lies from making money from listed point of view.
Apart from what you said, there are other companies as well. Sure. Ajay, name some companies like Sona Comstar or Varroc and some of the other companies which work with Tesla and global EV players as a part of their global supply chain, value chain in that sense. When it comes to EVs, all of us know that the value of the battery becomes very significantly higher in an EV versus in a normal ICE vehicle. and plus the replacement cycle of the battery is probably shorter in that sense. So obviously, but apart from that, there are other components where for example, when you talk about Motherson Sumi, the wiring in an electric car could be 2.5, 3x times what it normally is in an ICE car. And likewise, there are other components as well. So I think the opportunity is very significant. More importantly, what I've seen over the last few years is Indian auto engineering companies have made investments in their business over the last 5 years in terms of building capabilities, in terms of developing new products which are required for the EV, and they've been working with a lot of these global OE on the EV side. And as I said, some of these companies have already they already supplied. More importantly, they have built a sizable order book on the EV side with global companies as well as with some of the local companies in that sense. So I think the opportunity is immense, and it will be supported by not only by export, but also by the fact that India's domestic automobile market, be it passenger vehicles or two-wheelers and other things, will also have a very healthy growth over the next 10 years.
Right. Srinath, let's come to the the space economy, because Starlink is a very major player launched by SpaceX. Almost 4,200 low Earth orbit satellites are already functioning by Starlink, and Starlink also aiming, or at least looking for some slice of the big internet pie in India, which is up till now dominated by the Indian telecom players like Jio and Bharti, and of course the other player is Vodafone. How does that kind of change the competitive landscape, the quality of the service for our consumers, etc., in your view?
I think it's a very interesting time to be using, LEO orbital satellites, low Earth orbit satellites, for actually providing direct internet. I think that's a model that even India is not fully, the Indian telecom companies have not fully embraced yet. It's sort of like the return of the satellite phone market in some way, because people are now talking about internet directly to their phones or internet directly to laptops without any other, intermediary in the process. So I think it'll be. I don't know if that is going to be part of the conversations that is going to be in this agenda. But it's definitely an interesting time for all of us, the other startups as well, and us to be meeting and sharing our thoughts with Elon Musk. I think in a way, India is now at a point where privatization, particularly even from a startup standpoint, has been enabled by the government. So it's a very interesting time for us to be actually talking to someone like him, and probably hearing his thoughts about what we are doing, and looking ahead at what we can do together probably.
Very important point. I know, just to tell our viewers that Srinath would be meeting Mr. Musk along with a bunch of other startup entrepreneurs, with the idea that what kind of collaborative effort can be done with this big opportunity which is opening up for Tesla and Mr. Musk over here. But the big caveat is, and our policymakers were very clear about it, that they need to work at every level on the ground with Indian vendors and the ecosystem. Srinath, even the manifesto by Mr. Modi this time had a very clear mention of growing the space economy. You and your friends in the startup space, what kind of business opportunity lies there? This is one of the doors which is opening, but beyond this also there's a lot of work happening. We are sending a lot of satellites in the space. What all categories are you guys working on, and where are the business opportunities lie?
I think, one of the big things that have happened positively is with the opening up of the space sector to private players is in every aspect of space sector. It could be, the launch segment, which is about, building launch vehicles and rockets to take, objects to orbit, or in the satellite segment where you're building satellites, communication systems, imaging systems, or in the ground segment as well, where you're collecting all the data from top and distributing it here, processing it here, and then actually providing it to an end user. All segments of this sector are actually starting to grow. We are seeing startups come up in every possible area, and thanks to InSpace and thanks to ISRO and all the support that has been coming from the government directly, to make sure that if there's a private player with a good idea, with an honest intention to make something interesting here to solve a global space problem, I think today we have the legal framework for that, right? And so I am seeing startups come up in literally every aspect of space. I know people who are doing launch vehicles, of course that includes us as well. We know people doing satellites, we know people who are doing companies which are trying to monitor space debris, name it, and there is a startup already in India, probably at its early stages, but they are a very focused group of people working on solving these global problems. So it's going to be a very exciting time, I think, for the next 10 years or so for India to actually, expand into even through the private players into capturing a large chunk of the space economy.
There's money coming in. Are investors warming up to this opportunity? Clearly, government knows, and that's why they've been taking decisions like opening up of FDI. A bunch of startups have launched, as you were saying, the entire value chain. But is money coming in? Are there deals happening, inquiries from early stage growth kind of venture capitalists or investors, not only from India but abroad as well?
Absolutely. I think a lot has changed in the last 3-4 years. Probably when we started, and this was 2017 or so, it was definitely, not one of the most, favored sectors for investors here. Probably because there was also a little bit of lack of awareness, right? And space was considered something that usually only governments do, and space was considered something that is extremely long lead time with very high risk and so on. But that model has actually, been completely changed in the last 3-4 years. We're seeing a lot of investors have, very good appetite. And I'm talking not only about some of the small funds, but the larger funds, family offices across the world, some of the sovereign wealth funds as well. So I think everyone is now actually carving out a piece of their portfolio allocation to be focused on startups in space sector. I mean, within the private equity and the VC community. So space is getting very mainstream that way.
Space in your portfolio for space, that's the word, I guess. Hormaz, you meet the top industrialists, the business guys basically in auto space every now and then. If you were to, I'm not sure whether you're meeting Musk, but Tesla India team, I'm sure you're interacting with. If you were to give a couple of, suggestions or to how they should navigate the Indian auto space, what would they be? 2-3 points. How can they really make their mark in the mind of the consumer as well and in the market as well?
Well, I think the most important thing is to understand the consumer, which is very, very difficult for a lot of global OEMs to do. And, a company like Maruti, I think, does it best. That's why it is where it is. So, I think one thing also, let's not forget that the auto industry isn't just EVs. Everyone's rushing in right now with EVs, and Tesla's coming in with EVs. There is still a huge challenge as far as home charging goes, and that's turning out to be the biggest hurdle. So, even if Tesla puts some superchargers and stuff like that, I mean, still people want home charging. And this is actually a global issue. One of the reasons why, EV sales have flattened. It's just that absolute convenience of home charging to charge as and when you want without having to be in a queue or worry about whether your charger is working or not, which is really the absolute one single critical point which is make or break for a lot of EV buyers, especially in India. I mean, just to give you a statistic, about over 90% of Nexon EV buyers all have home charging. Now, what that goes to tell you is so many people didn't buy the car because they didn't have home charging. So this one thing is a make or break. And it's not so easy to get in a lot of the high rises and societies which and RWAs which are having a problem giving that. So I think number one, listen to the consumer. I think they are very, very cost conscious. I mean, value conscious, no longer cost conscious, willing to spend if it has the right amount of equipment. Obviously, cars have to come with all the right bells and whistles. The onboard tech is becoming more and more important than how the car drives. And actually, in that sense, it plays a bit to Tesla's strength because, they are really the software kings as far as EVs go. And even performance, battery range, all that sort of the EV stuff is good. The non-EV stuff, a lot of the legacy players do have a lot of strengths. Which again is where Tesla is, not as good. But I think, I've just driven this BYD Seal and I'm just completely blown away with it. So, you've also got this prospect of some Chinese companies making a kind of a side entry with as minority stakeholders and joint ventures, which is another kind of an angle to think about. So, but again, it's all in the EV space. I think we are going to be an ICE market for a long time. And, legacy companies are still strong in that. And, I think they're talking about 30% of EV penetration by 2030. There's no way that's going to happen given the current infrastructure challenges we have. So I think, don't panic. I think, it's, EV transition is going to be a much longer than what people think.
Yeah, EV may become one of the meaningful, but it will not dominate the entire space for a long time. But that's a very important point you brought up, Hormaz. It's beyond Tesla as well. There are a lot of Vietnamese companies which are looking at making an entry here. I want to understand Tata Power. We speak to them very regularly. They are kind of upping their game in charging infrastructure. What is your observation on the progress we are making? When we say we, I mean to say the energy companies as well as policy makers, because it's a very ground level and a very regional play. Big city to another, things may differ. What about highways, municipalities, all of that? How is the progress on charging infrastructure happening? Is it lagging big time?
Well, Tata Power, I have to say, they've taken the lead and they're really number one in this space. But again, sometimes, being first, you've got others which come out with, frankly, better quality chargers. I mean, Tata Power, mainly 30 kilowatt chargers, not very fast. A lot of them don't work everywhere, though they are. So it's charging is still a hassle. You've got to have an app, you have to download it. It takes time to boot up the the unit to power your EV. But honestly, I don't think the charging infrastructure on the highway is the problem. EVs in India have turned out to be urban phenomenons. People use it in the city and they make fantastic city cars. But you should have access to a wall box charger at home. That's really what makes a difference, because no one wants the inconvenience of even having to wait 15 or 20 minutes or half an hour at a charging point. You may have a vehicle there before you. It's hassly to use. So really the inconvenience is still there using public charging. Vis-a-vis the absolute super convenience of having it at home is like having a petrol pump at home. It's really the absolute opposite extreme. And I think this issue still is the biggest issue. And again, talking about public charging, all the discoms, there's a lot of issues, even on-ground issues, just getting the right amount of power supply, the transformer capacity, it's still not sorted. So I think, clearly, I think this is going to remain, in my mind, a big challenge going ahead.
Okay, I'll have Pankaj have the last word. Pankaj, I know you will not talk stocks, but let's put it in categories. Would you play a wire harness company? Would you play a tire company or a battery company or a charging infra company? Where would you find highest amount of comfort, which may actually do very meaningful work in the entire EV ecosystem, not only Tesla?
So, Ajay, we're open to looking at companies across the spectrum, all that you mentioned, and probably much more in that sense. And in fact, we already own some of these companies. I think the opportunities are across the segment. I, to an extent, agree with Hormuz that there are significant challenges in terms of creating the ecosystem and putting the infrastructure in ground. And but I think things will happen over a period of time. Maybe and markets are always forward-looking, so markets tend to discount the future well in advance in that sense. So, for example, we own a company called Exide Industries. Exide is the first company to set up a on-ground lithium-ion battery plant in India near Tirupati, and probably expecting that plant. They already meaning the capital expenditure on the plant is already on, and probably they expected that plant should see commercial production probably by January, February next year. And they're making up 4,000 crore investments in that. I'm sure many more plants will come up in that sense, but we believe that that's a first one, and Exide should see they've already tied up with a couple of OEs for which they made announcements a few weeks back in that sense, which is an endorsement of their underlying technology and so on, kind of a thing. Likewise, we own some of the other companies which are in the whole value chain of EVs, like Sona Comstar and Varroc Engineering, which supply either the BLDC motors or the lightings to some of those EV companies globally, as well as to the, we've seen a fair degree of penetration in the two-wheelers when it comes to EVs already now. So my experience, one of the key inflection point is when you have 5% market share coming in for a category. That's where you really see a big takeoff happening in the new technology or new product. So last year, we had 5% of two-wheeler sales coming from electric vehicles, which effectively hoping that that should accelerate from here on in that sense. So we like companies across the value chain, while the transition could be slow and gradual to begin with over the next few years. As we in India, whenever we have new technology, new evolution, it's always my experience of investing over the last 25 years, it's always a two-step forward, one-step backward story. So we'll have our own set of challenges in terms of execution. I agree that we are executors and they're constrained from governments in terms of funding. But eventually, I think the ecosystem will evolve, and I see from a slightly more medium-term to longer-term perspective, huge opportunities there.
Excellent. All right, gentlemen, all three of you, Hormaz, Pankaj and Srinath, thank you very much for joining us today on this very special telecast, Musk Means Business. What are the opportunities and what are the challenges? It can't be a one-sided opportunity and it takes time. But of course, there's a progress definitely happening in all these directions. Thank you very much for helping us viewers understand this important visit by a visitor, Mr. Musk. Everybody is looking forward to it. We will be reporting minute details of all the meetings Mr. Musk is having along with Mr. Modi as well. Thank you very much for watching. Keep yourself busy with watching ET Now even after this break. Goodbye.
Powered by BSC. Invest right to future bright. Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust. In association with State Bank of India, the banker to every Indian.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India. For better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET Now.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
पापा जी, कैमरा उल्टा है आपका।
शीर्षासन कहते हैं इसे।
इस टाइम
पापा स्ट्रेस कम कर रहे हैं। घर नहीं बिक रहा ना।
इसे बेच के नए घर का पेमेंट करना था, लेकिन ढंग के बाहर से नहीं मिल रहे।
पापा जी, घर बेचना है तो मैजिक ब्रिक्स पे आइए। यहाँ पे हजारों सेलर्स रोज मिलते हैं लाखों बायर्स से,
ताकि प्रॉपर्टी जल्दी बिके और बेटर प्राइस मिले।
अब आप सीधे हो जाइए।
कुछ लोगों के लिए मैं टेढ़ा ही रहूंगा।
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Attention startups. Reach 25 crore people well within your budget. Advertise on 10 TV channels in one shot. No TVC required. Brand startup pack starting from just 1 lakh rupees. Brand Surge, the special marketing starter pack for startup brands. For more details, visit our website brandsurge.co.in or write to us at brandsurge@timesgroup.com. Times Network, now on nothing.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India. For better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET Now.
Hello and welcome. You're watching Market Fatafat on ET Now with me, Snehi Shah, and with me is Vinny Motiwala. Vinny, very good afternoon to you, and it's a good afternoon indeed, isn't it? Because
Absolutely.
markets have recovered. We're back in the green. Nifty is above 22,000. Take us through what's happening.
Absolutely. Nifty above the 22,000 mark, holding on as of now to that level. Recovered sharply in the second half, post 12, we've seen that up move coming in for Nifty. And, only in the morning that we'd seen such a fall coming in. After that, slowly and steady recovered. As of now, 22,000 levels is for the Nifty. Broader markets, that's also seen a recovery coming in. Not as fast as one was expecting in the broader markets. Nifty Midcap still trading a bit subdued. But off the day's lowest point, trying to inch up to that green mark. Small cap is managing to hold on to some bit of a green, slight bit of a green there, almost 0.1% or 0.1%, you could say, in terms of the gains that is coming in for the small cap. Other than that, what's leading the rally today for the Nifty is HDFC Bank among the positive side. That's up more than 1%, a couple of percent there. Bharti Airtel, ITC managing to hold on to strong gains today, as well as M&M, which is holding on to gains. But which are the other movers in trade? What is keeping the stocks abuzz? That is what we'll be taking you all through in the next 1 hour as well, viewers, and that's what we'll be keeping an eye out on.
Absolutely, Vinny. So let's kickstart the show. We'll take you through all the buzzers and newsmakers intraday trading session within a minute. And to do that, we're being joined by a team of researchers and technical experts. On the research front, we have Gaurav as well as Ansh. And on the technical front today, we have Forum Cheda, founder at Chart Analytics. Thank you, all three of you, for joining us today. With that, let me kickstart the show. Let's talk about the first stock in focus today, and that is Dixon Tech, because Dixon Technologies Limited's India Limited's wholly owned subsidiary Paget Electronics has entered into an agreement with Longcheer Mobile India Private Limited for manufacturing and sale of smartphones, according to an exchange filing today. Paget Electronics has commenced manufacturing and sale of smartphones for large global brands with Longcheer's design and technology. The collaboration aims to enhance Paget Electronics' offerings in the smartphone market. Longcheer has strong capabilities in product-level solution design, hardware innovation design, system-level software platform development, lean production, supply chain integration, and quality control capabilities. They provide integrated smart product services to global leading consumer electronic brands and tech enterprises across multiple countries and regions with global delivery capabilities. And it also has around 28% share of original design manufacturers at the global level. This is what the exchange filing has said. So on the back of this collaboration that Paget Electronics has done with Longcheer, the stock was trading under a lot of pressure today. We've seen a sharp recovery after this announcement has come, but still the stock is reeling under pressure, almost 0.5% down in a trading session as we speak.
Okay, that's Dixon Tech for you all. Let's move on, talk about Tata Communications. This is a stock which is under pressure today as well. They came out with the numbers yesterday. What we're seeing is, yes, when you look at the numbers, below estimates that came in, profits saw a sharp jump because there was obviously owing to an exceptional loss that was there in the base quarter. So that's on a quarter-on-quarter basis when you're comparing. That's why a sharp jump. Other than that, profits also were aided by the write back in taxes. Now, other than that, consolidated data revenue was down. Organic data revenue remained flattish. Switches and Kaleyra performance was a bit weaker than expected. So when you look at the brokerage notes, ICICI Securities has actually downgraded the stock to a hold from an ad. They cut the target price to 1,870 from previous target price of 1,900 rupees. They've lowered the earnings estimates to factor in the lower margin expansion. Kotak has also come out with a note. They're maintaining a sell rating. They've cut the target price marginally to 1,525 from previous 1,595. Lower revenue is something that they're seeing estimate, and they estimate it to continue to see a moderation in terms of the data revenue growth. That's a bit of a concern, and that is why Tata Communications today down almost 5% as we speak. But we managed to speak to the management saying, and they did give it some commentary in terms of the margins. That's going to be interesting to hear what the management has to say in terms of the margins. How is the outlook going to be, their roadmap going forward? So let's go across and listen into what he had to say.
There is a drop, but I would say largely it is going by design. We are in a mode of investment when we called out our strategy to double our revenues, we said that we need to invest in the markets with people on the ground, invest in marketing. As an integrated unit, the media business will turn profitable. And similarly, Kalera integrated with our erstwhile Bigo and InstaCC platforms, which is what we call as a customer interaction suite, that will turn profitable this year. Our strategy very clearly is to improve the margins in this coming year. I don't want to comment on a quarter-on-quarter basis, but our strategy when we acquired these companies is to deliver on the synergies, to deliver and make them profitable, which means that our overall company profitability will go up. That is what we're working on.
Well, all right, that's the word coming in from the management of Tata Communications. But let's going to move on then. Let's start talking technical info. I'm going to come to you for Quest Corp. Now, this stock is holding up pretty smartly in today's trading session, 1% higher. On the one-year basis, 6-month basis, also the stock has done pretty well for itself. So what's next for the stock? What are you penciling in?
Oh, well, hi, good afternoon, and thank you for having me on the show. Well, to begin with, technically speaking, the stock did form a high of closer to 582 levels in the month of Feb. And after that, we saw a decent correction coming in. That was nearly 20%. So it formed its low near 464 levels in the month of March, rather middle of March. And it took support near the 200-day moving average, which also indicates that it's trying to form a base. It kind of formed a base for the next few trading sessions, and then we saw a bit of, again, a rebound, or I would say a resumption of an up move. The stock price crossed above 50-day as well as 100-day, confirming that the overall trend remains bullish. Last week or a fortnight back, the stock price again reached back to 582 levels. That was the previous high in the month of Feb, and it was facing a bit of resistance. However, now in the last week itself, we saw a good breakout from those 582 levels, and the stock price has been witnessing some good momentum, which is backed by a very good increase in volume, which is supporting this bullishness. So since volume plays a very vital role and the increase in volume is supporting the bullishness, so overall trend continues to remain up. Currently, the stock price is already up is up currently at around 630 levels, but it's a good buy at around 600 levels, and one can maintain a stop loss below the levels of 575 and look for a higher target of closer to 700.
Keeping an eye out on those target levels for Quest Corp over there, but let's move on, talk about Bajaj Auto. And Ansh, Bajaj Auto is in focus on the back of its numbers. We do have brokerage notes. What is all that highlighting? Stock is down almost 2.5% today.
Yes, that's right. So the company has reported revenue at 11,484 crore, which is up by 29%. Now, this is slightly above the expectation. Also, the profit after tax is up by 35%, which is again slightly above the expectation. If we talk about EBITDA, there also we are seeing improvement. It is up by 34.4%, and EBITDA margin has improved by around 180 basis points to 19.7%, which is in line with the expectation. Now, there was a con call as well, and let's talk about the highlights as well. So the company expects two-wheeler industry to grow at 7 to 8% in FY25, whereas the 125cc and above segments are expected to grow at a faster rate. If we talk about a three-wheeler segment, then it is expected to grow in single digits. If we talk about exports, then the company expects positive export growth in FY25, and they are planning to enter the European market for e-two-wheelers as well. Also, if we see the chart of the stock, on year-to-date basis, it is up by around 30%, and it trades above key DMA levels as well.
Surely keeping an eye out on that. Let's not forget brokerage notes like Citi have maintained their sell but hiked the target price to 6,500 rupees for Bajaj Auto, and even JP Morgan has hiked the target price, and they've given a target price of around 10,000 rupees for Bajaj Auto. So that's going to be...
Yeah.
Notes are quite bullish, though today the stock is under pressure, Maybe something the street is not liking, but yes, that's what is interesting that one should watch out for.
Absolutely. So good hikes coming in from brokerages across for Bajaj Auto. With that, let's get a move on, talk about yet another earnings candidate that came out with its numbers yesterday. Gaurav, HDFC Life is the stock I'm talking about. Lots to talk about. We have management commentary, brokerage notes, so take us through it.
Yes, HDFC Life came up with the numbers, and if you look at the numbers, the APA growth was actually flat, but if you look at normalized AP, it grew almost by 11% on a YY basis. Now, there were two things to highlight during the results. First is that VNB margins. If you look at VNB margins, it was at 26.3%, which shown a downtake of 103 basis point on a quarter-on-quarter basis. And at the same time, if you look at the solvency ratio, it was up. It was down almost to 187% versus what it was at 203%. And this was mainly because of the ULIP product contribution allocation that has increased to 35% in the portfolio. Now what the management had said was actually a bit surprising, because they have now said that they will be flexible on trading of VNB margins while maximizing the VNB growth. Now they have also said that they do not anticipate any kind of large fall in terms of VNB margins, but it looks like the brokerages have taken it in a pessimistic way, because if you look at Macquarie now, they have maintained neutral rating with a target price of 635, but they have a view that VNB growth may remain under pressure because of the irrational competition that we may see. Apart from that, we also have Citi, who has cut the target price to 710 rupees. Goldman Sachs has also cut the target price from 770 rupees to 710 rupees. So all in all, a pessimistic view coming up from brokerages. We've also seen that the stock is down in day trade, so definitely keeping an eye on this counter.
Surely keeping an eye out on this counter today. But let's move on and talk about PVR Inox. Forum, it's the weekend. There are any releases that you are going to go and watch, or only the stock that you're keeping an eye out on today?
I guess as far as movies are concerned, there are lots of movies coming up, and I'm sure that all of us would like to see and get some entertainment. Well, talking about the stock particularly, technically last year in September, the stock price was closer to around 1800 odd levels. However, by December, it formed like a double top and it started coming down. It had a support level of 1565 levels. However, it broke those levels this year and it went down. So the double top target was closer to 1298, which was achieved last month exactly. It went down to around 1240 levels. And since then, we can see a bit of a rebound. So since technically there was a downside target which was achieved, and then we saw a bit of a consolidation, a base formation near 1300 levels, and there is a gradual up move which can be seen currently. With this gradual up move, the stock price is now crossing above the 50-day moving average, which is indicating that the short-term trend of the stock is changing to bullish. And technically, there is a formation of an inverted head and shoulder. The neckline is closer to a level of 1430. So any closing above those levels would trigger a buy. But since markets have been lately very volatile, so a very strict stop loss should be placed below the levels of 1365, and one can look for a higher target of closer to 1550.
Okay, 1550 target that one should keep an eye out on for PVR Inox. But let's move on, talk about Wipro then. We have Wipro in focus today. Why? Because we are keeping an eye out on the numbers. When you look at the Q4 numbers, what is the expectation this time around? Seeing a revenue decline of around 0.2% in terms of CEC growth is what we're expecting. Guidance said that for a Q basis, we would see a dip of around 1.5%. So yes, keeping an eye out on that. IT service revenue, what are the key factors? That demand environment, how is that shaping up? Challenges that have been there in the BFSI segment. So any commentary on that front, how that is going to be, is key to watch out for, because we've seen, Infosys started seeing a fall coming in as well after its numbers. The ADRs have seen a fall. So that's something interesting that we'll watch out for. Also for Wipro, the new CEO strategy, right? The change in CEO that's going to be happening. That is a key one to watch out for. Guidance for FY25 key factors, demand, leverage, margins, deal wins, how that's shaping up. Is that going to be remaining still muted? Key factors that one should keep an eye out on for Wipro. So let's keep an eye out on that. Numbers will be coming out, and today is what we're watching out for the stock.
Well, absolutely. So important numbers yet lined up for us even after market hours. It's not an easy Friday. It's definitely not a Friday that ends with the market ending. We'll be watching out for Wipro. But viewers, with that, we'll slip into a very short break on this edition of Market Fatafat. We'll keep it going with all the stocks on the other side of this break.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Get ready for a groundbreaking journey into the future of retail as we deep dive into the visionary mind of Prakash Patel, Managing Director, Bhumi World, a veteran in the industrial B2B development, as he unveils the thrilling concept behind creating an outlet mall experience that's set to redefine the retail landscape.
We are the biggest industrial park developer for SME in India right now. That people need a brand, people want to wear the brand, but in a good reasonable price. So for that we have surveyed and everything, and we have created a factory outlet mall which will give you a discount 365 days.
Don't miss out to watch this special episode exploring Bhumi World Factory Outlet, only on ET Now.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything! Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Hi there viewers, welcome back. We're still watching Market Fatafat on ET Now. Let's keep it going with all the stocks that are buzzing in today's trading session, and let's talk technicals once more with Forum. Forum, you've picked out Graphite India for us. Tell us, why have you picked this stock on your radar? What are the charts saying going ahead?
Graphite overall, the trend has been quite bullish. It has been consistently forming higher tops and higher bottoms. Now, last year in October, the stock price formed a low of around 437, which was also like taking a support near the 100-day moving average. And since then, we've seen a very good up move. Now, this up move halted near 650 levels, that is in the month of February. And then we saw a bit of a retracement, or we can say as a correction, which led to the stock price getting into a consolidation. Now, after almost more than a month of consolidation, now we have seen the stock price seeing some kind of a momentum that is picking up. There is a very good increase in volume in the past few trading sessions. And in fact, when in the last week the stock price corrected, it just closed marginally lower from its breakout levels. But again, it has picked up and giving a very strong closing. So when overall trend is bullish, there is a good increase in volume, and an indicator like parabolic SAR also continues to remain in a buy mode. It indicates that the overall stock can witness a continuation of an up move. Thus, one can just look at maintaining a stop loss below the levels of around 636 and look for a higher target of closer to 700 to around 720 levels.
Okay, surely keeping an eye out on that. You can see flashing on the bottom of your screens. Look at the recovery. Actually, I want to pull up the markets, Nifty, 0.5% uptick, 2,100 levels. We started 22,100 levels. We started at just around 22,000. Request my producer to just pull up the charts of Nifty Bank, because that's surely seeing a sharp recovery. I also want to be marking, which stocks are seeing the recovery. So let's pull that up as well. When you're looking at it in terms of the recovery, we're seeing HDFC Bank leading the recovery. We do have Bharti Airtel, that's there in terms of a strong move that we're seeing. Reliance making it to the positive side. Look at Nifty Bank. Day's highest point as of now is what we're seeing, the Nifty Bank up 0.8%, comfortably in the green there. And Reliance is another one that we should talk out and watch out for as well, coming back on the positive side. Will be reporting its numbers on Monday. So yes, leading the recovery, FMCG pack, that's coming up as well, on the charts over there. So that's interesting to watch out for. Other than that, obviously the mid and small cap, let's put up the Nifty mid cap. What's that doing? Are we seeing a recovery in the Nifty mid cap? Seems like slight bit of a recovery, not much over there. Nifty mid cap is still on the red side, but rest coming and inching much closer to the green. Small cap up almost 0.3%, but sharp recovery. From the day's low, we are seeing a recovery of 1.5%. So that's interesting to watch out for, that how the shares have moved on. But let's talk about the next stock that I'm going to talk about is Elcon Engineering. They just reported their numbers a short while ago, and seems like a decent set of numbers that has come in from the company. When I'm looking at it in terms of the revenue of the company from the balance sheet, it's around 5,600 564 crores, 564 crores, I beg your pardon. Sorry, 564 crores versus 425 crores last year. So a jump in terms of the revenues of the company. Even when you're looking at it in terms of the profits of the company, we're seeing a jump there as well. Almost near doubling, we could say, because 103 crores is what the net profit is at versus 67 crores last year. So keep an eye on that. That sharp spike surely came into the stock. You know, it went up as much as 4%. That spike went up to now holding on to almost gains of 3%. But they just announced their numbers, keeping an eye out on more details in terms of margins as well as the EBITDA performance. But good numbers, seems like it, at least on the face of it.
Well, absolutely. Indian markets are also reacting rather positively to these numbers, given that spike that
we did see. And the stock split. I forgot to mention the stock split that they announced as well. So yes, that's also something that we're keeping an eye out on for Elcon Engineering.
Alright, well, let's get to move on, talk about more earnings candidates. And well, Infosys numbers came out yesterday, and Ansh, you've picked out Infosys. Share the numbers, share the brokerage notes, tell our viewers everything there is to know about this stock.
Yes, so the stock is in a bit of a pressure currently. They have reported operating margin at 20.1% versus expected of 20.7%. Also, the dollar revenue at 4,564 million versus expected of 4,640 million. Also in INR terms, 37,923 crore versus 38,750 crore. Whereas their PAT, they have this is a bit more than the expected. The expected was around 6,215 crore, and it has come in at 7,975 crore. So there was a miss in revenue, EBITDA margin than expectation, and there was a miss in guidance too. But let's also talk about guidance. So the guidance for FY25, the company has said that the revenue growth will be between 1% to 3% in constant currency versus expected of 2 to 5%, and operating margin of 22% versus expected of 20.5 to 22.5%. Also, there were a few brokerage reports too where we saw targets getting slashed actually. For example, JP Morgan and UBS both have trimmed their target price from 1800 to 1700. Also, if you see the chart, the stock is down around 20% of year high, but currently it is trading in an oversold region. So we may see some positivity coming in.
Alright viewers, with that we'll slip into a very short break. We'll keep it going with all the stocks. You stay tuned to ET Now.
In association with State Bank of India, the banker to every Indian.
बड़ा दोस्त हो राहों में तो चलो अपने ताव में.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Sir, आप इतने colorful हो, but how can colorful be powerful?
Follow me. धूप के पसीने छूट जाएंगे, लेकिन ये डटा रहेगा. Dulux Weather Shield Power Flex.
इसका हर रंग लड़े धूप, धूल और बारिश से.
It's colorful. It's powerful.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
welcome back viewers. You're watching Market Fatafat with us on ET now. Let's keep it going with the stocks, and now on the technical front we're being joined by Arpit Beriwal, the Manager Derivatives Analyst and Equity Research at Motilal Oswal Financial Services. Arpit, hi, thanks so much for taking the time out and joining us this afternoon. Let's kickstart this segment with you and talk to us about your first stock you've picked out for us is Bharti Airtel. Decent returns coming in over the last 6 months. Stock has done pretty well, up almost 35%. Tell us what you are penciling in next for the stock going ahead.
So very good afternoon everyone. So talking about Bharti Airtel, if we see technically, the stock is in clean uptrend. In spite of market weakness in last couple of days, Bharti Airtel, there was no weakness. Technically it is trading a lifetime high. Monthly the setup is strong. Weekly it has given a range breakout above 1250, 1240 zones after 4 and 5 weeks. Daily scale it is forming higher highs, higher lows. There is a clear uptrend, and generally the nature of the stock has been it gives a move of 10 to 15%, then consolidates, and that's how been from past 6 months, from 800 to 950, from 950 to 1100, from 1100 to 1250, and now the new range shift towards 1400 plus levels. So looking at the overall chart setup, market has also seen a good recovery in last couple of hours, and looking at the overall setup, so Bharti Airtel will be a preferred pick for positional basis. One can go long at current levels or minor dip towards 1275 to 1280 levels with keeping stop loss of 1240 for an upside move towards 1350, then 1400 zones.
Surely keeping an eye out on those levels for Bharti Airtel. But let's move on, talk about TVS Motors. This is the stock that we're keeping an eye out on. Citi actually came out with a note. They've opened a 90-day negative catalyst watch for TVS Motors. They are saying they're maintaining the sell rating, though hike the target price by 50 rupees. So 1,450 is the target price that they've given versus a 1,400. Nonetheless, it is a decline that they're saying because it's a sell rating that they've spoken about. So they believe that the competitive intensity is escalating in the electric two-vehicle space. They believe the Q4 results is something that could be a bit weakish for TVS Motors, and lower operating leverage could be something that could be impacting the earnings. Valuation provides little margin for error, so that is why concerns coming around a 90-day negative catalyst watch is what is coming for TVS Motors, and that is why the stock is down 2.6% as of now, almost near the day's lowest point as well.
That's not holding up pretty well in today's trading session. Let's flip focus and talk about a stock that is indeed doing pretty well today, and that is Indus Towers. Gaurav, help us understand what's aiding this stock and what's the news flow when it comes to this one.
Indus Towers is in focus today, and this stock is not just in focus only today, but if you look at the 1 month performance, it was up almost by 50%. Now what is up with Indus Tower today is that they have signed an MOU with NTPC Green Energy, and with this MOU they will actually explore a joint development in renewable energy based power projects, which will include solar, wind and energy storage options as well as solutions. Now with this, Indus Tower is also aiming to expand its renewable energy portfolio to gigawatt scale capacity. Now if you look at the stock performance also, it is up almost 3%, and as I said, in the last 1 month only this stock has given more than 40% of the returns on the back of multiple tailwinds. So definitely keeping an eye on this counter because we may see further upside coming up in this stock.
Okay, surely keeping an eye out on Indus Towers, buzzing away in trade for the last few trading sessions is what we've seen as well. Let's move on, talk about ICICI Securities. Ansh, this one is in focus on the back of its numbers. How are they looking like?
Yes, also the stock is actually in green. It is trading over 1% in trade today. They have reported revenue at 1,543 crore as compared to 1,323 crore in the previous quarter, which is up by around 16.7%. Also, EBITDA has seen an up move from 911 crore to 1,079 crore, which is up by around 18.4%. PAT has also has seen jump of over 15% from 466 crore to 537 crore. Talking about EBITDA margin here, so we are seeing it is at 69.9% versus 68.9%, which is up by over 100 basis points on quarter-on-quarter basis. The company has also declared second interim dividend of 17 rupees per equity share, whereas if we talk about institutional equities, that revenue is up by over 110% on year-on-year basis, whereas issuer service and advisor revenue is up by 724% on year-on-year basis.
All right, Ansh, thanks so much for taking us through that. Let's get a move on. Let's once again take it to Arpit and talk a little bit about the technical charts. Harpreet, Escorts is your next pick on the chart, and when you look at the 6-month move, it's a negative return coming in from this stock. So tell us, what are you looking ahead for this stock? What are the levels that you're looking at?
Yeah, so rightly as mentioned about Escorts, if you see the monthly structure from past 6 months, that was in the downtrend, and in spite of auto index at lifetime high, the stock was not performing. But this month, there is a good change in the structure of the stock. On monthly scale, it negated the structure of lower highs, and from a strong bullish candle. On weekly scale, it is hovering above 3000 levels, which was the initial hurdle level. And now on daily scale, slowly, gradually, it is trading above short-term moving average. So looking at the old chart setup wise, the risk reward is quite favorable, and slowly, gradually, it can head towards its previous all-time high levels, towards 3350, 3400 levels. On immediate basis also, daily scale, it is holding above 3050 levels. So risk reward is quite favorable. One can go long at current levels, with keeping stop loss of 3050 for an upside moves towards 3300 levels.
Can add on those levels for Escorts over there, but let's skip into a very short break on that note. Don't go anywhere. We're seeing Brent crude oil has erased all those gains, so it's going to be interesting how the second hour of the day actually turns out. But let's skip into a break.
Powered by BSC. Invest right, the future bright. Sturtis Healthcare Private Limited deals in quality medicine. Sturtis, quality that you can trust. In association with State Bank of India, the banker to every Indian.
All leaders in individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
DT now have been getting you bit by bit.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Hi there viewers, welcome back and thanks so much for staying tuned into Market Fatafat. Now let's keep it going with the stocks. Gaurav, talk to us about Inox Wind. A good move coming in on the stock today. Stock is up in the way, flying away in the wind. So tell us more about this stock and what's aiding the stock today.
Well, yes, you're absolutely right about the stock price of Inox Wind, because if you look at the company, now the company has won a repeat order of 210 megawatts for its 3 megawatt WTG from Hero Future Energies. Now what is happening is that after this commissioning of this project, they have also won multi-year O&M services to be a part of this contract, and this WTG will be supplied technically from Q3 of this FY25. Now given this order, the company has said that this order actually reinforces the confidence on 3 megawatt WTGs that they have, and this is being one of the most efficient turbines in its class is what the company is claiming. Talking about the stock performance again, this is up almost 3.5% in days trade, and given that in the last 1 year this stock has given more than 400% of the returns, definitely this stock is worth keeping an eye out, because we may see further upsides in the stock coming ahead.
Okay, surely keeping an eye out on that, but we do have Hindustan Zinc numbers coming in on the screen. We'll wait for more details on that, but before that, let's go across to Arpit to understand what's the chart indicating for HAL, because this is making the list of a lot of technical analysts, Arpit. We've already seen that run up in the defense pack, then it was a bit subdued and managed to hold on to those gains. Look at the 6 months also, almost doubling there as well. So what's the view now on HAL? What should one be doing?
Talking about HAL, across mid-cap, last week we have seen some correction also in mid-cap space. but this counter has been a big outperformer, and the chart clearly speaks for itself. Monthly structure, the trend is intact. Weekly scale, slowly, gradually, the base is shifting higher. So it started moving above 3,000 levels, then 3,200, then 3,600 level. And on the daily scale, if you see from past 7 to 8 sessions, it is consolidating. But the good part is that it is continuously holding at high levels, trading a lifetime high. So slowly, gradually, we're expecting a good move towards 4,000 plus levels. The entire defense pack has been under strong outperformance. So HL technically also, it has given a new range breakout above 3650 levels. Slowly, gradually, it is moving higher. It is trading about short-term moving averages. So from year on also, we can expect good 8 to 10% upside move in coming couple of weeks. So HL would be a preferred pick within defense space, with keeping stop loss of 3,650 for an upside move towards 4,000 plus levels.
Only keeping an eye out on that. That is HAL for you all. But let's move on. Talk about these OMCs, HPCL, BPCL, IOCL. All of them are in focus. Every time crude moves, we talk about these stocks are in focus because the rise in crude prices impacts their margins, and that's the main reason that we talk about these stocks. But recovery comes in for these stocks. Why? Because Brent crude oil prices have recovered. The gains actually that we saw not recovered. So that positive for these companies, and that's why they erase off the gains. So that is something interesting to watch out for. But these OMCs surely keeping an eye out on them today, and the oil and gas pack. But we also managed to speak to Vandana Hari, who said that heightened volatility is something that has been penciled in for the crude prices. What more did they have to say? Let's go across and listen to it.
All that we can expect in the coming hours is a lot of the new fear premium that has crept into crude will more or less remain intact, but expect even heightened volatility. For the rest of this year, I think it really hinges on US's ability to de-escalate the situation in the Middle East, and then of course then perhaps go to tackling what's happening with Ukraine and Russia. Even there, things seem to be slipping out of America's control, because Ukraine has been firing drones into Russian refineries and energy infrastructure, disregarding US entreaties not to do so. So big question mark over these two ongoing wars and the risk premium in crude.
Well, all right, let's get a move on then. And before we talk about the next stock, let me quickly mark in Hindustan Zinc's numbers that have just come out. Q4 numbers are out. Their consolidated revenue has fallen a little bit at 7,549 crores versus 8,509 crores on a year-on-year basis. Profitability also sharply down at 2,038 crore rupees versus 2,500 crore rupees this time last year. So, well, the first look looked a little weak when it comes to these numbers.
Because it seems like there's a bit of a fall coming in. We'll wait
Absolutely. We'll wait out for more details on these numbers as well. But let's get a move on before that, and let's talk about Schneider Electric, because that stock is the next one in focus. And Schneider Electric is in focus on the back of a Goldman Sachs note. And what Goldman Sachs has to say is they've gone ahead and they have maintained their sell rating on the stock, on the back of which Schneider Electric is under a little bit of a pressure, down almost 5% even as of now as we speak. And Goldman Sachs has initiated coverage with a sell recommendation. They say that the risk reward appears unfavorable in the company's stock after 375% rally in the last 12 months. So they are penciling in some cool off when it comes to this stock's move. They've set a price target of 470 rupees, which is much lower than the current market price. We need a steep cut coming in compared to 720, almost a 40% cut coming in from the current market price. So, well, on the back of this bearish note that Goldman Sachs has initiated, the stock is under pressure, down 5% as we speak.
Okay, that is Schneider Electric for you all. Let's move on, talk about GMR Infra then. Anshan, why is the stock in focus today?
Yes, so the stock is actually trading in green. It is up over 1% in trade today. It is in focus on the back of the monthly traffic data which they have shared for the month of March, as it has crossed 120.8 million pax mark, and this is the highest ever pax traffic, which is up by around 20%. Also, the domestic traffic is up by 17% on year-on-year basis, whereas the international traffic is up by 33%. Now, if we talk about airport specific, then Delhi Airport handled highest ever pax traffic. In FY24, pax traffic crossed 73 million pax mark, which is up by 13% on year-on-year basis. Whereas if we talk about Hyderabad Airport, it too handled highest ever pax traffic, and in FY24, the pax traffic crossed 25 million pax mark, which is up by 19% on year-on-year basis.
Okay, surely keeping an eye out on that. But let's move on and actually slip into a very short break. That was the 20th stock for today. We'll come back with more stocks after the break.
The love which I had seen in her eyes, and promises of a new sunrise. If you hold me tight, you'll feel the love which I feel inside. Hold me tight, just hold me tight.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
छत टपक रही है।
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है।
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए, प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं।
गुड, एटलीस्ट मेरा घर तो लाखों में एक होगा।
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal. Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
First floor going up. Stand clear of the closing.
Viewers, hi there, welcome back. You're still watching Market Fatafat with us on ET now. Before we move on to the next stock, let's come back to Hindustan Zinc's numbers. Let's talk a little bit more about that because now we have more details. EBITDA has come in at 3,649 crores versus 4,255 crores on a year-on-year basis. A drop over there also. But margins is the one that we're watching out for because they have come at 48.3% versus 50% on a year-on-year basis. So a slight bit of a downtick coming in on the margins front as well. Stock is under pressure as of now, 1.5% lower as we speak. But let's get to move on then and talk about an earnings candidate, and HDFC Bank is all set to release its numbers tomorrow, Gaurav. So I hear
that has a hectic Saturday tomorrow. He's surely going to have a busy one, but today it's seeing a rally, no?
Today it's seeing a rally, and well, lots of banks are slated to come up with their numbers in the following weeks as well. So Gaurav is going to have his hands full of these numbers. But Gaurav, take us through what HDFC Bank's numbers are being expected by the street. I believe it's a good set. That's what we're looking out for.
If you look at HDFC Bank and if you look at the provisional numbers, they were actually quite strong. So for example, advances growth was at 1.6% on a quarter-on-quarter basis. If you look at deposits, it grew almost by 7.5% on a quarter-on-quarter basis, which was actually strong. And CASA ratio also grew by 50 basis points. And on back of this now analysts are expecting net interest income to increase almost by 2% on a quarter-on-quarter basis. And at the same time, they're expecting net interest margin to decline a little by 5 basis points. This may come up in the range of 3.35%. And at the same time, they're expecting ROA to remain at 2%. All in all, they do not see any kind of risk to asset quality for the bank. And on back of this news, if you look at the stock performance also, it is up 2% because there is no negative news coming up from the analyst expectation at least. So definitely keeping an eye on this counter because management commentary will be very interesting and very important for the HDFC Bank's growth from here on.
Absolutely, and that's what we're keeping an eye out in terms of commentary. But Arpit, what are you keeping an eye out on for HDFC Bank? That lull period for HDFC Bank seems to be over at least. Is that what your chart is indicating?
Just to talk about HDFC Bank, if we see overall the bigger time frame structure, it has been an underperformer. But from past couple of weeks, if we see initially 1480 was a crucial resistance zone for the stock. And in last week, we have seen a good rally from 1480 levels to 1560 levels. Today, it retested the same level and bounces almost 41 from a day's low. As tomorrow is the result for HDFC Bank, So overall technical setup wise, it is looking a bounce back move of 3 to 4% on the upside, with keeping stop loss of 1480 for an upside move towards 1560, 1580 levels. Overall, the stock is in a range, but current junction as stock is corrected from higher levels, so the risk reward is quite favorable. And banking space, the bank Nifty has corrected almost 2000 points in last week itself. So current junction, the risk reward is quite favorable. Good 2 to 3% upside move we can see in HDFC Bank as per the result.
Okay, keeping an eye out on HDFC Bank there. But let's move on and talk about Vesuvius India. Why is that one in focus? Now, the UK-based Vesuvius Group said that it will be increasing its investment capex in India to ₹1,000 crores. That's the word that came in from the CEO of the UK-based Vesuvius, Patrick Andre. Now, he's saying that given their compelling growth that they're seeing in India and basis of their investment pipeline, they envisage surpassing their earlier stated investment plans of around ₹500 crores to reach now 1,000 crores of outlay over the next few years. And Vesuvius has been making significant investments in India by expanding the capacity of its existing manufacturing plants, as well as setting up 3 new greenfield manufacturing projects and plants which will create additional capacity of 250,000 tons per annum. That's something interesting, with more capex plans coming in from Vesuvius Group, which is based in UK, in Vesuvius India. So yes, a positive outlook at least they have for India, and that is why the stock is up almost 4% in trade today.
Alright, a good stock move coming in over there. Let's get a move on then. And Arpit, talk to us about Jindal Steel. Now, these metal counters have been in focus for quite some time now. Tell us what you are penciling in on the charts. What are the levels you are spotting for us?
Yeah, so talking about metal space as a whole, within that metal space, we have seen a fantastic rally in the entire metal pack in last month itself. Past couple of days, we have seen consolidation at higher zone, but Jindal Steel has been a strong space within the metal pack. So technically, it is trading at lifetime high territory. Monthly, weekly setup is quite strong. On daily scale, it is consolidating between 880 to 940 zones. However, looking at the overall chart setup, slowly, steadily, we can expect another upside move for from current levels, 7 to 8% upside move, and it can touch definitely 4-digit figure in coming weeks. So overall, looking at the overall space-wise also, we are expecting quite outperformance within this. So one can go long at current levels with keeping stop loss near around 840, 835 levels for an upside move towards 950, then 1000 zones.
Alright, so we'll be watching out for all of those levels on that stock as well. But let's get a move on, talk about Apollo Hospitals. This stock is also in focus on the back of a brokerage note. Stock is doing pretty well today, and well, it has also aided Nifty's overall move also winning today because it's a Nifty 50 constituent as well. So let's take a look at what this note is. HSBC is the one coming out with this note. They've reiterated their buy stance. They've hiked the target price to 7,475 rupees, implying a 12-month potential upside of almost 18.5%. Now, HSBC also calls Apollo its top preferred stock in the hospital space, with an expectations of sustained earnings growth going ahead as well. So, positive note coming in from HSBC for Apollo Hospitals. Stock is holding up pretty well, almost 1.8% higher as we speak.
Okay, surely holding on pretty well over there. That's Apollo Hospitals. But let's move on and talk about Torrent Power. Ansh, what is the stock doing? Why is it in focus today?
So the company has entered into share purchase agreement for acquisition of 100% equity share capital of an SPV from the seller for around 50 lakh. Now the name of the target entity is MSKVI 9th Solar SPV Limited. Also, if we see the chart on year-to-date basis, the stock is up over 60%, advancing for 4th consecutive month, and it also trades above key DMA levels. So for those reasons, the stock is in focus and it looks positive.
Alright, let's get a move on then and talk about Indigo or Interglobe Aviation. Arpit, on the technicals now, with summer holidays and all right around the corner, we're seeing a spike in airfares also coming up as demand for air travel is going up. But that's on the fundamental side. Tell us what you are spotting for Indigo in terms of the technicals. What are the levels you're seeing?
Yeah, so talking about Indigo, if we see overall the chart structure, the bigger time frame structure is strong. On monthly scale, it is continuously in uptrend. On weekly scale also, we have seen a good rally. So on daily scale, if we see the stock move from 3,200 levels to 38,800 levels, a vertical rally of almost 600 points. In past couple of days, it has retested, it has corrected from higher levels, and it has rebounded near 3,400 levels. So if we see the positional structure, the stock is in clear uptrend. On weekly structure, the stock is good, and on daily scale, it has retested its previous breakout zone. So it is near its support zone, and looking at the overall chart setup, we can expect another 7 to 8% rally towards its previous all-time high. So we can go long at current levels Indigo or minor dip towards 35.40, 35.50 levels, with keeping stop loss of 34.50 for an upside move towards 37.50, then new lifetime high towards 38.50 levels.
Let's move on and talk about Axis Bank then, Gaurav. Why is this one in focus? What's keeping it in the news today?
Yes, for Axis Bank also the results are coming on 24th April. But what was the news that kept the Axis Bank stock in focus today is that basically the company came up with a notice of the annual meeting, and during this notice they also mentioned that Axis Bank will evaluate fundraising options which will include potential QIP during the meet. Now this was actually a surprise for investors, because if we recollect the statements that were given by management in 3Q, the management had categorically denied any kind of need for capital raise, and given that they have now looking for QIP options, it came up as a negative surprise for investors. Another trigger for the bank would be that the CEO's current term is going to end on December 24th, and the clarity on the extension is still awaited. Although if we look at analysts' view, they believe that the notification of the QIP might be an enabling provision for capital raise, which is actually a normal course of business for the bank. But if you look at the stock performance, it went down almost 2% in the day's trade. In the morning, it was down almost at below 1,000 rupees level. Now that the stock has recovered, but still definitely keeping an eye on Axis Bank, because there will be a key movement if the QIP comes up for the stock.
Alright Gaurav, well thanks so much for taking us through that, and let's talk about the next stock in terms of the technicals. And Arpit, you've picked out BSE for us. When I'm looking at the charts, not much happening when it comes to the last 6 months. In fact, I believe we have the updated chart, but there are good moves coming in terms of 6 months moves. So tell us what's next for the stock. What are you penciling in?
Yeah, so talking about BSE as a whole, if we see monthly time frame, it is in clear uptrend, and last month it has given a breakout above 2500 levels. That was a consolidation breakout after 5 months. On weekly scale, in last couple of weeks, from the March lows, it has seen a almost 30% rally from 2200 to 2800 levels. So looking at the overall positional setup also, it has given a pole and flag breakout on monthly setup, and positionally we can expect a move towards 3200, 3300 levels plus. So BSE within this space, it's quite strong on daily scale also, trading about its short-term moving averages. And looking at the overall chart setup also, it is consolidating between 2650 to 2850, but the trend is quite strong, and we have seen good recovery also in the market along with in the broader indices. So good 8 to 10% rally can be seen from current levels. So one can go long at BSE with keeping stop loss of 2600 for an upside move towards 3000, then 3200 levels.
3200 levels even after this is what one could expect for BSE. Interesting, that's shaping up for BSE, but that was the last stock for today, stock number 30. Thank you so much Arpit, Ansh as well as Gaurav for joining in with us on the show, as well as it's a goodbye from Snehi, myself as well as the team who put this show together. A happy weekend to all of you all.
Powered by Bank of Maharashtra. Ek parivar, ek bank.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
God, इतना पानी आ गया है पापा जी बारिश हो रही है वाह छत टपक रही है
अरे शिफ्ट करने वाले ना पापा, बस घर मिलने की देर है।
तो देर ज्यादा ही नहीं होगी?
हेलो यू घर है, इसकी शादी नहीं कि बिना एडवाइस के डिसीजन ले लिया।
इसीलिए तो घर मैजिक ब्रिक्स पे देखे, प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस है।
गुड, तो एटलीस्ट मेरा घर तो लाखों में एक होगा।
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia, and it's a complete reversal of what we saw at the start of the trading session. From a risk-off mode, it's completely risk-on right now. There's a solid recovery at our hands. Whether it's the Nifty, which has managed to recover over 350 points, and the Bank Nifty, that's managed to recover almost 1,000 points from the day's lowest point in the trading session. Very swift recovery, and the good news is it's getting held on to. There's not a big worry right now, and we're not seeing any dip on the rises that we have seen. Separately, in terms of the big movers right now, of course, it's gold and crude which have erased the gain. So, of course, at the start of the trading session, there had been a spike in crude which had reached a level of $90. That's back to 87. Gold too is now just around the $2,400 per barrel mark. US futures, which were initially showing a cut of 500 points, narrowed to 300, and right now it's just showing a cut of around 100 points. So, complete reversal of what we saw at the start of the trading session. HDFC Bank, that one is focused. That one is in focus ahead of its earnings, which are expected tomorrow. We also have ICICI Bank, which is gaining ground. ITC is the other heavyweight, as well as Reliance, which are actually batting for the bulls right now. So, good amount of recovery across the board. And it's a good screen, and this is exactly what Nikunj we were discussing in the morning, right? That yes, there's a geopolitical tension, but you need to differentiate the noise from what's the fundamental of the market, and clearly that's what's happening right now.
So Anisha, geopolitics is not the reason why US markets have fallen. Let's first understand that. Markets in, at least the developed markets, have fallen because the Fed has actually bowled a googly, which is that instead of a definitive path of rate cut, they are talking about an indecisive path of rate cut. That, I think, is the bigger concern from a market structure and from a market fabric rather than geopolitical tensions. Now, geopolitical tensions, if they escalate, we'll talk about it. But you got to take narrative on a real-time basis rather than assuming that, okay, this will happen and that will happen. One. Second, the problem for Indian market and for benchmark indices, I think, is what is happening to FI selling. Now, whatever could be the underlying factor, compulsion, valuation, raising cash ahead of the election verdict, election cycle, whatever may be the underlying cause, they are selling the market, which is capping the market down. And today's recovery again is a clear example that at lower level, every time we are going to, let's say, Nifty language support level, the markets are finding takers. Every time key stocks have fallen 40-50%, you're finding them kept coming back and getting some amount of dip buying. So it's a market where you will have to say that you cannot be very bearish, you cannot be very bullish. It's a market where you will have to really time your entry on bad days to buy and time your exit on good days to book some profits if you're a pure trader. Now, when it comes to the medium-term picture, Anisha, frankly, nothing changes. The challenge what I see is that there is just no support coming from any large news. I mean, IT has been thanda. There's nothing else actually which has come from the earning front. That's my only concern.
Let's hope HDFC Bank manages to reverse the course of that, because tomorrow is when the numbers are expected. Q4 provisional updates were quite strong and the stock is fairly excited. So there is more room for perhaps a bit of a surprise there, or if not, the stock might decline given the fact it's already been doing quite well. Let's take it across to our technical experts for helping us get the insights into what we should read into the market mood right now. Kunal Bothra as well as Naresh Marani is always with us. Kunal, let me start with you. This reversal, I don't think any of us anticipated it with this kind of ferocity at the start of the trading session. We were all discussing how we should probably stay away from the market. Has that narrative changed now? Would you take a bet right now given the fact that there's weekend and the news flow could turn again?
So good afternoon. Yeah, I think partly yes. That you could probably, we probably did not anticipate that the markets would go into a full swing reversal on an intraday basis itself. But then what has changed intraday is, a lot of technical and derivative factors. For example, what we're seeing from that pickup of 200, 300 points recovery for the Nifty is that there's been a major amount of writing at the 22,000 strike for the index. Now, after such kind of geopolitical news flow, when you see such amount of extreme writing for an index at a particular strong psychological level, that generally brings into place that the markets are now expecting that this could be a floor for the index for the next 1 or 2 weeks. And in the next 1 or 2 weeks is where we are expecting that the markets could probably be a lot more volatile. But the data is completely different. So this puts into place that this recovery is here to sustain, as well as we could probably be expecting a build-up of the market trend going forward. Now 22,000 could be kept as a base or a support for the index, and looking at this change of data for the index front, I would probably expect that this trend would continue for larger cap names. I think the first put of call is when the markets get into recovery, that large caps are the ones which could take the first leg up, and then followed by that, when the market gets into a much more better confidence zone is where mid caps and small caps tend to outperform.
Okay. Want to come back, it's been. Let's look at global markets for a second now. Dow futures, let me just look at it. Just give me a second. Europe. So it's like a very broad-based recovery in a sense which has happened. Treasuries have also come off. There you go. Where is Europe? Just give me a second. European markets are not in the green, so you are actually outperforming the markets. It's evident. US futures, however, let me just see. No, they are also down. So you're doing much better than what the world is doing. In fact, most of the European markets are down by about 3/4 or nearly quarter to about 3/4%. Nothing scary, nothing alarming. Let's see how it progresses for the rest of the day. Is today one of the days where FIs have not sold? Maybe yes. If that is the case, then obviously the recovery in the market, I think, is really a factor of which way the technical flows have moved in the short term. Bajaj Finance, unusual name, it's done very well for itself. Reliance numbers are on Monday. Ahead of numbers, where is Reliance? It's been a standout mover this year. 29.36. Jio also, Reliance and Jio, they both have had a very excellent year, so to speak. Jio also is 371, off from the day's high, up from the day's low. Pashupati Advani joins us now. Long time. How you been, my friend?
Good, my friend. This is like a very quiet, sleepy market.
We had gone to Bombay Stock Exchange today, and I was fondly telling my team that there's a building where Pashupati had his grand office.
Well, anyway. No, so basically, I think we are having luck because our elections are also going on, and because of that, we have some strength in our markets versus the rest of the world is waiting for crude to reach 100 and a war to continue and all the bad news that is coming. So that, there seems to be nervousness in the rest of the world. India, of course, SIPs continue. People have confidence. Looks like Modi ji is going to come again. So therefore, people have confidence that policies will stay. And I think that's what's fueling our markets. And I think it will be like reasonably firm until at least till the election results are announced, as long as there's no great catastrophe happening in the Western world. So that's the only concern that I have in the markets right now. Nikunj?
Hello. I say the word hello because rarely you see a 2% move. Naresh, has the tide turned for HDFC Bank?
Yes, so it has started making that first change after a really long time. So 1400 was the price point, 1470 was the high for almost 2 months. It was in a very tight range. He broke out about 1470, went to 1550, and on a retest did not even test 1470. And now we are turning around. So the results could be the next trigger if it can do so. So I would expect 1450, 1470 to be a support, and upside we could slowly and steadily retest the 1600 mark. So technically, a major bottom reversal is done after that move above 1470. Only when it starts going below 1470, then maybe there would be a change of view. Otherwise, we are slowly headed higher.
Okay, slowly headed higher. That's the verdict coming in for HDFC Bank. But of course, tomorrow is the earnings, so a lot is contingent upon what they really deliver. Separately, take a look at TVS Supply Chain Solutions. That stock is up 14%. Force Motors is, gaining with quite a bit of force right now, 13% higher. Elecon Engineering, which is just a result candidate, we saw a solid show when it comes to the top line and the profitability, higher by 10%. And then Motilal Oswal, which is going to consider a bonus issue perhaps on April 26th, is also in focus. So all of these stocks doing quite well. Edelweiss Financials is the other one. In fact, Pashupati, this entire basket of the broking, the AMC, the financial market ancillaries, that is the exchanges, CDSL, etc., they all have been doing quite well. And of course, there's a fundamental tailwind to it. But the question becomes, when does it price it in? What do you see of the valuations there, and what's the top recommendation from this pack?
Well, I think that the pack is obviously doing well because as more and more people get involved in the markets, and we are seeing that, there is obviously going to be, returns to all the big players, and certainly it's big players. The other thing is that there seems to be some consolidation in the space, and some of the smaller players are closing shop and moving into the fold of the bigger player, which is also helping the earnings. And then, of course, you see, they're spinning out like 360 WAM and Nuvama are separate from the parents. And I think that that's also showing a good thing because, it's becoming a separate business and is getting identified and on very high PEs. But, those are all pluses for the entire industry. And I think that's great. It's all I can say is finally the industry is getting its due. It's been a pasted industry for many, many, many years.
We also spoke to KK Mystery. Now, we spoke to him earlier in the morning where his views on HDFC Bank are very important. Right now, let's take a break. When we come back, we'll try and get you an excerpt of our conversation with KK Mystery on where HDFC Bank is headed and why the near-term numbness in HDFC Bank is a matter of time will get corrected.
In association with State Bank of India, the banker to every Indian.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
India is the world's fastest growing economy. You hold the future of India's growth in your hands.
AI will not become a master, it is actually a perfect slave to those who control it. So if we surrender completely to AI and not question, then we'll become slaves to those who control AI.
Our organizational culture is really founded on the principle of our purpose, which is to refresh the world and make a difference.
What energy!
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India. For better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET now.
News on Hindustan Zinc, they see FY25 project capex for the year is expected to be in the range of about 270 to about $300 million. That's about a little about 3.5 to 4,000 crore. Progress of new roster at the Debari project is on track with commissioning, and Hindustan Zinc fertilizer projects will be moving as per track. So they're expanding. I mean, the whole fear that Hindustan Zinc, once the cash is out, dividend is out, maybe they'll go easy on dividend. I think that is something which is not having impact on the stock for surely. Now we spoke about HDFC Bank. Here's a view from Keki Mistry of HDFC Bank on where the bank is headed and why they are going through in the near term a little bit of pain.
Well, the place we are standing is right outside Asia's oldest stock exchange, that is Bombay Stock Exchange. This place has layers and layers of history. But the interesting bit about the current leg of the bull market is that it really belongs to the common man. The number of demat accounts, the number of unique mutual fund accounts. There seems to be a real resurgence in the way how Indian investors are now approaching the stock market. So what is the golden thread which is really connecting the stock market?
If you ask me what was it that contributed to that, I would say number one, truly the highest standards of governance. We were willing to compromise on people not being very efficient, not being very great in their job, but even the slightest, even the tiniest question on governance would never ever be tolerated. So that I would say would be one principle. Second principle is we kept the head count very low, very small. We didn't have too many people. For an asset base as big as ours, we had just about 4,500 employees in HDFC Limited at the time of the merger. We invested a lot in technology and systems, and we kept an atmosphere in the company which was free of politics. If you ask me honestly, that was one, I consider that as one of the most important contributors to our growth, that everyone contributed. And the third I would say is that we had very, very clear goals that we set for ourselves. Opportunities were always there, India was growing and India continued to grow. And I truly believe that even today the growth opportunity for financial services in India is absolutely phenomenal. When I joined HDFC in 1981, October 1981, our share total paid up capital was 10 crores.
That's it.
10 crores. And our market capitalization was about 8.5 crores.
8.5 crores was the
It was
market
trading
cap.
below market, below par. That was 1981 October. At the time of the merger in 2022, 41 odd years later, our market capitalization was over 60 billion with a B dollars. That was the kind of wealth that Touchwood we created. And besides HDFC itself, we had a number of companies. We had the bank, we had the life insurance, general insurance, asset management, HDFC Credila, venture capital, real estate, all of that. So if you take the total market capitalization of all the listed companies in the group at the time of the merger, it was about 175 billion US dollars.
Wow.
That was the kind of wealth we created.
Well, in the meantime, take a look at the stock price of Anupam Rasayan. That's seen a sharp spike. Ramkrishna Forgings is the other one. And then Nuvoco Vistas is also one stock which is actually perking up as we speak. So quite a few buzzers in the trading session. But Nikunj, what surprises me today is the kind of result reaction that we have seen for Infosys and Bajaj Auto. And complete, distinct from what the earnings was. Infosys was very disappointing. The stock is actually in the green right now. And you have Bajaj Auto where there was nothing to complain in the numbers, but it's actually down at a time when M&M, Maruti, etc. are up.
See, Nisha, what matters is what news is in the price. With Infosys, the stock had already fallen in the run-up to the numbers. TCS had gone up in the run-up to the numbers. Bajaj Auto has been a massive outperformer in the run-up to the numbers. So, in the near-term, market will always try and built up on expectations, sell after the news. So if you ask me, is there a long-term trajectory change for Infosys post the numbers? The answer to that is no, sir. I think the business for IT services is in a disarray. Within that, TCS is right up there and rest of the pack I think is shaky. The business for Bajaj Auto is in structural uptrend, which I think is visible the way they've demonstrated the ability to move from two-wheelers to three-wheelers and from three-wheelers to premium biking and premium biking now to what they're doing in terms of the EV space. 20% margins in a tough environment when exports are picking up and domestic market is in a sense struggling. I think it's a clear example that the worst is behind Bajaj Auto because they've demonstrated the ability to gain market share. Now what happens today, tomorrow could be a function of technicals, who bought before the numbers, who wanted to sell out before the numbers. Those factors could be at play. But from a positioning standpoint, Infosys remains an underperformer and Bajaj Auto remains an outperformer. Pushupati Advani, do you agree? Do you disagree? You have the option to do both.
No, I absolutely agree. I think that see again, what are we looking at in the market? Right now, everyone is grasping at straws because you're just trying to find good news. If there's expectation of good news, you buy into the stock, the trading people, and then once the news comes, good or bad, you get out and move on to the next one. You got earnings. A lot of people, play this game all the time and with a pretty good margin on success. So, why not it continues? It also creates volume in the market, creates liquidity in the market. So it's all very good for our system. And, so let it continue. Nikunj?
So what's been your approach of late, Pashupati? I mean, where are you shopping in this market? Where are you taking some chips off the table, if I may use that terminology?
Well, I have not liked in IT generally because I just think that, as you said, the whole sector is in disarray because the business models are changing. AI is coming. It looks like AI, the main profit is going to go to the big American companies rather than to spread to the rest of the world. So, and our guys are not able to, pick up and get new business fast enough, even though we've got a currency that's got weaker and that should increase their bottom line. So, but I've not been enthralled with IT. Where I am excited is I think that infrastructure is still continuing and it's continuing in, spades. So I would say that, you've got all your construction companies, all the cement, all the steel, because roads are being built, buildings are getting finished, tunnels are being made. We're seeing the coastal road in Mumbai open slowly, but we're seeing it. So those of us who've enjoyed part of it are actually saying, good, let's now wait for the rest of it. So I think that all these things are going to occupy. They're being driven by the government from the front, and those are the companies to be bought. And you're getting good dividends also from these companies. And I think if you've made a sectoral change into some good, profitable government companies over the last 6 months, you've all done very well. And I think that's really where we even should continue to go even now.
That's the take coming in on the markets and the stocks which are buzzing around right now. But Tata Communications is one stock which is down about 5%. The numbers actually came day before. Yes, they were slightly muted, especially on the margin front. But we did speak with the management and they sounded confident that even though they can't call a bottom on the margins as yet, they are expecting a bit of a recovery. Given the stock is down almost 5%, let's listen in to the management's take.
There is a drop, but I would say largely it is going by design. We are in a mode of investment. When we called out our strategy to double our revenues, we said that we need to invest in the markets with people on the ground, invest in marketing. as an integrated unit, the media business will turn profitable. And similarly, Kalera integrated with our erstwhile Digo and InstaCC platforms, which is what we call as a customer interaction suite, that will turn profitable this year. Our strategy very clearly is to improve the margins in this coming year. I don't want to comment on a quarter-on-quarter basis, but our strategy when we acquired these companies is to deliver on the synergies, to deliver and make them profitable, which means that our overall company profitability will go up. That is what we will be working on.
Where are we? We've just maintained that comeback. We've maintained that comeback both on benchmark indices. From the day's low, how much is the recovery, Kunal, now? You're up 140 and you were down about 150.
Yeah.
That's about 300 points on the Nifty, right?
Yeah, 350 approximately.
Which is impressive.
Very good.
Which means the support in the market is now respected, and now the quest to find the new resistance or new highs on.
So I think not just that 350, not just that key support point of 22,000. We've reversed the sentiment of yesterday, Nikunj, which is the most important part, because yesterday in this last 1 hour, 1.5 hour, the Nifty fell 300-350 points. The Bank Nifty fell by I think 800-900 points. Now to reverse that immediately the next day requires a lot of strong push from bulls or buyers, and when that happens, that's generally an indication that a major bottom is in place. And we sort of and then the data complements that with extreme amount of writing at 22,000 put option, and this coming at a point when there's so much of geopolitical news flow which started which we started the day off with, and then we see this kind of technical data point. So the last 2 days of indication clearly indicates that we are at a point where the risk reward is much more favorable to try and go for a buy position over here. Yes, there could be an extreme amount of news flows which can keep on lingering around over the markets for the next 1 or 2 weeks. But then if the data points still stand to be robust, then I think the chances of the uptrend is pretty much on the higher side.
You had sell calls in the morning.
Yeah, 2 sell calls. PHEL.
So are they still intact or they've been topped out?
More or less the targets have been reached.
And if somebody is following those calls, get out.
Yeah, so I think the targets are reached and you tend to book out those stocks. Now,
okay, you got the target.
BHEL was one of the stocks.
So the stop losses were not triggered, the targets were reached.
Yes.
Okay, but no shorts right now.
No shorts right now.
Okay. Naresh, can I say that half an hour is left, 48 hours, it's a weekend, you come back, you don't know what will happen on geopolitical front. Should one go with long positions, come back on Monday, hoping that you'll get a better exit, or it's too dangerous to have overnight positions?
So, an overnight position with just a view of a day, yes, there is a risk because we'll see volatility. But if somebody has a positional view, then we are seeing more advances and declines. For example, you have stocks hitting new 52-week highs and all-time highs also. So you have a Bharti Airtel in the last 2 sessions hit new all-time highs on both the days, even when the markets were down. So if one has a stock-specific view, one can carry on. But for say a single day view, it would still be a little more scary. One data point which I'm looking out for is after a long time, we are seeing Nifty futures in a discount. This tells you that there has been a lot of short covering today. So a lot of short trapped. So we need to look at data again from next week. So stock-specific bias remains positive, but not for a single day. But for a week or so, things still look interesting on the long side.
That's the market mood right now. On that note, Pashupati, we let you go. Thanks so much for making time and speaking with us today. But let's take the closing trade ideas from our chartists. Kunal, you go first.
So Bharti Airtel is something which you recommended in the start of the day today, in the first couple of hours. I think that's a stock which has done reasonably well from being on a negative side. The stock has come back towards at its multi-week, multi-month high. So would maintain that buy call on Bharti Airtel.
Not multi-month, multi-week. It's a record high for Bharti Airtel and it's been holding on to those gains. The other one, of course, is JSW Energy. You also have, KSP Pumps, Motilal Oswal and Electron Engineering. All of these stocks are sitting at all-time high levels. Naresh, what's your closing trade pick?
So that would be a buy on IDFC Limited, where the stock has finally started showing a lot of relative strength after correcting down to 108 levels, slowly and steadily moving up. And now is getting into a range of 120 to 125, making a flag formation. Going forward, could break that flag and head up to a new 52-week high.
The top recommendations coming in from our chartists at this point of time. Time now to slip into a very short break. Don't go anywhere. Last 30 minutes of the trading session of the week. We'll track that when we come back.
when our big boss was MD. He used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal. Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
You are the shimmer of untold dreams, the glitter of innumerable stars, the key and the melodious note, the soft laughter of the jewels, the brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
India is the world's fastest growing economy. You hold the future of India's growth in your hands.
AI will not become a master, it is actually a perfect slave to those who control it. So if we surrender completely to AI and not question, then we'll become slaves to those who control AI.
Our organizational culture is really founded on the principle of our purpose, which is to refresh the world and make a difference.
What energy!
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF FlexiCap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. Well, the recovery has been maintained for now, 22,150 on the Nifty, and that is where we have found a bit of a roof for ourselves. From there, we are not, rising further, but the Bank Nifty has shown an impressive recovery of almost 1,000 points, and that, of course, has been led the big gain that we have seen on HDFC Bank. Bajaj Finance is also doing quite well, 3.5% gain coming in, and then the auto pack with the likes of M&M, Maruti chugging along very, very nicely. Let's welcome on board Chakri Lokpriya, who's joining us on the show as well. Chakri, hi. Tomorrow, of course, is the numbers from HDFC Bank. The street is fairly excited, and the stock price too. What's your own expectation as to what we should watch out for HDFC Bank, and what does the future hold?
HDFC Bank, as we all know, has been treading water for quite some time now on the not fear, but actual higher than expected credit costs and lower than expected volume growth. And also now the companies, so going forward into tomorrow, I guess, if they show some kind of stability in their credit cost growth, which is, probably they'll deliver kind of an inline number. And as far as volume growth, positive surprises are unlikely, given that, they probably want better margins and lesser volume. So given all that, the stock has, valuation-wise, I think it's okay. But I wouldn't really go after and take a big position in HDFC Bank.
Chakri, so where are you using the decline to your advantage to add more stocks?
Nikunj, if you look at basically the current earnings trend and company management, when they come to you, it's all in the industrial space, infra, automobile, auto ancillaries, and of course lately there's some of the cyclical, deep cyclicals like metals. This is where most of the earnings upgrades are coming from, and so and so therefore the comfort is there, because once statistically the earnings starts upgrading themselves, then it usually becomes a quarter phenomenon.
Okay, let's see whether it becomes a multi-quarter phenomenon or not. But for now, just taking stock of the big buzzers, Force Motors, as I pointed out, is up 12%, and overall auto pack with M&M, Maruti, etc. doing quite well. And in fact, Chakri, there are brokerages which are talking about levels of 14 to 15,000 on the Maruti stock now. Would you concur with that view?
Maruti as a company clearly, rising aspirations and all those well-known story. With the launch of their new EV models a couple of years down the road, and that segment, that price segment is actually quite vacant in terms of, on the higher end you have now the Teslas will come in, the other players, existing players, the foreign players, that is, who are already there are there. But in this mid segment, I think they have the most credible range of lineup. So I think clearly both their IC and as well as their new models, very strong outlook, and therefore continue to buy.
Well, it's a bit of a nostalgia moment, at least for all of us at ET Now. ET Now today celebrated BSE Day. It was more like a grand tribute to India's oldest stock exchange. We had the honors of ringing the bell at Bombay Stock Exchange with Team ET Now, and the two real doyens of Indian financial sector, Hemendra Kothari and Kiki Mistry, and then the CEO of Bombay Stock Exchange himself. Hemendra Stock Exchange, which then became BSE.
Okay, so that was that moment of nostalgia. BSE, the oldest stock exchange in Asia. So definitely a big day, and the bell ringing right there at ground zero. But for now, Nifty around that 22,150 mark. And of course, we have numbers that we're anticipating from Wipro today. So let me quickly run you through the expectations after disappointment coming in from Infosys as well as TCS. TCS wasn't really a disappointment, but the top line was a bit weak. For Wipro, we're expecting that there's going to be a constant currency decline of 0.2%. Margins are expected to be largely stable. Remember, BFSI vertical has been weak for Wipro, so commentary on that will be important. Deal wins might be a bit muted this time around because there was that sudden change in leadership that happened, where in theory Delaporte actually stepped down and Mr. Pillai had actually taken over. So that's something the street will watch out for in terms of what the commentaries from the new CEO as well as the Q1 FY25 guidance is something to watch out for. Chakri, you've been tracking this space very closely, and there is a very clear disparity in terms of what TCS has reported as well as what Infosys has reported. And also, if you look at the guidance for the coming year, Infosys is talking about just 1 to 3% kind of growth, whereas TCS at least has said that FY25 is going to be better than FY24, which clearly pegs TCS at a higher growth rate versus Infosys.
Yeah, if you look at, the expectations of that 3 to 6% growth has not happened in the case of Infosys. And it's a combination of both these one-time issues. But I think the broader theme for the entire sector still remains that discretionary spend still continues to be weak. The order line, the order book continues to be strong, but the order book is not converting into revenue. Some amount of margin benefit, the whole sector will benefit because of the fall in rupee, increasing utilization, lower bench. All that will work in their favor, but pricing clearly is not in their favor, given that the rupee is anyway fallen. Given all these things, I think it's an incremental story in the case of Wipro tomorrow. It's an incremental negative. They're going into with the new CEO, old CEO leaving, etc. For the whole sector in general and Wipro in particular, I wouldn't really buy the sector now.
Sector right now waiting for the right time, but in the meantime a lot of price volume buzzers in the trading session. Let's take it across to Ansh to get that detail. Hi Ansh, tell us which are the list of stocks which are buzzing away.
Hi, so Lupin will be the first stock in focus. As you can see in the chart as well, the stock was stuck between a consolidation range for 16 sessions. And today the stock has given a breakdown from this consolidation pattern, touching 2-month low level as well. Apart from this, Raymond will also be in focus as the stock has actually given a breakout from its key resistance zone with volume of over 5x its 20-session average volume, which indicates good participation in today's breakout. And it has also touched 7-month high level on intraday basis as well. Lastly, Motilal Oswal will also be in focus as stock has actually surpassed above its key pivot high of 2,120 level, touching record high level, and the move was mainly backed by high volume of over 3 times its 20-session average volume. So keep an eye on the stocks.
Okay, we absolutely will. Kunal, any view on these top buzzers that Ansh pointed out? Motilal Oswal, which is actually doing quite well. And then, of course, Force Motors, TVS Supply. Some of these names are definitely doing quite well at a time when the rest of the market is in a bit of a tizzy still.
Yeah, so that itself tells us, Anisha, that the markets are not going into a very major kind of a sell-off mode like what we saw in the month of March. Because in the month of March, literally 8 out of 10 stocks, or maybe 8.5 out of 10 stocks would probably have been going into a downward trend. But this time around, it's completely different. In fact, even if you look at, say, for example, today morning, there are a lot of many mid-caps, mid-cap names and maybe the tier to larger cap stocks, which are still trading above their March lows for themselves. So that itself tells you that the selling was concentrated towards few specific names, few specific sectors, and few of the odd larger cap themes. So I think that now is seemingly behind, and we could now be at a point when the stocks would probably see a stronger follow-through up move. So the likes of, for example, Motilal Oswal, almost 4 consecutive months of price uptrend for the stock, which we've seen from I think 600 or 800 is where the rally started off for the stock. TVS Supply Chain could be something interesting because the stock in the last I think 6-7 months or so had been showing a very major kind of a downtrend. So this kind of a strong up move, 15% plus up move for the stock today could probably negate that kind of a major downtrend and could probably be an indication that a stronger trend could be in the offing for the stock.
Okay, that's the take coming in on the market mood right now. But let me now toss it across to my colleague Ajay. He's, of course, at the BSE in conversation with the BSE Chief Regulatory Officer. Ajay, take it away.
Anisha, it's a very interesting day. A lot of action happening in the market, very sharp recovery after a brief turmoil early in the day. And this is a special day because we are celebrating BSE Day right here from this historic and legendary hall at the Bombay Stock Exchange. Earlier in the day, we had some legends from the market and corporate India along with the MD and CEO of BSE. Now I have with me Madam Kamala, who is one of the prominent faces in the world of finance, which is still seeing very gradual improvement in participation from women, but she is doing a fabulous job of the Chief Regulatory Officer here at BSE. So Kamala, thank you very much for joining us on ET Now today at BSE Day.
Thank you, Ajay, for this opportunity. Happy to associate with you in this program.
Great. I was very impressed to know that, even now on ET Now, we are always taking this, message forward and encouraging a lot of women to participate in the world of finance. But it is very gradual, though there is progress being made. But you chose to, join the world of finance, stock market, regulatory 2-3 decades earlier. So you've seen the entire journey. You've also seen the journey and evolution of Indian investor. Yes. In today's dynamic, world, how do you think the life of an investor actually changed versus last few years?
So if I just recall 3 decades ago, life of investor was very, very different. Not many people knew what stock market meant. People also thought that stock market was for very select few. It's a closed door kind of a market and things like that. Accessing market was not at all easy in those days because size mattered the most. But with all this technology coming into picture, our markets are now at the doorsteps or at fingertips of the investors, because today you can trade even using the mobile technology. So I think we have seen a great transformation in terms of making our markets accessible to retail investors. And it's a tremendous journey because in those days, people used to really scout for a broker, or if you were not part of a Mumbai as a center, then you would really find it difficult to even connect to a broker, forget about investing. Today, everything is at your doorstep. That's clearly a transformation which technology, regulators and stock exchanges together have collaborated to make it happen.
Excellent. In fact, yes, there is a transformation happening in the participant side as well in the market. Earlier, the two dominant players were the FIs and the DIs. But now we are seeing a third dominant front emerging, which is the retail investor. And we are seeing the data is on the table in terms of addition of retail investors and new guys coming in the market. But when we interact with this bunch, sometimes we get a sense that making short-term money, that is one objective. Then there is the other objective of making wealth or creating wealth. How would you, with your rich experience and of course the role which you're playing, what will your message be to both the pockets of the participants which are joining in now?
As you rightly said, Ajay, market has different constituencies. In the marketplace, there are arbitrageurs, there are speculators, there are investors. All three are important components, and nothing is superior or nothing is inferior. It is just that the mindset required for dealing with each category is different. And for speculation, the mindset that you need to have, the psychology that is needed, and the awareness about what is happening around you is quite different from an investor who once in a way, parks his money in the asset class that he is looking for. So the psychology required there is different. What is the objective or your goal for which you are entering the market becomes very, very important. And arbitrageurs, as you know, are looking at price differential between the marketplaces. So all three constituencies together make a marketplace. And as a retail investor, if you are entering, you should be clear in your approach. As an investor, what is that I am looking at? Usually what we have found in our experience is, investor at the time of entry thinks that he is entering the market for an investment and a reasonable return and for a mid-term and long-term outlook. Somewhere down the line, they get distracted and get tempted to look at day trading where they are not empowered and equipped. No, they are getting into that area. So that is where the challenges are. So I would advise all investors entering to first know what is the bucket in which they are entering and also the time horizon that they are looking at when they enter the market.
So there is Pashupati, there is Kunal, Nisha and me. I'm going to ask this question to everybody. Kunal, what was, when you started trading for the first time or when you understood about Sensex and Nifty, what was the level of the Sensex and when was it? When was it?
So I started off in 2007. I think it was the month of January. I'm not sure the level of Sensex, but the Nifty was, I think, around...
Sensex, basic day.
I think it was around 7,500, 8,000.
7,500. Chakri, what was the level when you started investing, Sensex level?
Yeah, I don't remember the number. I started in 1996. And from then to now, I don't know the number from then to now.
Naresh?
Started back in 2004, in May 2004. It was around 4,000 to 5,000 Sensex. And just when I entered 2 weeks later, we saw the Black Monday, 17 May 2004.
What about you, Nikunj? When you started tracking the markets?
2000 is when I started my professional career. Of course, I come from a business family, so the chatter of the Sensex was always there. But what I can recall in terms of tracking, I think it's from 2000 onwards, the Sensex was at about 3,500, 4,000.
Wow.
Went up to about 5,500 and then 6,500 it actually peaked in 2001. That was 14th of Feb. And then it was a straight line fall. My first day in Mumbai, when I shifted in 2003, Infosys gave a profit warning.
Oh.
And the Sensex had plunged below 4,000. So that's the way it is. Now just think about it. I mean, what is the power of compounding? The power of compounding is that if you just held on to the index, did nothing else, and you said, okay, I'm just going to keep focus on the index. What have we seen in last 20 years? We've seen assassinations. We've seen change of government. We've seen COVID. We've seen demonetization. 2008 GFC crisis. But ultimately what has triumphed is the human spirit and the ability at which humans can actually innovate. And that is how some of the great Indian investors and global investors have made money. They think in terms of decades. And that is the time advantage and the patient advantage which they have, where they let the power of compounding work for you. And I distinctly remember when I started talking about a number of 50,000 on the Sensex, it was almost like an unimaginable and a far cry. Today when I asked, Hemendra Bhai and Keki on where they think markets are headed, the sense I've come back with is 3 to 3.5 years, maximum 4 years, the index could actually double. So 1 lakh may just be a pit stop. What may look like a magical number or what was almost like a dream number. It was unfathomable at 4,000 that can the index actually become 1 lakh. The fact is that is how it works. Chakri?
Indeed, now I did a quick check, and it was about 4,000 when I entered the market in around 96. And then I remember the next 2-3 years, we went through that 1998 crisis, global slowdown, and the market actually had crashed. And it took quite some time to recover. But then, as you rightly said, that look where it is today. So it's compounded by probably 20 times from that time period.
Yeah, good amount of compounding is what we have seen, and the big news is it's not done yet. We are definitely not out of that bull run. If you look at the stock markets right now and the kind of run we have seen today itself, that will tell you that we are still in midst of that big bull run. In fact, the other big event that we are watching out for is, of course, the elections. We did speak with a whole host of experts as to how you should probably look at the volatility around the elections. Listen in to the bites coming in from market veterans on elections and the importance for the Indian markets.
I think that the next major event to look out for is the budget in July. I think, look, the election is also very important, particularly from a foreign investor's viewpoint. I think the domestic investor base has already concluded and acted upon that conclusion regarding elections. But I think amongst foreign investors, there's still a large segment which wants to see the event behind us. They're prepared or have been preparing to act, but they want to see the event behind us before taking action.
Maybe some amount of, disappointment or euphoria around that, because normally it happens, right? Elections are one event that happens once in 5 years, and there's a lot of rumors flying around, a lot of people giving out their thoughts. So it's going to be fairly choppy around that time also. However, don't forget that immediately after the elections, there's going to be the central budget, which is going to be presented, I think, sometime in June end or July beginning. And that will actually, as Sabir has rightly pointed out, I think we believe that is going to set the trend for the next couple of quarters.
It's turning out to be a decent week, given that so much of news flow was thrown at markets this week. You had the comments from Fed, you had local numbers to deal with, market reacted to Infosys numbers, and then if that was not enough in the morning, all the confusion and chaos around geopolitical crisis. So on a week where a lot of news has come, I think we've done rather well for them ourselves. We went below key levels, at least in the morning trade, we popped right back up. So for me, I think this week's price action, Kunal, is more than just satisfactory. It is actually promising. Am I right in saying that?
Well, absolutely, yes, Nikunj. And I think, we started off the week on a much more positive note, but we are ending the week on a much more, believable hope that, the markets are not going into a similar kind of a tailspin which we saw in the month of March. Because in the month of March, it was very difficult to try and fathom where the indices or whether stocks would probably try and bottom out. But this time around, the sell-off has been completely different, and it's been affecting just about few odd sectors, few odd indices largely, and it's not affected the major or the entire market as such, like what we saw in the month of March. And I think that's what the belief and the sentiment on the positive side could probably be the takeaway for this week.
Okay, point taken. In the meantime, it's TCS which is the biggest drag on the index right now with a cut of over 1%. It's a larger cut than actually Infosys at this point of time, and LNT2 is dragging its feet a bit. But the other big event to watch out for, Chakri, apart from the barrage of news flow that we had to deal with this week, is of course that much awaited Musk visit in the coming week, where Elon Musk will come and perhaps announce a whole host of investment for the Indian EV ecosystem as well. What do you make of that, and which are the stocks which probably one should keep on the radar with respect to this entire EV transition?
A lot has been spoken about his visit, Elon Musk's visit, and clearly Elon Musk is coming in at a price point. Tesla is coming in at a price point which is about the 35 lakh mark, so it doesn't really impact the Marutis of the world. So therefore, the benefit for Indian listed auto companies of any big market share is it doesn't make an impact at all. What is positive is for the auto ancillaries. The bearing companies will clearly benefit, depending, because they're usually the more easier parts to outsource. Companies like Timken, SKF, these companies, they would not only work with export companies, but they're also very strong locally, and they'll also benefit from other industrial activity picking around them. Second is companies like Mindep and all the wiring companies, they'll also benefit. So the list is actually building up. So I think hopefully if there is a real announcement, then you can see further upgrades in all these companies.
Chakri, what to your mind is the best player on EV?
In EV, I think, all these, for example, these auto ancillary companies, because whether the Indian EV market share of their revenue base, whether it takes off or not, if you take a company like Timken or even SKF, they have a fairly good existing export order book. Now, the hope and expectation is, their domestic bit of the EV bit will also start taking off. Now, so it doesn't matter as long as a company has both avenues, export and domestic. So this companies fit that bill. Second is, again, it's clear that it's not going to be EVs replacing ICF at least for the next many, many years. So, as long as they have a strong market flow, market products for both the segments, again, these two companies and such other companies, I think that's the approach, which is not clearly bet on things which don't make products or make products only for EV, but also both.
Bombay Stock Exchange also. Ajay, of course, is at the Bombay Stock Exchange with the COO of Bombay Stock Exchange. By the way, Bombay Stock Exchange or BSE, the stock has done rather well for itself. That's Nifty for you, 135. The Sensex for you. The stock of Bombay Stock Exchange, which is BSE, is about a 10x from COVID low. Chakri, there's a theory that winner takes it all. And BSE had lost market share, but look at the comeback. Hard to find a stock which has given similar kind of returns in the last 3 years. It's a 10x.
Indeed, and in fact, it probably went up about 4x or 5x just in the last less than a year or so. And it has been one because of all its past. It had lost market share, etc. The stock was derated. Multiples had come down quite dramatically. Companies' fortunes turned around. Some amount of market share, and plus the margins, more importantly, in a business which is highly commoditized, is improving. Range of products, etc., are improving. So I think it's done a phenomenal run, especially in the last 1 year. But I still think there's a good amount of upside in BSE, the stock.
Side is probably available on BSE. Just wanted to highlight those updates coming in on Axis Bank because it's a very smart recovery that we have seen. Remember, we started off the day with the news flow coming in that the company has informed exchanges that they're looking to probably mull a fundraise as well via various options, including a QIP. At that point of time, that stock had suddenly slipped 2.5% because the worry was about equity dilution. And now Nomura has come out with a note saying that the company, or rather the bank, will be evaluating potential equity capital, and that, if does happen, would come as a surprise. For every 100 basis point of extra CET1 ratio, if the bank needs, it will have to raise around 9,900 crore rupees, and an equity supply risk could be a near-term overhang for the share performance. But for now, Axis Bank has materially come off the highest point of the trading session. Before I hand it back to Ajay at the BSE, let me quickly take the BTSC trades from our chartist. Kunal, quickly your BTSC picks.
So 2 buy calls. The first one is upon Bajaj Finance. Targets of 72.20 and stop loss at 6,900. And Escorts is something which is looking attractive as a fresh breakout. 3,205 as a target. Stop loss at 31.80.
Duresh, your picks?
First would be a buy on M&M with a stop loss at 2,040, target price of 21.20. Second would be a buy on IDFC Limited with a stop loss at 121 and target price of 127.
Okay, time now to hand it across to Ajay for the closing bell.
Well, that's correct, Anisha. Right here at the closing bell, just minutes, just seconds away from the market closing. It was a very eventful day as far as the markets go, and of course for ET now because we celebrated BSE Day. So let's do the market closing with Kamala Madam. Okay, let's start the bell. Just a few seconds coming in. Your watch is already 30, right? Okay, just how many seconds? Okay, let's just... Anisha, back to the studio.
Powered by BSE. Invest right to future bright.
Co-powered by Bank of Maharashtra. Ek Parivar, Ek Bank.
Sturtis Healthcare Private Limited deals in quality medicine. Sturtis, quality that you can trust.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy insuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal. Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello, very warm welcome. You're watching Your Trades. That's a weekly wrap on ET Now. This is Priyanka Uppal along with me, Snehi Shah. Snehi, what a week. But then we should say, all goes what ends well, looks well. The whole week, the kind of moves that we saw on index and on Nifty and Sensex, it could have been the longest losing streak if we would have closed in red today. But then what a technical bounce which came. A good pullback, or in fact, that's what we saw, smart recovery led by banks and finance counters. And clearly, we saw, of course, there were sectoral losses which could not make up in this pullback also, like IT space. But then clearly, we did recovered losses in banking and finance sector. This whole week, we saw a lot of action on the economic side also. We saw CPI cooling off. We saw IIP coming at the fastest rate in 4 weeks. In fact, IMF also raised the India's GDP forecast. And of course, let's not forget the first phase of the elections, union election also kicked off from today. But then the whole week, what all did we capture? Let's just quickly take a note of it. The major of the moves we saw, of course, we started the earnings and the large cap earnings came this week. Infosys disappointing the street, but Judge Auto posted a good set of numbers, and now we are eyeing Reliance numbers early next week, and of course HDFC Bank on the on the weekend. But then a lot of actions from the earnings, of course, a couple of positive brokerage notes on sectors. Telecom sector saw a lot of brokerage notes this week, and in fact a lot of positive notes which came on wire and cable, and big upgrades we saw. And standout gainers were clearly auto ancillary. Battery counters gained this whole week. So a lot of action this week, in fact, Sneha.
Well, absolutely. And even when you look at stocks that were buzzers in this entire week's trade, even from the non-earnings pack, just simply on the back of brokerage notes or their quarter four updates individually, who had names like Angel One, on the back of earnings, that was a beat coming in, and HDFC Life steady numbers. Another pack that was doing very well in this week's trade was the metals pack. That sector did very well as well. Ended the week in the red, but nonetheless with losses lesser than its peers when it comes to other sectors. Then you had Manappuram and Muthoot Finance in focus on the back of their fundraising plans individually. Nestle was another stock that we were keeping a close eye on the back of reports that it mixes extra sugar in baby foods that it sells in developing countries, but not that of developed countries. We have developments on that story too. We'll be bringing you that forward as well. The Indian agencies have written to the Food Council as well. So, well, that's the latest update coming in over there. Mastech was yet another stock that did pretty well, and TARC also locked in upper circuit yesterday. On Thursday's trading session, and stellar moves coming there in terms of their quarter 4 and FY24 operational updates as well. Another stock in focus was Vodafone, because, well, that FPO opened this week as well. Will go on and continue in the next week. 18,000 crore FPO. We'll be taking a look at what the subscription looks like for that FPO. Remember, they've already raised 5,400 crores from anchor investors, so we'll be keeping a close eye on that as well. So, well, largely this is what the entire week looked like. Obviously, two major headlines over the course of the week were elections kicking off and the geopolitical tensions that we've been seeing over the course of the week. Spike in crude coming in, spike in gold coming in. On the flip side, equities have been under pressure in India as well as globally. Let's make sense of the week that went by and the week that we're looking forward to coming ahead. And I'm now being joined on the show by our experts for the day, Rajesh Palvia, Head Technical and Derivative Research at Axis Securities, and Ajay Bagga also joining us, Chairman of Elements Platform and Market Expert. Mr. Bagga, I'm going to come to you first today and help us make sense of this geopolitical pressure that we're seeing. You joined us earlier and you spoke about, your stance on what one should do when the market is behaving with so much volatility we're seeing all across everywhere. Even commodities are unpredictable as of now. What's your stance here? What should our viewers do going ahead into next week? What are you penciling in? What kind of moves are you seeing on benchmarks and otherwise moving ahead?
Yeah, it's a tough time when geopolitical sentiment overtakes the markets. And as we saw early today, when Asia opened, the markets were really selling off. Brent was up, gold was up, US Treasury yields were down. So safe haven buying was happening. Then during the day, it came out that the damage was very contained and no nuclear facility was touched. The IAEA also came out with its own assessment on the ground that no Iranian nuclear facility was touched. No official word has still come out from Israel or the US, while the Iranians have dismissed the explosion as a minor one, and they have just said toy drones and stuff like that. So markets heaved a sigh of relief, and we saw very strong short covering coming in our markets. But the message remains that the geopolitical risks remain elevated. It is in a place of the earth. See, if it was on some other continent, you would not be that impacted because the oil supply chains are not moving through that. Now what is happening is that instead of strategic patience, where Iran would attack Israel through its proxies in a very long game, very patient game, it's become strategic deterrence, where both of them are now outvying each other in terms of doing a demonstration effect that this is what I can do to you. And what Israel has today achieved is that Iran sent 300 missiles and drones. We shot down 99%. We sent in one which hit its target. We didn't target the nuclear areas, but what we wanted to achieve, we achieved. And the antiquated air defense of Iran cannot stand in front of Israel. I think that message they have sent. It was symbolic also because it's the Ayatollah's birthday today, 85th birthday of the supreme religious head. A lot of symbolism, a lot of diplomatic maneuvers happening in the background. Netanyahu did not want to upset Biden beyond an price of elasticity. And, where both Europe and US have been telling Israel not to escalate this further. So the supply chain issue remains. Two sworn enemies have now attacked each other directly instead of through proxies. That becomes a geopolitical risk. Markets will stay on edge. It is difficult to price in something like this. We saw the pricing in the morning and pricing in the evening. Big difference between that. That just shows you it's very difficult to price an event like this.
All right, it's very difficult to approach, to understand how should one approach to equity markets right now. But thanks very much that you highlighted so many political diplomacy angle also. Stay with us, Mr. Bagga, but we do have Rajesh Palvia also to talk about technical and derivative side. Now, Rajesh, if you talk about the levels, what a smart recovery we saw. And if you talk about levels, whenever there's a FI's long and short ratio in a ratio of 32 to 68 band, and generally 68% band, the short side is also considered as a big support, and hence a short covering rally was on the cards, and which we saw also. But then what is it? Is it just a technical bounce? Are we out of the woods, or weak hands have already gone, come out of because of the pre-election rally? How should we approach the markets right now?
So good afternoon, Priyanka. Yeah, market is volatile due to this geopolitical, event is going on. So we have seen, smart recovery from today's low. Almost Nifty approach to its 100-day moving average trajectory, and Bank Nifty also approach to its 100-day moving average trajectory, and both indices have shown, recovery from those levels. In the second half of today's session, yes, there was some short covering action already triggered, as we are comfortably now trading about to 22,100. So till 22,100 is intact on Nifty spot, there could be some more upward momentum we could see towards 21,300 to 21,400 as we are approaching to this April series expiry. So I think for April series expiry, the major call concentration is still placed at 22,400, 22,300 strike. So I think that is the resistance area for the Nifty for this pullback. On the downside, yes, in this pullback, there is an aggressive put writing has been witnessed for 22,000 strike. So that may act as a good support area for next couple of trading session or towards April series expiry. So I think 22,000 to 22,300 could be the possible range where we can see market to trade for some more couple of trading session. And for Bank Nifty, on the lower side, 47,000 has attracted major put concentration. So that may act as a good support area for a near-term perspective. Till 47,000 is intact, there is a high possibility that Bank Nifty may also move further higher from current level, and possible upside range for Bank Nifty we could see towards 47,800 to 48,000. A major supply zone is placed at 48,000 for the Bank Nifty.
All right, well, Rajesh, thanks so much for sharing those levels with us. Mr. Bagga, let me come back to you. Let's get a little sector specific and talk about earnings that are lined up for next week. We have some major banking and financial names that will be coming out with numbers, the likes of HDFC Bank, Axis Bank, Hindustan Bank. You have the Bajaj twins also coming out with their numbers next week, Bajaj Finance and FinServ. So what are you penciling in when it comes to this entire financial space, and how must one play this entire financial basket now on the back of results and otherwise moving ahead?
Yeah, it is a sector which has underperformed, and the issue remains that credit has expanded well, NPAs are well in control, so the top line is growing very well, but the NIMs are compressing because they've had to increase the cost of funding to increase their deposit base and bring in more deposits, given that credit is ahead of the deposit accrual. So that remains an issue. So expect lower NIMs, but better results in terms of growth in lending volumes and NPAs being contained. That's the factor that the market is going with. Low expectations, so that's good. Most of the sell-off is done with, and from here on, we could see a rally on the banking and the financial sector, and especially with the July budget. I think that will be a good catalyst. So around June, I'm expecting that you could see banks starting to rally for the year quite strongly. So overall, the sector looks quite attractive. Results could be muted given the increase in the cost of funding, but the top lines are growing with the growth in the credit.
Just to thread to this question, only what Snehi asked you, Mr. Bagga, understanding more on the front of earnings. Since you spoke about banks, but then how should we approach the other sectors? The kind of economic indicators we saw in this month for the March, IIP numbers, the fastest rate in 4 months. Should we look at good set of numbers from domestic facing sectors also? Understanding Reliance is also about to report, will report numbers early coming week. What are the other sectors that you are eyeing on? And we must want to compliment you. The view you had before TCS numbers on IT, the contraband, must congratulate you on that also.
Oh, thank you. Thanks very much. I think the capital goods will continue to do well. Cement is facing a pricing issue, and a lot of new capacity continuously coming in. But the infrastructure, capital goods, heavy engineering, those sectors should do well, and the domestic cyclicals. So, this is not the time for the global cyclicals. Those are still, meandering, but domestic cyclicals should continue to do well. FMCG will probably take off more as the monsoon sets in, and with the June IMD estimate, I think that will give a good leg to FMCG, because rural demand will be very critical for that. So I think FMCG one more quarter, and then we could see it getting some traction.
All right, well, thanks so much for your view, Mr. Bagga, coming in over there. Gentlemen, stay on with us. We'll continue this discussion going ahead on the other side of this break. But for now, we'll slip into a very short break on this edition of Your Trades.
In association with State Bank of India, the banker to every Indian.
In the jungle of investments, there are companies which move slow and go nowhere. Only a few companies become rare, dominant, unchallenged, and long-lasting. Presenting Trust MF Flexi Cap Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
पापा जी, कैमरा उल्टा है आपका।
शीर्षासन कहते हैं इसे।
इस टाइम
पापा स्ट्रेस कम कर रहे हैं, घर नहीं बिक रहा ना।
इसे बेच के नए घर का पेमेंट करना था, लेकिन ढंग के बाहर से नहीं मिल रहे।
पापा जी, घर बेचना है तो मैजिक ब्रिक्स पे आइए। यहाँ पे हजारों सेलर्स रोज मिलते हैं लाखों बायर्स से,
ताकि प्रॉपर्टी जल्दी बिके और बेटर प्राइस मिले।
वाह!
अब आप सीधे हो जाइए।
कुछ लोगों के लिए मैं टेढ़ा ही रहूंगा।
Over the past decade, GCCs or Global Capability Centers have transformed from back office entities to essential value-adding hubs driving critical global functions. ET Now Global Capability Centers Summit 2024's third edition, co-powered by Embassy REIT, honored the GCCs that have surmounted obstacles and progressed through foresight, determination, courage and insight. The summit served as a dynamic platform for cross-sector engagement, knowledge analysis and shared learning, fostering proactive collaboration to accelerate progress and achieve scalable outcomes. Watch the episode at these times only on ET Now.
Hi there, welcome back. You're still watching Your Trades on ET Now. Thanks so much for staying tuned. Let's keep the discussion going then with our experts. And Rajesh, now I'm going to come to you. Let's talk about a little bit of, action that we've been seeing on the political front. Now, India has headed to polls. We've kickstarted the first phase of elections as well. Tell us, what impact are you penciling in of this election on the markets going ahead? Do you somewhere believe that this is going to be some sort of a non-event and the outcome is already largely penciled in by the street and that's already factored in, or are you expecting some kind of volatility or some spike up or spike down coming in on the back of these elections?
So if we analyze from the election outcome perspective, till now market is quite confident about the outcome of this election, and that's why we are not seeing any kind of spike in terms of VIX. VIX are still trading in very comfort zone. That clearly shows there is a certainty towards this outcome of this election. But yes, definitely, maybe we can see some volatility in the market, but majorly it will be from the global front or from the geopolitical front that could give some volatility in the market ahead of this outcome of election. But going forward, we believe that once this outcome comes in coming months, again market may continue its upward trajectory, as broader market is clearly showing that it's very well placed above their breakout levels, and one should adopt only the buy on dips strategy. If you get any kind of volatility, it should be used as a buying opportunity in the market, as broader market is holding the ground on the bullish front, and we believe that this momentum can continue further in the coming months also.
Okay. Mr. Bagga, one more question to you. In fact, the kind of wave of risk aversion which we have seen over globally over the markets, and even on other indicators like dollar yield surged, all safe haven increased, and in fact equities were the ones which were getting sold on to. Currencies also reacted. Now, is crude showing a sign of fatigue? How should one approach to dollar index or crude or gold from here?
Yeah, overall demand is still below the supply, but what is the issue? The issue is the supply chain running through the Persian Gulf, and especially the Strait of Hormuz, which Iran can control very easily.
All right, I believe we have snapped that connection. We'll bring you Mr. Bagga right back. And I believe he's back with us. Mr. Bagga, continue with your view. Help us understand how to approach these asset classes.
It's a bit weak today. If on a normal basis, we would be quite okay with oil. But if you look at how much the OPEC Plus is not producing per day, which is your excess capacity, that is 2.2 million barrels. Another 17 million barrels are going through the Strait of Hormuz on a daily basis. So that is the risk, that risk premium which is embedded in oil. Otherwise, you wouldn't have seen such a sharp spike in oil. Today, IMF also mentioned that the Saudi budget balances at $100. So the producers would definitely like to constrain the supply. But overall, the shale production helps to balance out. And we saw last week, the oil correction happened basically because the US commercial crude inventories went up much more than what was expected. So the shale producers are the balancing factor, which helps out keeping the oil markets well supplied. But the issue is supply chains with Iran sitting on top of that supply chain.
All right, Mr. Bagga, thanks for that view coming in. Very helpful views coming in on that front as well. Rajesh, let me come back to you. And I believe you have picked out a few stocks to help overcome or help navigate this volatility that we are seeing. So help our viewers understand where you're seeing value amid a market like this.
Yeah, definitely. So, three stock ideas which we are focusing at this moment for coming week. First one is from automobile space, that is Escort. If we analyze the weekly time frame, stock managed to give breakout of almost 10-week consolidation range. The way stock is holding the ground above its near-term moving averages, the short covering action was there in today's session also. So we expect that escorts can continue furthermore upside in the coming week, and possible target we could see towards 3200 for near-term trading perspective. One can buy escort with stop loss of 3045. The second stock that we like is Raymond. Stock managed to give breakout of its multiple supply zone. Stock is comfortably holding above all its near-term, short-term moving average. The way stock has shown, breakout on the daily time frame with the volume action, that clearly shows this stock can exhibit good amount of rally in coming days. Possible upside target we could see towards 2080 to 2100. One can buy with stop loss of 1970. And the third stock is Trent. Stock managed to give breakout of last 8-week consolidation, and the way stock is holding the ground at almost its all-time high trajectory, we expect Trent may exhibit a good amount of rally towards the expiry for this month, and I think we can see target towards 4300 for Trent. One can buy this stock with stop loss of 4100.
Those are the topics coming in from Rajesh. Thanks very much, Rajesh and Mr. Bagga, for giving your time and sharing these views with our viewers. Thanks very much. Time now for some interesting opinion coming in from market big voice Sameer Arora. Sounding optimistic on the financial sector, he explains the rationale behind his bullish stance. Let's hear him out.
The next mutual fund that is being considered in India that we might do will actually be related to financial sector, because we think that this sector has, in a big picture sense, done very well all our life, which means more or less all the life of the market since 90s. And it has not done well, at least in aggregate, for the last 2-3 years, while the numbers have been good. And it is where there is a lot of breadth of choices, from mutual funds to brokerage to wealth management companies to banks to private banks to state-owned banks to whatever, credit card companies. It covers a large part of the market, and it has somewhat, not a lot, but somewhat out of favor. And so we think that is a worthy thing to do as a fund. So that means we are very bullish on it as a complete theme.
All right, that's the word coming in from market expert Sameer Arora. But let's keep it with interesting opinions coming in. Let's hear out views from DSP Mutual Fund's Vineet Sambre. He believes that the near-term outlook on Indian equities looks challenging. Let's understand why he says so. Listen in.
The long-term outlook for us remains positive, and generally as fund managers we tend to remain biased towards equity, so I think that is what drives our long-term view. But I think the near term clearly is looking a bit more challenging, and let me just lay out few of our thought process how we are thinking about the near term. So I think clearly we have come out with a very strong growth phase over the last 2 years or 3 years in terms of the earnings momentum, and we saw that this earnings were really driven by, in the first phase was top line driven post the pandemic. And then in the second phase, the margins expansion actually story worked in favor of driving the earnings. But what we are seeing now is, the top line seems to be moderating across the board, across most categories, except let's say the industrials, engineering, some of those tend to do well. But excluding that, we are seeing that the top line is moderating, and now most of the earnings benefit which came because of the commodity pulling off, those I think are also going to get challenged over the next 1 or 2 quarters.
All right, that's all in this weekly edition of Your Trades. The whole week we saw opportunities for both bears and bulls, but then let's see how geopolitical developments shape up over the weekend. Thanks very much for watching.
We cannot take democracy for granted. Don't just sit around and complain. Vote. Vote to change India for better, not to destroy it. Vote for an India which brings hope, not fear. Vote for an India which answers people's needs and listens. Vote for an India which tackles problems together. Vote for a candidate, not the party. Vote for a social, progressive and inclusive India. Your vote matters. ET Now.
So folks, we are very excited every time, at least personally for me and for ET Now, when we come to Bombay Stock Exchange, there is a history, there is nostalgia, there is lots to learn, there is lot to understand and a lot to implement. And the whole evolution of Indian stock market and Bombay Stock Exchange has been nothing short of magical. Humble beginnings under a banyan tree, now the fastest stock exchange in India. The stock of BSE under the current leadership has been a multi-bagger. Things are really moving in the right direction. But when it comes to BSE, I would take the clock back before I rewind it forward. And when Hemendra Bhai is there, we really want to take the clock really back with him. So what's your association as a family with Bombay Stock Exchange? हमने कहानियां सुनी है, आज कथाकार से कहानी सुनते हैं.
Well, my great grandfather, I should give credit that he was started somewhere in 1866, and then he was one of the founder member and director and first vice president of the Bombay Stock Exchange. The stock exchange started somewhere in 75, and I see the certificate in 78. But anyway, the question is, there is a history for us. My grandfather, my great-grandfather, my grandfather, my father, and myself, we all were president of the stock exchange. So I think it's a place where I think of how our own family wealth and prosperity was there because of Bombay Stock Exchange. So those were the days when I joined in 1969. 69 year when I joined, there was a bank nationalization. There was forward trading got banned. And in spite of that, I was lucky to make every year more money than before. So that was a situation when also the emergency that decade came. There was a war, there was restrictions on various kind of trading. So anyway, the stock exchange has gone from what I used to see and today as multifold expansion on shareholders. I think that is the biggest plus point for the capital market formation. And that's in short, which I thought I'll just tell you. Stock exchange is, whether it is Bombay Stock Exchange or National Stock Exchange, it definitely gives a lot of interest to the world. I recollect in 1984, I started talking about getting foreign investors. And 2 years it took me to get first approval to create a country fund. With Unit Trust of India, we had kept as that DSP and Merrill Lynch joined hands to raise money, and 2 years to explain to government and not to bring them down, but to explain what is PE and why equity and not fixed income only. So I think those are the nostalgic days when we had to work hard, to get foreign investor approval. 1991 was, of course, a year where Manmohan Singh liberalized from various restrictions on the size of the enterprise, even they have to take approval. So from there onwards, we have seen India moving forward fast on industrialization. And 92, 93, 92, I think, they allowed the foreign investors to come and invest directly through over here. And we have seen raising of GDR, ADR in USA. So the picture change and the size of the organization in India also changed. I remember taking Mr. Kamath to raising money for ICICI. So, and various companies from TCS onwards to Birla companies and Reliance. So I'm glad that I'm today here in Stock Exchange, which has made a difference to Indian investors in India and to some extent globally.
Mr. Kothari, you've seen the twist and the turns. You spoke about the emergency era, you talk about nationalization of the banks, then you had the South Asian crisis, TMT boom and bust, 2008 crisis. But throughout your time, Mr. Kothari, you've kept the faith in the Indian stock markets. At times of turbulence and uncertainty, can you tell our viewers that how have you kept yourself calm and why have you kept yourself calm and why have you not panicked?
Well, maybe I was over-conservative. That could be the reason. We never did any though being a stockbroker, we never did any forward trading. And so we did not take a risk. We focused on only pure broking, and then later on in 75, started an investment banking company called DSP Financial Services. And I was a dreamer and started looking for foreign companies, how can they come to India? We raised for many companies. We had tied up in 84 with a German bank, 83 German bank, 84 Merrill Lynch, Swiss Bank Corporation today, which is UBS, French Exim Bank, BFCE those days, and IBJ Japanese Bank. So I had a different, would say, experience. And I was lucky to be there at the right time. And I was very lucky to get right people in the organization. So that was the reason for, to some extent, you can say, my success and our company's success. So I'm glad to have all these years of good fortune with me.
Mr. Misri, I'll have to run out of superlatives to describe the journey of HDFC Limited, now HDFC Bank. You'll have to literally count the zeros to understand the kind of wealth it has created. What, to your mind, really have been the three differentiated factors which has really created a world-class institute like HDFC Limited, now HDFC Bank, which has been a benchmark in itself?
So Nikunj, when I joined HDFC in 1981, October 1981, our share total paid up capital was 10 crores.
That's it.
10 crores. And our market capitalization was about 8.5 crores.
8.5 crores was the market cap.
It was trading below market, below par. That was 1981 October. At the time of the merger in 2022, 41 odd years later, our market capitalization was over 60 billion with a B dollars. That was the kind of wealth that Touchwood we created. And besides HDFC itself, we had a number of companies. We had the bank, we had the life insurance, general insurance, asset management, HDFC Credila, venture capital, real estate, all of that. So if you take the total market capitalization of all the listed companies in the group at the time of the merger, it was about 175 billion US dollars.
Wow.
That was the kind of wealth we created. If you ask me what was it that contributed to that, I would say number one, truly the highest standards of governance. We were willing to compromise on people not being very efficient, not being very great in their job, but even the slightest even the tiniest question on governance would never ever be tolerated. So that I would say would be one principle. Second principle is we kept the headcount very low, very small. We didn't have too many people. For an asset base as big as ours, we had just about 4,500 employees in HDFC Limited at the time of the merger. We invested a lot in technology and systems, and we kept an atmosphere in the company which was free of politics. If you ask me honestly, that was I consider that as one of the most important contributors to our growth, that everyone contributed. And the third I would say is that we had very, very clear goals that we set for ourselves. You know, I used to meet international investors from the 90s after, as Hemendra Bhai said, foreign investors, started coming into India in the mid-90s. And I used to continuously meet these investors. And in the 90s, late 90s, we had no competition. And then suddenly the banks started getting in, State Bank came in, ICICI came in, and some of these banks started sending, people over to customers' houses to help them fill up forms and stuff like that. We never had all that. So our investors used to come and say, okay, you are losing market share. Obviously, if you have 99% market share and someone comes in, you will lose some market share. So we continuously kept telling our investors that we have 4 very, very clear objectives that we set for ourselves. And these objectives did not revolve only on growth. Growth, yes, but growth in a profitable manner, not growth for the sake of growth. So there was clarity of thought in what we wanted to do. And we kept saying that in a financial services business, market share is the most irrelevant thing. Because when you are in the business of lending, you can get all the market share you want. You sacrifice your asset quality, you sacrifice your lending norms, you sacrifice your margins, you can get all the growth you want. But that is not going to contribute to long-term profitability. So our objective was, number 1, growth, but profitable growth. Number 2, increase our return on equity by 100 basis points every single year, which we did from 1994 till 2009. If you see, every single year return on equity went up by 100 basis points. Third was every single year to lower the cost-income ratio. Our target at that time was to bring it down to single digit, and finally we brought it down at the lowest it had come down to about 8.1% or so. And the fourth was to take no asset liability mismatch, run a very simple business, don't take any unnecessary risks. Growth opportunities were always there. India was growing and India continued to grow. And I truly believe that even today the growth opportunity for financial services in India is absolutely phenomenal.
I just want to take that number again for the benefit of our viewers. What was the initial share capital of HDFC Limited?
Paid up capital was 10 crores. I mean, at the time I joined in 1981. Paid up capital, and HDFC was 2 years old at that time. 10 crores, and the market capitalization on the day I joined was 8 crore 50 lakhs, 8 crore 50 lakhs, roughly.
So it was below par.
It was below par. Profits were less than a crore.
And when the merger happened, the combined entity, all the group companies put together,
170 billion US dollars. 170 billion.
I'll run out of that typical counting style even to understand the multiplication it has had.
In association with Volta Smart Air AC, शोर कम, काम ज़्यादा. Sturris Healthcare Private Limited deals in quality medicine. Sturris, quality that you can trust. In association with State Bank of India, the banker to every Indian.
Indian markets are going to be getting a boost of sorts.
Hi, good morning. You're watching the market right here on ET now.
Indian markets are at an all-time high. You would really pinch yourself to say, isn't this all factors aligned wonderfully well for us?
Nifty is now up a staggering 2,000 points. That impacts the market like no other. Stocks on the editor's radar. The strategy is going to be for the day.
Will just start coming up on your screen. There's a lot of green on the screen today.
चलेंगे अपने ताव में गली हो बगल की या मीलों दूर के गांव में बेधड़क बेझिझक चलेंगे अपने ताव में
बड़ा दोस्त हो राहों में तो चलो अपने ताव में।
Amid the noise and clutter, a voice that stands for truth. Decoding complex issues, simplifying the news. From health and education to security and infrastructure, your issues are our priority. I'm Shreya Upadhyay. Watch me on Mirror Now. You first.
Mr. Ramamurthy, there is BSE of the past, there is BSE of the present, and then BSE of the future. What should we start with?
Whatever your viewers would love to hear.
The past and the future is what viewers would like to understand. And the present for BSE under your leadership has been nothing short of incredible. I mean, BSE itself has become a multi-bagger stock now. From the COVID low of about sub 300 rupees, it is now nearing 3,000 rupees. A lot of attribution is going to your leadership, that you've changed the things. You've really got the motions into play for BSE. What is that one incremental change which you've done at BSE that the energy levels are back? Excitement is back. Shareholders are happy.
Okay, so you might have seen the Mahabharat serial, which always used to start with My Samay Hoon. So if somebody were to make a serial, My BSE Home, I think it will cover all these great things that have happened. And you will see a lot of lessons to be learned, lot of principles to be done, lot of do's and lot of don'ts. When I joined BSE probably around 15 months back, clearly there was a lot of legacy as you started with, a lot of nostalgia, a lot of history. But I came here to make the future, to whatever extent I can, in the limited time that I have. Two principles which takes you through ages have been nicely narrated by the two great doyens, with whom I have today the pleasure and the greatness of sharing the same dais, which I am very honored and humbled about. One, both of them talked about corporate governance, and two, they talked about risk-taking within the limits, not over risk-taking. The third thing, which I thought is very important for me to change things, was listen to the voice of customers. People like me come and go. People like this history have been there for a long time. There are a lot of participants in the market who have been there for a very, very long time. You just go and listen to them and understand what they want you to do for the betterment of market. And it works. Voice of customer works. That's the only thing which I think I'm trying to do, because of which today BSE is starting to grow in a good way.
Mr. Mistry alluded to a very important corporate number, market share. And BSE was always compared with the other exchange when it comes to market share. They were losing their relevance, if I may use the word, but they're getting their market share back. They're getting their profit back. Which is that wheel you were able to turn that everything is moving in the right direction, both in terms of profit, market share, and also the future business?
So if you look at it, exchange is a high fixed cost game. So the fixed cost to some extent was already put in place in terms of various things like technology, people, all were in place. So there have to be users to this. When users come in and they start using this high fixed cost model, then it starts giving you revenue. For people to come, there should be something as a USP for you to offer, because of which they can come. So for that you have to listen to them to find out what they want. The way the Indian markets have grown over a period of time, derivatives have started playing a very important role in attracting volume, not in derivatives alone, in all the other segments around it. So one of the very reasons for BSE losing market share was its absence totally in derivatives. When it is not in derivatives, many participants don't come here to do derivatives. Post interoperability, if they are going to some exchange for doing something, they would like to continue with the same exchange for everything there, instead of putting another set of expenditure and infrastructure at their end to connect to both the exchanges and get any benefit. So if you are able to attack the derivatives piece and bring something which makes sense for the market, when the market participants come, they put their infrastructure, and once they have put, they would like to milk it as much as they could, then they will start using my other segments. So that's how the Sensex contract and BankX contract were born, and with that, more and more people started coming in, and when more and more people started coming in, they have started looking at cash market as well. So the volumes are growing there. It's not that we have reached. There is a long way to go. Today, the institutional presence in equities market, which is not dependent on derivatives, is still absent. When you look at domestic institutions, they generally give you a typical type of reply when you go, which needs to be attacked separately. When you go to foreign participants, they say, I don't mind trading, but I want a single contract note. I can't for a same order receive from two different exchanges two contract notes because I require a single VWAP. We are working with everybody concerned, every stakeholder in this. If such resolutions happen, then even more you will be able to see traction in cash market. Mutual fund we are doing well, we will continue to do well because we are putting a lot of energy there. Derivatives we are growing, we have to do more to grow in the right way there.
So if I can become that Samay right now, we are in 2024, but hypothetically if we are celebrating the BSE day 2030, अगर मैं समय हूँ तो मैं क्या बोलूँगा?
देखिए कल को किसी ने देखा नहीं है, आप कल की बात भी नहीं कर रहे. You are talking 2030, which is 5 साल down the lane. We can only dream, and it is very essential to dream. As Kothari Sahab rightly said, only dreamers achieve something. So let us dream something. We would certainly expect the market, the economy, the prosperity, all at a very different level.
Kothari Sahab, 2024 to 2030, you've seen there was a time when steel companies were the market leaders, cement became a market leader, IT became a market leader, financials became a market leader, AI is becoming a market leader. Where do you think the puck would move? आप मेरे से ज़्यादा जानते हैं that markets always focuses on क्या होने वाला है rather than क्या हुआ है. अब क्या होने वाला है market में?
First of all, let me just tell you, the time when I was there, the number of shareholders was less than 1 crore across India. The issues were coming 10, 15 crores. Gujarat, Narmada Valley, I'm talking 20 crores or something around there, was considered huge. How will they sell? And today we are talking about thousands of crores.
Vodafone 20,000 crores.
20,000 crores. See, look at that. So the question which is there is things are changing very fast. And I think we are growing into kind of growth path with more investors getting educated and more proper compliance also, which is driving the market into proper way, as he has mentioned. And more people become ethical and compliance-based business. I think what we will see change. We are at the threshold of a growth. I've never been so bullish about next 10 years than ever before.
ये दोबारा बोलिए sir.
I have never been so bullish of the next 10 years than today, because we have seen already there are new industrialists, new business people, new venture capitalists. They tomorrow in next 5 to 10 years, you'd see they becoming bigger with AI coming in with technology driving India, I think I see a lot of bright future for the country. And government realizing that has kept the policies like that. And I hope in future also the policies are friendly for the business. That's all I can say.
जाने से पहले कुछ इस रिंग के बारे में कुछ खट्टी मीठी याद बताइए, कहाँ पर ट्रेडिंग होती थी, आप कहाँ पर ट्रेड करते थे, आप कहाँ पर खड़े होते थे?
पहले तो ये ट्रेडिंग इसमें खास हुआ ही नहीं.
अच्छा.
This was started.
अच्छा.
And then we went into online trading.
Okay.
So basic focus changed.
Okay.
From this place to sitting in the office and doing trading. So we started a little bit on the computers initially, my memory says that, but all the things went in fact into from the offices and the transactions started taking place. So I think things have changed. The time when I was talking, I have seen myself open cry and trying to do business, and people running there, the jobbers running to the broking firm and trying to get orders. And from there, what has happened?
So shor sharaba hota tha. There's a lot of hoo-ha in this place is what I was being told.
Yeah, absolutely. There was a lot of
And what was the trading time, sir?
Pardon?
What was the trading time?
My memory says 12 to 3 or something, 12 to 2:30 or something.
12 to 3. I was purposely asking that timing ka question on trading because the CEO will have the last word on trading timing. 12 to 3 was the original trading timing. Now it's about 9 to 3:30. Everybody is saying that 3:30 will get extended to 5:30. Some are saying 6:30, some are saying 7.
See, I think what is plus point which has happened, in my days, Security Exchange Board was just coming. It was not got aggregation, for example. So we have to give credit to SEBI for bringing a discipline in the market, also on the point of view. And also the stock exchanges, BSE, NSE, both of them. So and today brokers all over the countries, they are participating in this. And to manage that with compliance, I'm sure is a tough job for BSE, NSE and SEBI to manage that. And they've done fantastically well, I must say that.
And I always say that the reason why Indian markets are commanding this kind of an P multiple is because of the regulation, the exchanges, the speed of transaction, the ease of doing money, the openness of settlement. Who would have thought that a 15-day cycle could actually become T+1 and hopefully T+0 going forward? But I have to ask you a question every time we meet. Any update on increasing market R? You always focus on customer demand and customer needs. Is there need from a customer to extend the market R? Are you getting those feelers?
So like I always say, we are an infrastructure provider.
Okay.
So we are like the highway. The highway is open 24/7. It depends on the users. If the users want it to be opened up for the entire day, we are available.